Okay, we'll start. So in the previous lecture, we completed supply, composite supply and mixed supply, section 7 and 8, and also we have seen few circulars related to supply, and the balance portion that we are discussing now. Kindly look into page 34. In page 34, you can see third circular which is related to tenancy premium, taxability of tenancy premium. So before that, we should understand what is the taxability of rent. So this we will come across in exemptions, and even in RCM many places we will come across renting of immovable property. Basically immovable property divided into two: residential property and commercial property. Commercial property no doubt always taxable, and we don't have any exemption with respect to renting of commercial property. So how do we know whether it is a commercial property or residential property? So that will be at the time of construction we will take a approval. So in that itself we will know whether it is a residential property or commercial property. So it will be given in the question itself, you don't have to worry. So in the question, if you see commercial property, what will be your answer? Always taxable. And who will pay GST in this case? Supplier, FCM. It is not covered under RCM. So therefore immovable property renting, if it is commercial property, always taxable, whatever may be the purpose for which it is given. What is the meaning of commercial property given for residential purpose? Means stay. For example, hotel is a commercial property, and hotel is given for what purpose? Temporary stay, residential purpose. Even then it will be taxable under FCM. Now residential property. Residential property, we have two exemptions in case of residential property. Please concentrate. Exemption number 1, if the residential property is given on rent for residential purpose to an unregistered person, then it will be exempted. So what is that? It's a residential property. For what purpose it is given on rent? Residential purpose. To whom it is given on rent? Unregistered person. So then it will be exempted. Second point, second exemption, it's a residential property given on rent for residential purpose to a registered individual for his family stay. For family stay here refers to his family stay, not someone's family or some family stay, his personal family stay. Okay. For example, I am a registered person and I have taken a house on rent for not my family stay but my employee's family stay. Whether it will be coming under taxable or exempted? Taxable. So it should be for whose family stay? The person who is taking it on rent, that person's family stay. And of course this exemption is applicable only to a individual, registered individual. What if it is not an individual but a company or a firm, etc. and all? So then it will be taxable, it is not exempted. So tell me, what are the two exemptions in case of renting of residential property? Come on. Renting of residential property for residential purpose to an unregistered person. Second point, renting of residential property for residential purpose to a registered individual for family stay. Okay. So these two cases it will be exempted, all other case it will be taxable. That's what I have given. Immovable property, it's a residential property for residential purpose to an unregistered person, it is exempted. Next point, residential property for residential purpose to a registered individual. Here family stay refers to individual. Okay. It is not for any other, because others will not have family. How HUF or firm or a company will have family? So definitely the moment we are referring to family, so which means it is to an individual for a family stay. In all other cases it will be taxable here. But in one case we have RCM, renting of residential property. So for residential purpose to a registered person is covered under RCM. Sir, what about residential property for commercial purpose? Is it FCM or RCM? So there is no clarity related to this. Okay. And ICI is considering this as RCM. You understood? ICI is considering this as RCM, but there is no clarity related to this anywhere in the notification. So maybe a circular should be given in this regard. So what they are telling, once it is a residential property, it will always be coming under RCM. So this is the view which they have taken. So due to that reason, so sir, then what we need to write here, so for exam purpose, for CA exam purpose, you try to understand it as RCM, okay. But even if you write it as FCM and write the note below that, it is assumed that, so supplier is liable to pay GST under FCM, that is also correct. You understood or not? So because there is no clarity related to this, but as the marks is very important for us, so we cannot take any chance related to this for exam purpose, okay. For CA exams, okay, consider it as RCM. So residential property for residential purpose, so commercial purpose. If it is a residential property, you always consider it as RCM, okay. This is for exam purpose, okay, because they have given one MTP question. So not for CA Inter, for CA final, one MTP question they have given. In that MTP question, so they have taken it as RCM, okay. So there is a confusion right now. So whether it is FCM or RCM, as CA Institute is taking RCM, so it is better to follow that only, because tomorrow if you take FCM, because of which our mark should not be deducted for that purpose, okay. So for CA exam, you consider it as RCM. So therefore, residential property will always come under RCM wherever taxable, and residential property, two cases it is exempted. What are the two cases it is exempted? Residential purpose to unregistered person, or residential purpose to registered individual for family stay. Then this is about renting. We have not discussed about tenancy premium. Now we are going to see about tenancy premium. When tenancy premium arises, sir, I have a tenancy right. What is tenancy right means? So for 2 years or 3 years, I will only be tenant of the property. That is called as a tenancy right. So there is a lock-in arrangement between the property owner and the tenant, wherein the tenant only will stay in the property for 2 years or 3 years. This is known as tenancy right. Usually lot of properties and all, they will go for a lock-in agreement, because otherwise what will happen? House owner will come and tell, so you vacate, I will give you 2 months notice. So then we have to vacate. So we might have come into that house maybe only 3 months or 6 months. So there is a minimum lock-in that we expect, at least 2 years, 3 years, because we would have spent lot of money in coming to that house or coming to that property. We would have done some renovation to satisfy our taste, etc. So due to that reason, every tenant will expect a lock-in arrangement with the property owner. This lock-in arrangement is known as tenancy right. Now I am a tenant, I have taken a property on rent, and there is a lock-in arrangement with respect to that property, which means for next 3 years I will only be the tenant of that property. So this is known as lock-in contract. Now this particular property, whatever I have, I can transfer the tenancy right to any other tenant, or I can renounce the tenancy right to the property owner. Transfer the tenancy right means what? I can transfer it to another tenant. Renouncing means what? Leaving the title. So I can leave the title to the owner, for which I will be getting a consideration, that is known as tenancy premium. So you tell me when tenancy premium we will be getting? In case of transfer of tenancy right or renouncement of tenancy right. You can see here, tenancy premium arises in a situation where when there is a lock-in rental agreement. When there is a lock-in rental agreement means, lock-in means what? For few years we will only be the tenant of that property. Tenancy premium is amount collected by tenant for what purpose? Transfer of tenancy right or renouncement of tenancy right to the property owner. So tenancy premium received by the tenant is always taxable irrespective of the nature of the property. Is it clear? Tenancy premium received by the tenant is always taxable. So tenant will be receiving the premium na, don't see anything, always taxable. But the tenancy premium received by the property owner, so property owner will tell to the tenant, see boss, you are getting this premium only because of me, so I need a share out of this premium, so give me some share. So on this share, property owner is required to pay any GST? Yes, if the rent of that property is taxable. If the rent of that property is exempted, the share of tenancy premium received by the property owner is also exempted. Let's try to understand this with an illustration you can see in the next page. There is a property owner who is giving a lock-in agreement to a tenant A for 3 years. What is the meaning of this? For the next 3 years, tenant A only will be staying in that property. Now, what happens? Tenant A is paying a security deposit and rent. What is the taxability of the security deposit? We already saw. Refundable security deposits not treated as consideration. So, we don't have to bother about security deposit because that is refundable in nature. What about rent? Depends upon whether it is a residential property or commercial property, etc. So, taxability is based on above chart. Now, what tenant A is doing, he transfers the tenancy right to tenant B, for which tenant B will pay a tenancy premium of 80,000 rupees. What is the taxability of this 80,000 rupees? This 80 will always be taxable in the hands of tenant A. Now, what tenant A is doing, he is sharing 32,000 rupees, that is 40% of this 80,000, so to property owner. Now, what is the taxability of this 32,000? Depends. If the rent of that property is taxable, so then tenancy premium 32,000 received by property owner also taxable. If the rent of the property is exempted, then this 32,000 received by the property owner is also exempted. Are you getting this? Now, sir, if this 32,000 is taxable in the hands of property owner, won't it become double taxation? So, property owner will pay GST on 32,000, will recover the GST from tenant A, and tenant A will take ITC on that 32,000 GST, and then he will pay GST on 80,000, means tenant A will effectively pay GST only on the value addition. So, it is not a double taxation. Suppose if this 32,000 is not taxable in the hands of property owner because rent is exempted. When rent is exempted, just now we saw when rent is exempted, renting residential property, residential purpose to unregistered person, residential property, residential purpose, registered individual for family staying. In these two cases it is exempted now. So, therefore, in that case, if any tenancy premium received, that is also exempted. So, which means property owner not required to pay GST on 32,000, then only tenant A will pay GST on 80,000. In both cases, government will get GST on 80,000. In the previous case, if the property owner pay GST on 32, he will pay in turn recover it from tenant A will take ITC, and tenant A will in turn pay GST on 80. So, effectively on the value addition, what is the value addition? 80,000 minus 32,000, that is 48,000. So, tenant A will pay GST. Is it clear? Whereas, if property owner is exempted from payment of GST, on entire 80,000, who will pay GST? Tenant A only will pay GST. So, tell me what are the 4 points that you need to remember. Point number 1, when tenancy premium arises, in case of a what type of contract? Lock-in contract. And when the tenancy premium arises, what is called as tenancy premium? Amount collected for what purpose? Transfer of tenancy right or renouncement of tenancy right. What is the treatment of tenancy premium in the hands of the tenant? Always taxable. What is the treatment of tenancy premium in the hands of the property owner? If rent of the property is taxable, tenancy premium taxable. If the rent of the property is exempted, tenancy premium is also exempted. Then look into the next one. You understood now tenancy premium, mark that as very, very important. That is an important circular, tenancy premium concept. Then next one, interest. What is the treatment or taxability of interest in GST? Interest comes in two places in GST. One is interest on account of loans, advances or deposits. When you take a housing loan, when you take a vehicle loan, or when you take any personal loan, we need to pay EMIs, correct? In the EMI there will be principal as well as interest. That interest is exempted. Is it clear? Interest on loans, advances or even deposits. Deposits means when we make a fixed deposit or a term deposit, etc., we get a interest. Even that interest is also exempted. Whereas next one, interest on account of delay in receipt of consideration. What is this interest on account of delay in receipt of consideration? I raised the invoice to you. I gave a credit period for 3 months. You have not made the payment to me within 3 months. Now, I will give you an extended credit period for which I will definitely charge an interest, correct or not? So, as you are not paying on time, I will be charging an extra interest to you. That is known as interest on account of delay in receipt of consideration, but that is not exempted. That will be taxable, include in the value and taxable accordingly. So, therefore, interest divided into 2. What is that? Interest on loans, advances, deposits. What is your answer? Exempted. Interest on account of delay in receipt of consideration. What is the answer? Taxable, include in value and chargeable to GST accordingly. Okay. Now, here Delcreader agent is an agent who will be giving the credit facility to the buyer. He will first make the payment to the principal and later on he will be recovering it from the buyers. Okay. For example, I am a Delcreader agent, you are my buyer and there is a principal. Okay. Now, what happens is that usually if I am not a Delcreader agent, what I will do? I will collect the money from you, deduct my commission and then I will make the payment to the principal. This is what I do as a normal agent. But in case of a Delcreader agent, what I will do is that I will first make the payment to the principal and later on I will be recovering it from you, for which I am getting a extra benefit also here called as interest. I will be collecting extra interest also from you. Why I am collecting extra interest? Already I made the payment, but I am giving you a credit facility now, so I am collecting this interest. And of course, you would have studied in foundation that Delcreader agent will get an extra commission than the regular commission. Okay. So, that is okay, fine, but I am not talking about the commission part, I am talking about the interest which is collected by a Delcreader agent. Now, as a Delcreader agent, what I did, first principal has sent the goods to me. So, consignor sent the goods to me on consignment. Now, I have the goods, I sold the goods to you, I will make the payment to the consignor. Later on, I will collect the money from you along with interest. Now, what is the taxability of this interest? My argument is that, sir, this interest is on account of loans, advances, deposits, therefore it is exempted. So, this is my argument. What department will argue? No, this is on account of delay in receipt of consideration. As you are receiving money late, that is why you are getting this interest, therefore this interest will be taxable. So, there is a dispute here. That is where government is giving a clarity. What is the clarity that CBIC is telling in the form of a circular? If invoice is raised by the agent, if invoice is raised by agent in his name, okay. Now, for you, you are the buyer, for you, who is the supplier? Agent or consignor? Agent, because I only raise the invoice now, so I am the supplier. So, whenever I collect the interest, that is on account of delay in receipt of consideration and that interest will be taxable. Suppose if my principal consignor raised the invoice to you and I collect only the interest. Now, for you, who is the supplier? Consignor or the Delcreader agent? Consignor. So, whatever interest that is collected by the Delcreader agent will be purely for giving finance facility, that will be exempted. So, they are connecting the taxability of interest with the invoice raised by consignor or the invoice is raised by the Delcreader agent. Is it clear? Now, say this. Interest earned by Delcreader agent, invoice raised by principal. Here, who is the principal? Means consignor. Invoice raised by the consignor to the buyer. Now, whatever interest that is collected by Delcreader agent is what? For mere giving finance facility. So, that interest will be exempted. What if the invoice is raised by the Delcreader agent only? Then Delcreader agent only is the supplier. So, that interest will come under interest on account of delay in receipt of consideration and it will become taxable. Is it clear? So, tell me, what is the taxability of interest earned by Delcreader agent? What is the factor that you need to check? Who raised the invoice? If invoice raised by principal, that interest collected by Delcreader agent is exempted. Very good. If invoice raised by the Delcreader agent, so taxable. The interest collected by Delcreader agent will be taxable. Then next one, taxability of hire purchase transaction. In hire purchase, there are two varieties, hire purchase transaction and hire purchase financing. Sir, what will happen between these two? In hire purchase transaction, there are only two parties. For example, I am having a vehicle and I am the vehicle dealer. You are asking me to give the finance on the vehicle. So, you take the vehicle, I will only give you the finance for that vehicle. means rather than collecting the entire amount from you beginning itself, I will recover it in the form of EMIs. This is known as hire purchase transaction. But what is the disadvantage in this hire purchase transaction? What if the dealer is not getting money EMIs from the buyer? So then it will be risk for the dealer, correct or not? So that's where they have gone for hire purchase financing. In hire purchase financing, what will happen? There will be a bank or a financier like Bajaj Finance, IDFC First Finance, HDB Finance, like that one financier will be there. So that financier job itself is to do the financing, you got it? And therefore, as a dealer, I get my money from the financier, I am safe. Now that financier will recover the money from the person who has taken the vehicle, who has purchased the vehicle. The financier will get the EMIs. Generally, a lot of people today who is purchasing this luxury mobiles and all, they do in this way only. So Purvika mobiles, Chennai mobiles, like that lot of shops are there. So when you go there, any product you can buy over there, and financiers are sitting over there. Even two-wheelers also, financiers will be sitting in the dealer's place itself. So dealer will never take the risk of giving the finance, because there is a huge risk for him. Already he is investing lot of money in the business. So that's why he will not take that risk. So there will be a financier. So there is three-party agreement, tri-party agreement. In case of hire purchase financing, there will be three parties involved. Whereas in hire purchase transaction, how many parties are involved? Only two parties are involved. Now in both the cases, there is EMIs. Hire purchase transaction also EMI is there. Hire purchase financing also EMI is there. But what is that we are discussing? Which interest is taxable and which interest is exempted? Hire purchase transaction, how many parties? Two parties. Dealer, buyer. Dealer is only giving the finance. This interest collected by the dealer is on account of delay in receipt of consideration, and that interest will be taxable. Whereas in hire purchase financing, who is involved? Financier, three parties. The financier is collecting the EMI, and the interest involved in that EMI will be exempted. Can you remember this? So, see this. In hire purchase, interest involved in hire purchase transaction is included in the value and chargeable to GST. However, interest involved in hire purchase financing is exempted. I gave an illustration to understand that. There is a machinery having a cash price of 40,000, and that 40,000 is payable in installments of 4,000 each for 12 months. Now, what is the hire purchase price? Usually, how to calculate hire purchase price? EMIs into number of EMIs. So, you will be getting hire purchase price. So, 4,000 into 12, that is 48,000 is the hire purchase price. Now, if it is a hire purchase transaction, how many parties are involved? Only two parties. So, are those two parties? Hire vendor and hire purchaser. Now, GST is payable on 40,000 at the time of delivery of machinery, correct? So, dealer has to pay GST on 40,000 rupees at the time of sale itself. Whereas, this 8,000 rupees is earned over a period of 12 months. Remember, interest is taxable on what basis? Accrual basis or receipt basis? In GST, wherever interest is taxable, that interest is taxable on what basis? Receipt basis. In GST, everything will be taxable on what basis? Accrual basis. Accrual means what? Received or receivable, whichever is earlier. You understood? I am receiving it now, tax it. I will be receiving it in future. Now I raise the invoice, tax it. Okay. Whereas only one amount will be taxed on receipt basis. Only when I receive it, I have to pay GST. Otherwise, I don't have to pay GST. What is that case? Interest. So, interest on account of delay in receipt of consideration. Now, please concentrate. In hire purchase transaction, interest is taxable, exempted, interest is taxable. As interest is taxable, but when we need to pay GST on receipt basis, means in every EMI we should separate the interest, and 12 months we need to see how much is the interest for 12 months, and accordingly we need to tax it. So, this 8,000 rupees is taxable, no doubt. This 8,000 is taxable in hire purchase transaction. Why? Because this is coming under interest on account of delay in receipt of consideration. But how this 8,000 rupees will be taxable? It is taxable on receipt basis for a period of 12 months. Sir, how do we calculate this? Simple. We need to prepare a loan repayment schedule. opening outstanding, EMI, in that how much is towards principal, how much is towards interest, then closing outstanding. This month closing outstanding will be next month opening outstanding, like that. One Excel, one loan repayment schedule will be prepared. In that we know what is the interest component. On that interest component, somewhere in capital budgeting, so for leasing and all is there, capital budgeting, financial management. So in leasing versus purchase option, we will be doing this particular calculation. Loan repayment schedule is something which we do. In EMI, we will break the component into principal and the interest. So that when you do, you will get the interest amount. On that interest amount, so there will be GST. Is it clear or not? So chargeable to GST on receipt basis for a period of 12 months. And next, hire purchase financing, you see. In hire purchase financing, what will happen? There will be three parties: hire vendor, hire purchaser and financier. Now in this case, so first GST will be payable on 40,000. What about that 8,000 which is received by the financier? That 8,000 will be exempted. So the principal component is not a supply, but the interest is exempted because interest on account of loans, advances, deposits is exempted. Same way like this, interest involved in credit card is also taxable. Normal, if you take a loan and if you pay EMI, in that EMI the interest is exempted. But instead, you convert that into credit card EMI. You purchase anything using your credit card. Thereafter, the credit card amount you will convert into EMIs. When you convert into EMIs, in that EMI there will be interest, that interest will be taxable. Generally, interest on loans, advances, deposits will be exempted. However, interest involved in credit card alone will be taxable. So say this, interest involved in credit cards is not exempted and treated like interest involved in hire purchase transaction. Now what you need to remember in this, simple here, hire purchase transaction, interest will be taxable. Hire purchase financing, interest is exempted. In hire purchase transaction, there will be two parties. In hire purchase financing, there will be three parties, one financier will be involved. Is it clear? Then next, see the next circular that is related to priority sector lending certificates. Basically, priority sector lending certificates are like instruments which are purchased by one bank from the another bank when there is a shortfall to meet the priority sector loan target. So priority sector loan means what? First of all, loans given to agriculture, loans given to MSMEs, micro, small and medium enterprises, education loans, housing loans, these will be called as priority sector loans. So priority sector loans are high risk loans. Why high risk loans? These people may or may not repay. Usually if you see farmers, it all depends upon the nature, whether their cultivation is proper or not. Again, education loan, so future they need to get a job and then only they will be able to repay the loan. So housing loan also people will take sometimes if their earning capacity is gone, like COVID and all. During COVID time and all, what has happened, their salaries was not there, so they were not able to pay. Lot of people lost their jobs. So in that case, these are all high risk involved loans. So that's why banks will not be giving these loans to priority sector, because they will know that these people will not be able to pay and there will be huge bad debts. But if no one is giving loans to the priority sector, then how the priority sector can survive? For that reason, RBI has given a condition. Out of the collections what you are making as public deposits, so from public you are collecting money in the form of deposits, in that at least a percentage you need to give as loan to the priority sector, like that RBI fixes a condition. If a bank is not able to fulfill that condition, their license will be cancelled. So due to that reason, they will be purchasing priority sector lending certificate from another bank which is as good as they have given the loans to the priority sector. Let's try to understand this with the help of an illustration. See the next page. Lena Dena Bank is getting a license from RBI, and as per that licensing condition, 30% of the deposits they should give as loans to the priority sector. What is a priority sector? Example, housing loan, education loan, MSME, startup loans, etc. Now, for the financial year 2021, what is the deposits collected by the Lena Dena Bank from public? See the number. How much deposits they have collected? 100 crores. In that 100 crores, how much loan they have given to the priority sector? 20 crores. So what is the shortfall here? 10 crores is the shortfall. You understood? Now if 10 crores loans they are not giving, what will happen? This Lena Dena banks license will be cancelled. On the other hand, HDFC Bank, this HDFC Bank is also having a license from RBI with the same condition. And what is the deposits of HDFC Bank for the financial year 2021? 1000 crores. In the 1000 crores, how much loan they have given to the priority sector? 380 crores. How much they are required to give? Only 300 crores. 30% of 1000 is 300. But how much they gave as loan to priority sector? 380 crores. What is the excess amount they have given as loan? 80 crores. Now HDFC Bank has achieved excess. Lena Dena Bank has got a shortfall. Now Lena Dena Bank will buy 10 crore worth of priority sector lending certificate from HDFC. Now when they purchase this priority sector lending certificate for 10 crore rupees, now what is the revised loan to priority sector by Lena Dena Bank? Already they gave 20, now they purchased a 10 crore certificate. It is as good as they gave loan to priority sector, so therefore 30 crores achieved. Is it clear? Now what is the revised loan to priority sector by HDFC Bank? 380, now they transferred 10 crores, so which means only 370. Now they are selling this priority sector lending certificate. Now who is selling to whom? HDFC Bank is selling to Lena Dena Bank. This transaction is treated as sale of goods only, not sale of securities. Actually it appears that it is securities. It is not securities, it is treated as sale of goods and chargeable to GST. Not treated as securities, treated as goods, and it will be chargeable to GST, and they are telling it is deemed as interstate supply of goods. Why is it deemed as interstate supply of goods? Because this transaction happens through e-Kuber portal of RBI, and the selling bank don't know who is the buying bank, and the buying bank don't know who is the selling bank. So because it happens through the portal, so due to that reason they are telling that it will be deemed interstate supply and chargeable to IGST. And also it will come under RCM. So who will pay GST in this case? Selling bank or buying bank? Buying bank will pay GST. But this RCM point is not important. You just remember that it's a deemed interstate supply. So this is about priority sector lending certificate. So in short, what is this priority sector lending certificate? A bank which has fallen shortfall with respect to loan to priority sector will buy the priority sector lending certificate from the bank which has given excess loan to priority sector. This sale of priority sector lending certificate is treated as supply of goods and chargeable to GST. And extra point what you need to remember, it's a deemed interstate supply. Okay. Then look into the next one. When an agent is termed as acting on behalf of the principal. So this point is required for what? 7.1c. You please check the first page in this supply chapter that we have discussed. What is that? 7.1c, 4 activities we discussed. So D, R, I, P. In that P point you see, what does it says? Principal agent transactions, correct? Principal agent transaction when agent is acting on behalf of principal. When agent will be acting on behalf of principal, for that they gave a circular. So if the invoice is raised by the agent in his name, sir, there is a principal, sir, I am the agent, you are my buyer. Now if I raise the invoice in my name, I am representing the principal na, so I am acting as, no, acting on behalf of the principal. I am hiding the principal here. If I raise invoice to you, do you know who is my principal? You don't know who is my principal, means I am an agent acting on behalf of principal. Suppose if my principal is raising invoice to you, am I agent acting on behalf of principal or not acting on behalf of principal? Not acting on behalf of principal. So an agent should represent the principal in all respects and raise invoice in their name or accept invoice in their name. First we will see sale transaction. There is a principal and who is sending the goods to the agent, and agent is sending the goods to the buyer. That's a simple transaction. Now what happens here to the buyer? Who raised the invoice? Principal. Principal is raising the invoice. See the third point. First point, principal send the goods to the agent. Point number 1. Point number 2, agent send the goods to the buyer. Point number 3, Who raised the invoice to whom? Principal is raising the invoice to the buyer. Now tell me, is the agent acting on behalf of principal or not acting on behalf of principal? Not acting on behalf of principal. See the fourth point, agent not acting on behalf of principal. Now in this case, how many suppliers are involved? One or two? Only one. That is between principal and the buyer. So principal sending the goods to the agent is not a supply. Agent sending the goods to the buyer also not a supply. Why? Because agent is not acting on behalf of principal. Okay. Suppose if invoice is raised by the agent to the buyer, look into point number 7. Look into point number 7. If agent is raising invoice to the buyer, then in that case, so is it agent acting on behalf of principal? Yes. So agent acting on behalf of principal. Now how many supplies are there? One or two? Two supplies. So one is between agent and the buyer. Another is between principal and the agent. Got the clarity? So if agent is acting on behalf of principal, then there will be supply between principal and the agent. If the agent is not acting on behalf of principal, between principal and agent, the transaction will not be treated as supply. Got it? This is in which context? Sale transaction or purchase transaction? Sale transaction. Now let's see purchase transaction. Purchase transaction. There is a foreign seller. There is a foreign seller and there is a customs house agent. CHA means customs house agent who is in Tamil Nadu, and there is an importer in Telangana. Point number 1, goods are brought from foreign seller to customs port and thereafter it is taken by the CHA. Then CHA is transporting the goods to importer in Telangana. This is point number 1, point number 2. Now point number 3, who raised the invoice to the importer? Who raised the invoice to the importer? Foreign seller raised the invoice to the importer. Now agent acting on behalf of principal or not acting on behalf of principal? Not acting on behalf of principal because the invoice is not in the name of the agent. As invoice is not in the name of the agent, agent is not acting on behalf of principal, so there is only one supply, correct? Am I right? That is between foreign seller and the importer. So CHA when sending the goods to the importer, it is not a supply. Then suppose if the foreign seller is raising the invoice to CHA, then in that case CHA is acting as an agent on behalf of principal. Now there will be two supplies. One is between foreign seller and the agent. Then again agent when sending the goods to the importer, that is also supply under 7(1)(c). This is in the context of goods. So now you tell me, when an agent is acting on behalf of principal, before that principal agent transactions treated as supply. When? If agent is acting on behalf of principal. What if not acting on behalf of principal? It is not a supply. See this. Transaction involving what? No need to make note, it's already there. I am just simplifying it, okay. Transaction involving what? Goods or services? Goods, because services will not be coming under 7(1)(c) between principal and agent. Transaction with respect to goods between principal and agent. Between principal and agent. Transaction with respect to goods between principal and agent. Now divide into two. What is that? If agent acting on behalf of principal, agent acting on behalf of principal. Second point, agent not acting on behalf of principal. Agent not acting on behalf of principal. If agent is acting on behalf of principal, is it supply? So transaction with respect to principal and agent, is it supply or not a supply? Supply under section 7(1)(c). Suppose if the agent is not acting on behalf of principal, is it supply or not a supply? Not a supply. Up to this you got the clarity? Second part, when an agent will be called as acting on behalf of principal? So sale transaction, purchase transaction. When agent is acting on behalf of supplier or principal, when agent is acting on behalf of principal, that is divided into two. What transaction? Sale transaction or purchase transaction. In case of sale transaction, or purchase transaction, for sale transaction, invoice should be in whose name? Invoice in agent's name. Okay, invoice raised by agent in his name. Invoice raised by agent in his name. So then it will be that agent will be acting on behalf of principal. In purchase transaction, when agent will be called as acting on behalf of principal, invoice raised by supplier in whose name? In agent's name. So then agent is acting on behalf of principal. Can you remember this too? Got the clarity? So that I have just explained in the form of a chart. The same information I just gave it like a chart here. And in both these cases, sale transaction as well as purchase transaction, the agent gets a commission in all situations. That commission which is received by the agent will become supply under 7(1)(a). See the note. In both the situations, agent receive commission on which GST is payable by agent, treating it as supply of service under 7(1)(a). And here also agent receive commission on which GST payable by the agent, treating it as supply 7(1)(a). You want to make note of this? So quickly please write. First write down transaction with respect to goods between principal and agent. Transaction with respect to goods between principal and agent. Agent acting on behalf of principal. So I will dictate, maybe you may not be able to see this, so that's why I will dictate, listen and write. First write in the middle of the page, transaction with respect to goods, transaction with respect to goods between principal and agent, between principal and agent. Transaction with respect to goods between principal and agent. Divide it into two. First one, agent acting on behalf of principal. First one, agent acting on behalf of principal. And the second one, agent not acting on behalf of principal. So agent acting on behalf of principal, below that you write down, that is under the first branch you write down, supply under 7(1)(c). Supply under 7(1)(c). Agent not acting on behalf of principal, below that you write down, not a supply. Under the second branch you write down, not a supply. First branch, supply under 7(1)(c). Second branch you write down, not a supply. Next, below that, next one you need to know, when agent, next line, when agent is acting on behalf of principal, question mark. When agent is acting on behalf of principal, question mark. Again, branch it into two. Sale transaction, purchase transaction. Divide into two, sale transaction and purchase transaction. Below sale transaction you write down, invoice raised by agent in his name. Invoice raised by agent in his name. And below purchase transaction write down, invoice raised by supplier. Invoice raised by supplier in whose name? Agent's name. In agent's name. Invoice raised by supplier in agent's name. Mark even this circular as very, very important. Principal agent transaction, because many times this has been tested in exam. Then look into 13th point, remaining points already we have completed. Look into 13th point, whether GST payable on no claim bonus granted by insurance company. Basically, this no claim bonus is given by insurance company if you are not claiming any amount from the insurance company for the previous year. So, for vehicle insurance or any general insurance, there is no concept of no claim bonus in life insurance. So, it is not like, so we will claim, we will die and again next year we will be born, practically not possible. So, no claim bonus concept is only there in general insurance, not in life insurance, general insurance. For example, motor vehicle insurance you take, you are not claiming any amount from the insurance company this year. Now, next year you pay the renewal premium na. While you pay the renewal premium, you will get a discount because you have not made any claim in the last year. This is called as no claim bonus. Now, the question is this no claim bonus coming under consideration for not doing an act? Because we discussed, if you are getting consideration for not doing an act, it will be supply of service and chargeable to GST. For which what they are telling is that it's not like, you know, you did not claim, so you are getting that benefit. Perhaps this is like a discount from the premium. So, as you are not claiming, yes, you are getting, but it is not a consideration to you. It is like a discount from whatever money that you need to pay. So, please don't consider it as a consideration. So, therefore, it is not a supply. So, say this, insurance company, first year beginning to the insured, they have given an insurance policy for which the insured pay the premium and he agrees to refrain from the act of not lodging the claim. And at the end of first year, no claim is made by the insured. So, second year premium, insurance company gives a deduction, gross premium minus no claim bonus, the net premium will be payable. Now, the question is this no claim bonus first of all a consideration? No, it is not a consideration because it is like a discount. Rather than paying 10,000 rupees, you are paying 8,000 rupees. That does not mean you are getting a consideration of 2,000 rupees. Therefore, this activity will not be coming under supply. Is it clear? Then another point also is there related to no claim bonus. Now, whether GST will be payable on gross premium or net premium? Net premium. Why net premium? Because literally I am not paying 10,000 na, 10,000 gross premium boss, 2,000 discount I got, then I have to pay only 8,000, then GST also should be computed only on 8,000. So, discount, this is treated like discount and it is allowed as deduction. So, as per 15 subsection 3, while discussing the value of supply, it is there that discount is allowed as a reduction. So, if no claim bonus is shown in the invoice, then it is not included in the value. For example, so premium, gross premium is 10,000 minus no claim bonus is 2,000 and net premium is 8,000. So, GST payable on 8,000. Is it clear? Suppose if no claim bonus is not shown in invoice, then it will be included in the value. So, it is like gross 10,000, okay, and thereafter they get like a cash back 2,000 rupees. Is it clear? After this they get a cash back of 2,000. So, gross or net both is 10,000 and cash back is 2,000. You would have heard of this cash back concept. So, first you spend, then we will give you some amount to you, like that, okay. So, now in this case GST payable on what? 10,000 or 8,000? GST payable on 10,000. Why 10,000? Because you are paying first 10,000. So, this 2,000 will not be allowed as a deduction here. So, that is what it is. But practically, this is theoretical. Practically, this will only happen. Okay, that is what I have given. However, usually NCB is shown by the insurance company invoice as a deduction from the gross premium payable. So, 99.99% it will be like this only. But just for theoretical purpose, they have given the other situation. Then this circular already we discussed. Supply of food and beverages in cinema hall. This is an amendment, mark it as important. So, sale of ticket GST 28%. Sale of food and beverages GST say 5%. Sale of tickets and food and beverages combo. So, then in that case what will be the applicable rate? 28%. Determine the GST taxability for the above three services. Rate of GST, cinema exhibition 28, restaurant service 5%. First case, sale of tickets. So therefore normally we will take 28%. Second case, sale of food and beverages. So normally we will take 5%. Sale of tickets and food and beverages as a combo. Now in that case we will call it as a composite supply. And what is the principal supply? Sale of tickets. What is the rate applicable to sale of tickets? 28%. So that will be taken. Okay. Then next one. So there is a holding company who is holding 51% shares in Y Limited, and Y Limited is the subsidiary company. So is there a control between X Limited and Y Limited? Whether X Limited and Y Limited are treated as related parties? Yes. Now X Limited is purchasing 10% shares in Y Limited without any consideration. Now in this case, whether this particular transaction is treated as supply under 7(1)(c) because they both are related parties. What is your answer? No. Securities are, someone said there, very good. Securities are neither goods nor services. So therefore, even though it's a related party transaction, but first of all it should be goods or services. As it is not goods or services, there won't be any GST on this transaction. Again, this also amendment, mark as important. Examine the GST implications with respect to holding 51% in Y Limited and purchase of 10% shares in Y Limited. First, as they are holding 51%, they both are treated as related parties. Any activity between them, even though without consideration in the course or furtherance of business, is treated as supply under 7(1)(c). However, when the shares is the activity, so first of all shares are neither goods nor services, consequently it will not become supply. You understood? Then next, with this we completed all the circulars, and these two circulars were newly added circulars. So the chances of asking these questions are high on this. And then, so what is the way in which we need to interpret in a question by seeing a transaction? First you check whether the said activity is supply. If the activity is not a supply, what is the reason that you will write? Because in 14 marks question, this is what generally we need to do. We need to see what are the outward supplies. For every outward supply, you need to analyze this chart. Okay. First you need to check, is the activity supply. If the activity is not a supply, you know why it is not a supply. Just now we studied, you know that it is not a supply. What is the justification you will write? As per section 7, suppose if it is not a supply, why it is not a supply? Maybe it is covered under 7 subsection 2. Now what you will write? As per 7, please respond, okay, speak, nothing will happen. Worst come scenario, you will get a throat pain like me, okay. So please speak, at least that way you will register that in your mind, okay. So as per 7 subsection 2, read with schedule 3 of CGST Act, the said activity is excluded from supply, therefore GST not payable. Ayya, justification is important, ayya. For the sake of that only I am telling you what you need to write. So problem is, you know the answer, but you don't know what to write. On the paper, when you put the pen will not move. You know the answer, but the pen will not move. This is the problem with every student that they will face commonly in taxation paper. That's why I am telling you. The moment when you know the transaction is not a supply, what is the justification you will write? As per section 7, subsection 2 of, read with schedule 3 of CGST Act, the said activity is not a supply. Therefore, GST payable or not payable? Not payable. One more reason also it will not become supply. Why? It is not covered in 7(2) and also not covered in 7(1). You understood? It is not covered in 7(2), also not covered in 7(1). For example, disposal of business asset on which ITC not availed. It is not a supply, na? So you will write that. What is that? As per section 7 subsection 1, the said activity is not a supply. Reason you will write, whatever is the reason. And therefore, GST not payable. This is the reasoning you will give. Suppose, if the activity is supply, what is the next thing that you need to check? Whether the said activity is exempted. How do you know whether it is exempted or not? we have to refer the notification. Notification number right there, notification number 12 of 2017, notification 12 of 2017, and the section is section 11 red with, section 11 red with notification 12 2017. That's what you need to write. Section 11 red with notification 12 of 2017. Okay. So there we will see list of exemptions. So in yesterday break, one student asked me, sir, how to remember these exemptions and all? You cannot remember. Literally you cannot remember, because you will not be tested also. Write whatever you know in exemptions for 50 marks. They will not ask a question like that. Okay. So they will give a situation. In that situation, you need to know whether it is exempted or not. For that, you don't have to remember. You need to understand what are the exemptions. Once you understand what are the exemptions, the moment you see the situation, automatically answer will come. You got it? For that, you need to do revision. Some 3-4 times you need to do the revision, so that is first you need to learn what is the exemption you need to learn. Then 2-3 times you need to do the revision, and thereafter you will be able to know okay, what is the point. So they will give a situation. The moment they give a situation, you will know okay, it is already covered in the exemption, therefore the said activity is exempted, like that you will write. Okay. Then, and for that purpose, so for revision purpose, I have created one material here called as That's It on GST, a small pocket book. Okay. And for the benefit of the students, I have kept it open for all. So freely it is available. So you can just go to my website courses.tharunraj.com, and as a e-book it is available. And many students requested, sir, e-book we are not able to read, please share a PDF, like that. So therefore immediately after completion of this batch, so by next Monday, so this is like this week, by Monday I will be releasing open PDF in my Telegram channel, so that you can keep that in your mobile, and if you want to take a print also, you can take a print of it and you can read from that. Okay. So therefore it will be like crisp, entire GST in very few pages, and on that I will do a quick revision also, rocket revision also I will do, and I will upload in my YouTube channel. Hardly it will be 3 hours, entire GST revision in 3 hours. Okay, 3 to 4 hours only. So that 3 to 4 hours video, you just listen, keeping this PDF, so that will be like multiple revisions it will be happening, so that when you go to the exam, automatically you will get to know as to what is the situation, whether it is exempted or not. Is it clear? Now say this. So suppose if you know that the said activity is exempted, so first you need to check supply, then you know that it is exempted. Now what is the justification you will write? Even though the said activity is supply, but as per section 11 read with notification 12 2017, it is exempted, and therefore GST not payable. Understood how to write? The next, suppose if it is not covered in exemption, balancing figure is what? Taxable. Now once it is taxable, so what is the first aspect you need to check? Whether it is a supply or not a supply. What is the second aspect that you need to check? Whether it is exempted or taxable. What is the third aspect that you need to check? Who is liable to pay GST? Whether it is FCM or RCM. So whether the said taxable supply is covered under RCM. How do you know what are the activities which are covered under RCM? For that you need to refer section 9 subsection 3 read with notification number, section 9 subsection 3 read with notification number 13 of 2017. Section 9 subsection 3 read with notification 13 2017. This is the list of services which are covered under RCM. So balancing figure is what? FCM. So therefore what is the justification you will write? The said activity is not covered under exemption, therefore it will be taxable, and as per section 9.3 read with notification 13 of 2017, it is covered under RCM, where the liability to pay GST is on the recipient. Remember, RCM, recipient, R for recipient, okay. So RCM, recipient will be having the liability to pay GST. Suppose if it is not covered under this notification RCM, means we will learn the list of services which are covered under RCM. So remaining balancing figure will be FCM. So FCM means who will pay, who is having liability to pay GST to government? Supplier is having liability to pay GST to government. So but don't conclude the liability, because again you need to check fourth factor. First factor you say, check supply or not. Second factor you check whether it is a taxable or exempted. Third you check who will pay GST, that is FCM or RCM. Fourth factor, whether they are required to register or not. See, just because a service is taxable and it is covered under FCM, GST not payable. Only if the person is registered, they will pay GST. If the person is not registered, GST will not be payable. Are you understanding? Sir, I am providing a service, sir, that is taxable and it is having liability on me. But for that, first I should be registered. If I am not at all registered, why will I pay GST? Are you getting? So therefore, the next last factor that you need to check is whether the supplier is registered or not. So if the transaction is covered under FCM, whether such supplier is liable to be registered, you need to refer two sections, section 22 or section 24. 22 talks about when a person is required to get registered, 24 talks about compulsory registration. So these two sections you need to refer. So you need to refer to section 22 or 24. Whether such supplier is required to get registered. If yes, then GST payable. What if they are not required to get registered? Then GST not payable. Suppose if their turnover does not exceed threshold limit, but the service is taxable, what will you write? Even though the service is taxable. How to arrive at the service taxable, that you know. Even though the service is taxable and it is covered under forward charge mechanism, as the suppliers aggregate turnover does not exceed threshold limit, as per section 22 they are not required to get registered and therefore GST not payable. So now you tell me, why GST not payable? Maybe it is not a supply, or maybe it is exempted supply, or maybe it is taxable supply, but the supplier is not required to get registered. Understood or not? Then suppose if it is RCM, RCM always liability to pay GST is on whom? Recipient. And whether the recipient is compulsorily required to get registered? Yes, every recipient is compulsorily required to get registered unless exempted. So this exempted is given in section 23. As per section 23, few cases a person is exempted from registration. Yesterday only we discussed one point. If you are making only exempted supplies, you are not required to get registered. So therefore, unless they are exempted, compulsory registration will be applicable and recipient is required to pay GST under RCM. Is it clear here? So please remember this flow chart, and while doing your preparation also, when you solve the questions, you interpret it in the same way and you try to write the justification so that you get the practice of it, and so that you will not make any mistake, because the target is simple. First question, compulsory question. In that first question, compulsory question, for 15 marks, our objective should be to score minimum to 12, 13 marks there itself we should be getting. If possible, 15 out of 15 also we should be getting, because MCQs you cannot bank on it. MCQs, the problem is it will be so tricky. So we will be thinking MCQs is scoring area. No, never. MCQs is not the scoring area. MCQ is like hedging, like speculation. We don't know. Sometimes we may get marks, sometimes we may not get the marks. Don't bank on it. So try to bank on the descriptive part. MCQ, if your time is good, if the questions are good, superb, you will be getting good marks. Otherwise, there it will be lost. That's why descriptive portion, as the extent possible, you should be able to get. That's why I told you this, okay? So you interpret the same way. Even when we solve the questions also, we will do the same way. Then see the next chapter, we completed this segment 2. Look into segment 3, liability to pay GST. Generally, who will have liability to pay GST to government? Supplier or recipient? Supplier. But there are three areas where recipient will be having liability to pay GST to government. So, not recipient, any other person other than supplier. See this, section 9. So, section 7 and 8 we discussed in the previous chapter. In this chapter, we are going to discuss section 9. General rule, supplier shall pay GST to government generally. But there are three cases where supplier will not pay GST to government, but some other person will pay GST to government. Who is that some other person? As per section 9(3), there are some notified goods and services. For those notified goods and services, liability to pay GST is on the recipient. Okay. And one second, so please concentrate here everyone. I can see lot of people not focusing on the class. Please concentrate, because it's okay now. What will happen? It will be so jolly, and after result only you will know that the person who was sitting next to you keep on talking, they will clear the exam, because I observed this. So, what happened last batch, November 23, two students came, boy and girl. Initially boy was sitting here, girl was sitting there. Thereafter they both were sitting next to each other. It's okay, fine. No, you are adults, and therefore I cannot stop you like, no, you are not kids now to tell. So, girls means this side only, boys, that's fine. But what happened, they were keeping on talking. I scolded them also. Yaar, concentrate, you are talking only like that. And what happened, that girl cleared intermediate, and the boy gone. Okay, so girl is smart there. She was talking, she was also listening, split personality. Okay, she was listening and she was talking also. And that boy, dumb fellow, so he was thinking, okay, she was talking to me, so my focus should be here only. Like that, he didn't attend focus here, because of which he lost, and that girl has cleared. So be careful. I am telling you, people sitting next to you, they will clear. They will be keeping on talking. Don't trust them. It is you who will be having the problem. Okay, so please focus on this. And therefore, 9 subsection 3, there are some list of goods or services where the liability to pay GST is on the recipient always. 9(4), there is a promoter or builder who is making purchases from an unregistered person. That promoter or builder is liable to pay GST under RCM, because they are making purchases from unregistered person. If they buy from a registered person, anyhow they will pay GST to that registered person will pay to government. But when they buy from an unregistered person, first of all they will not pay GST na. So due to that reason they have to pay GST under RCM, that is 9(4). 9(5), there are some notified services through e-commerce operator, where liability to pay GST is on e-commerce operator. You understood about 9(3), 9(4), 9(5)? Again I am repeating. General rule, liability to pay GST to government is on the supplier, but 3 exceptions to that. 9(3), who will pay GST to government? Recipient. On what? Notified goods and services. 9(4), who will pay GST to government? Recipient. Who is that recipient? Promoter or builder, when on their purchases from a unregistered person. Then 9(5), who will pay? E-commerce operator will pay. On what? Some notified services through e-commerce operator. Is it clear? Now see that goods or services notified for 9(3), liability to pay GST is on recipient. Goods or services notified for 9(4), whether supplier is registered. Supplier is registered, 9(4) will not come. Supplier is not registered, whether recipient is registered and notified, no, then also GST will not come. Only when the supplier is unregistered and the recipient is registered, then GST payable under RCM 9(4). Then next one, supplies through e-commerce operator, whether it is notified services, no, then e-commerce operator will not pay. If it is notified services, e-commerce operator will pay. Now see the comparative difference between 9(3), 9(4), 9(5). What is notified in 9(3)? Goods and services. What is notified in 9(4)? Inward supplies of promoter or builder. What is notified in 9(5)? Services through e-commerce operator. What services through e-commerce operator? HATE. So these 4 services which we will be discussing in 9.5 later, I have just given it here. So look into that list of services in page 62. What are the 4 services where liability to pay GST is on e-commerce operator? 9 subsection 5, HATE. See 9 subsection 5. H for housekeeping services. Example pa urban company or urban club. In that urban company, urban club, who is the supplier? The person who provides this service. What service they will provide? Plumbing, carpentry, AC mechanic, etc. And urban company is the e-commerce operator. The customer who receives the services is the recipient. Who will pay GST in this case? E-commerce operator will pay. A for accommodation services. Accommodation services means example, Make My Trip, Go Bibo, Oyo, etc. and all. Who is the supplier in case of Oyo rooms? Hotel. Oyo room will be e-commerce operator and your friend will be the customer who will be recipient. So therefore, in this case, liability to pay GST is on whom? Oyo. Oyo should pay GST, okay. And no, very good turnover they are having, really. Uncle's job they do very nicely and they get lot of money. Then T for transportation of passengers. Transportation of passengers, so here by any mode. So transportation of passengers by any motor vehicle. Previously it was radio cab, radio taxi, etc. Any motor vehicle. Again who will pay GST? E-commerce operator. Example, Ola, Uber, Rapido. Who is the supplier? Driver. And these e-commerce operators are the intermediaries and the customer is the recipient. Now who will pay? Again the e-commerce operator will pay. Then 4, E for eating food from the restaurant. In case of eating food from the restaurant, who is the supplier? Restaurant is the supplier. Swiggy, Zomato is the e-commerce operator and the customer is the recipient. Who will have liability to pay GST? Liability to pay GST is on e-commerce operator. So what are the 4 notified services here? Come on. Housekeeping services, accommodation services, transportation of passengers, eating food from the restaurant. These are the 4 services notified. Come back. In case of these 4 notified services, who will be having liability to pay GST to government? E-commerce operator. Now, see the last line, page 54. Come back to page 54. So, what are notified we have seen. In 9.3 what is notified? Goods and services. 9.4 inward supplies of promoter or builder. 9.5 services through e-commerce operator, notified services. Now see the last line. Who is liable to pay GST to government? In 9.3 who will pay GST to government? Recipient. 9.4 recipient. 9.5 e-commerce operator. How the supplier should be? In case of 9.3 supplier may or may not be registered. Is it clear? In case of 9.3 supplier may be registered, supplier may not be registered. Whereas in 9.4 supplier should be unregistered, then only 9.4 will be applicable. Whereas in 9.5 for the first 2 services, what are the first 2 services? H and A, supplier should be unregistered. For the next 2 services, supplier may or may not be registered. Example, there is a small roadside restaurant and that restaurant's turnover is not more than 20 lakhs. So they are not registered. Now they supply food through e-commerce operator. Possible? So because nowadays lot of roadside food stalls only becoming so popular, really, because thanks to Instagram and the food vloggers. So these people will go and for the sake of free food and all, they will take one video. Hello guys, I came to this restaurant, so nice food like that and all, they will be talking and they will promote that restaurant. And as they promote the restaurant, so lot of people will start coming and eating, because Sunday evening I went to Anna Nagar, so that one road is there, that burger shop is there, Tower Burger like that. So that was in that road, lot of crowd was there. I didn't understand what it is. 4 or 5 roadside shops were there. In that crowd was standing. I also thought some free thing which is given and all, because free only means our people will stand in queue and all. So, but it's not free. Actually, people crazily they were, and somewhere I was so curious to know what it is, and I went there. It is like somewhere in Instagram we would have seen strawberry chocolate they will put and give. That shop is there. Okay, what they are giving in one cup, few strawberries they are putting, and there was one ice this chocolate fountain, liquid chocolate fountain. In that liquid chocolate fountain they are keeping the strawberry, you know, and they are pouring the chocolate liquid, and they are putting one kuchi and they are giving. Okay, for that people were standing. Now this, some people may even order through e-commerce operator Swiggy, because they have put the board there, we deliver on Swiggy and Zomato, like that. That restaurant, small eating joint, definitely they will not cross 20 lakhs and they are unregistered. But if they start selling it through Swiggy or Zomato, the liability to pay GST on Swiggy and Zomato arises, and Swiggy or Zomato will pay GST. That's the reason why when you order food from Swiggy, Zomato, it will be costly compared to when you directly go to the restaurant and eat, because these people will charge GST, restaurant will not be charging any GST. Are you getting this? So, whether the supplier is registered or not, liability to pay GST is on e-commerce operator, in which case last, that is T and E, transportation of passengers and eating food from the restaurant. Then next, third point, recipient. How the recipient should be in case of 9.3? Recipient should be registered person, compulsorily they are required to get registered. Whereas 9.4 by default there should be registered person, then only 9.4 will be applicable. And 9.5 recipient may or may not be registered, because the liability is on e-commerce operator. Now look into 9.3, list of notified services where the liability to pay GST is on e-commerce operator. What are these list of services? So the moment this service you see in the question, what is that reference that you need to write? As per section 9 subsection 3, read with, what is the notification number? 13 of 2017. This list of services you can remember with a keyword, Sir CG got salads. Now let's make an effort to know what is the full form of it first. Okay, Sir CG got salad. S for security lending services. Security lending services means I have securities, I will be lending the securities to you, you will borrow the securities, you will pay a lending fee on me, that is covered under RCM. Okay, that is security lending services. Then I for import of services. S for what? Security lending. I for import of services. R for renting of motor vehicles. You can understand now what is renting of motor vehicles. Then another R, renting of residential property. Okay, so tell me what is the first four? SIRR. S for security lending services. I, import of services. R, renting of motor vehicles. Another R, renting of residential property. Okay, sir. CG, C, copyright services. What are the copyright services? Check there. What are the copyright services which are given? Only 4 copyrights are covered. Original literary, example pa, books, okay, books, articles, journals, so that will be coming under novels, that will come under original literary. Then dramatic works, story, screenplay will come under dramatic works. Usually what happens when one movie gets released, so one person will tell, na, it is my story, so I have to get money, so someone has copied my story and they made a movie like that and all. You would have seen, na, how sir it will be their story? They would have written the story and they would have got the copyright of that story, and this copyright they will be having. Other person also can get the same inspiration. The synopsis will be same. You understood? See, majority of the stories, the synopsis will be the same. So there won't be any change. For example, Jailer movie, already 100 times it came in the past. Same. Son is missing, but he will be alive. He will be either good or will be bad. Father will be in confusion. Father will come to know that son is idiot and father only will kill the son. This is the story. It's one line, correct? How many stories are there like this? And MGR movie, Shivaji Ganeshan movie and all is there. In every language it is there. One actor would have done. So like that, the storyline will be common. And therefore, one person will get the copyright of that story. He will make the story and he will be getting a copyright of it. Now, other person also will get the same idea. When he makes the movie and releases the movie, this person will say it is my copyright. So, because he would have registered that story, that is the meaning of dramatic works. Okay. So, then producer will buy the story from them and they will pay some royalty amount. Then next, third one, musical works. Example, music directors or any person who composes the music, they will be coming under musical works. Artistic works. Artistic works means, example, paintings, drawings, sculptures, etc. will come under artistic works. So, these 4 copyrights are only covered under RCM. What are the 4 copyrights? Original literary, dramatic, artistic, musical. Original literary, dramatic, artistic, musical. And then G for GTA services, goods transport agency services. Who is a goods transport agency? A person engaged in transportation of goods by roadways and issues a consignment note by whatever name called. Means basically they will be transporting the goods belonging to multiple consignors to multiple consignees. For example, there are 10 people who wanted to send the parcels to a different location to different people. Now, they cannot book the entire lorry now, because entire lorry means the freight cost of the lorry will be like high, 10,000 or 15,000 like that. So, due to that reason, I will average this 10,000 or 15,000 between this 10 people and I will transport the goods belonging to multiple consignors to multiple consignees, then I will be called as a goods transport agency. So, that is also covered under RCM. Now, tell me what is SIR CG? S for security lending, I for import of services, R for renting of motor vehicles, another R renting of residential property, C copyright, original literary, dramatic, musical, artistic works, and then G GTA services. SIR CG got, in that got G for government services. Now, to that government services there is an amendment, you also add court, tribunal, parliament, state legislature. Okay. Services provided by government, including court, tribunal, parliament, state legislature. These 4 people also now covered under RCM, which means court or tribunal. Sir, you said court or tribunal is excluded from supply. What is excluded from supply for court or tribunal? Only legal fees collected by court or tribunal is excluded from supply. Other consideration collected by court or tribunal is covered under supply. I told you this point. And who will pay GST in that case? Recipient. Who is their recipient, to whom they are giving on rent? That recipient will be paying GST. Same way. So, parliament and state legislature, assembly building, parliament building also, for running a canteen they can give on rent. So, now the person who is taking it on rent will be paying GST under RCM. Is it clear or not? So, government services including, come on, government services including parliament, state legislature, court or tribunal. And then O for overseeing committee services. Basically, this overseeing committee is appointed by RBI for the purpose of restructuring the NPAs. NPA refers to non-performing assets. So, to restructure that NPAs, so this overseeing committee is appointed. So, their service also covered under RCM. Then next one, T for TDR, FSI and long-term lease. TDR refers to transferable development rights. FSI refers to floor space index, and long-term lease, that is land given on lease for a period more than or equals to 30 years is known as long-term lease of land. So, in case of this landowner will be transferring TDR or FSI or long-term lease to a promoter or builder, on which landowner will not pay any GST, but promoter or builder will pay GST under RCM. That is about the T. Okay. In detail we will discuss. First we are understanding the overview, what are the various services which are covered. Okay. So, SIR CG got. What is that got? GOT. G for government services including parliament, state legislature, court or tribunal. O, overseeing committee services. T, transferable development rights, floor space index and long-term lease of land. Then salads. In that salads, yes for sponsorship services. Sponsorship services means what? Generally, this sporting events or any events, there will be some sponsors will be there, na? That is called as sponsorship services. So BCCI, if you take, they will be getting lot of money from the people who sponsor, and that is actually a bad omen. So those who sponsor for BCCI, their business will be closed. Okay, you check Dream 11. Before that Dream 11, you know what is that? Sahara. In between also someone gone. Byju's, correct, Byju's. So that those who sponsor for that gone. I don't know why it is. So lot of money will be paid as sponsorship money, which is collected, that is called as sponsorship. Okay, for events, for programs or for sporting events or for beauty events, like that sponsorship money will be received. That sponsorship money will be covered under RCM. Okay, then A for agents. Who are the agents covered under RCM? Please see there, total 5 agents are covered under RCM. Insurance agent. So insurance agent will be providing services to whom? Insurance company. Then this recovery agent, direct selling agent, business facilitator, agent of business correspondent, all these people will be in the banking sector. Okay, just write down there. This recovery agent, direct selling agent, business facilitator, etc., all these in banking sector. Agents working in banking sector. Only insurance agent is in insurance sector, remaining 4 people will not be in any other sector, they will be only in banking sector. So who are the 4 other people who are in banking sector? Recovery agent, what they do? Recover the money. Direct selling agent, sell the banking products. Then business facilitator, then agent of business correspondent. So who are the 5 agents? Come on, insurance agent, recovery agent, direct selling agent, business facilitator, agent of business correspondent. That is about agent services. And then again I am repeating, I am just giving you a bird's eye view. Later on detail we will see one by one. So first you should know what are the services under RCM. Okay, then S, A, LA. L for legal services. By whom? Individual advocate or firm of advocates. Legal services provided by individual advocate or firm of advocate. Then A for arbitrator services. What is the difference between advocate and arbitrator? Those who settle the disputes through the court of law are called as advocates. Those who settle the disputes out of the court is known as arbitrators. Okay, so arbitrators are like in villages and all, you will be seeing panchayat. Okay, so that concept only, but that is now there everywhere. So legally it is done. So at that time when it is done, it was like people used to respect that person, so that they will be doing. Nowadays who is respecting? No one is respecting anyone, so that they are bringing it into a legalized format, that is called as arbitration. Okay, so mediation between 2 people, they will try to mediate and settle the dispute out of the court. That is what arbitration is. Then next, S, A, L, A, D. D for director services. So company or a body corporate will have a director who provides service to the company, that is covered under RCM. Last S is security agency services. Security agency means manpower. Security personnel will be supplied na. So in big malls or banks or educational institutions, outside some security people will be standing. So this security personnel, as if it is their building, they will do lot of overaction also sometimes. Okay, so this security personnel, so will be coming under like security manpower supply. Basically it's a manpower supply agency, but which manpower? Only security personnel. That is also covered under RCM. So this is the list of services covered under RCM. One last time you please tell me what is that what? Yes for security lending services. Don't get confused between security lending and security agency, both are different. Security lending is giving securities, shares, debentures, etc. on rental basis. That is security lending. Security personnel is people who are standing outside the building. So that is security personnel. Okay. So first one, security lending. I, import of services. R, very good. Renting of motor vehicles. Another R, renting of residential property. Very good. SIRR. Then C, copyright. What copyright? Dramatic, artistic, musical works. Very good. And then G, GTA services. Next G, government services, including parliament, state legislature, court or tribunal. Then G, O, overseeing committee. T, transferable development rights, floor space index, long term lease. Then salads, yes. Sponsorship services. A, agent service. How many agents? Who are they? Insurance agent, recovery agent, direct selling agent, business facilitator, agent of business correspondent. Very good. L, legal services by individual advocate or firm of advocates. Another A, arbitrator services. D, director services to company or body corporate. Yes, security agency services. Very good. Now let's see one by one in detail. So look into the first one. In case of, see, whenever you remember this service, you know the list of services, but that is not great. Whatever effort that you have made now, good, not great, because you know what is the list of services which are under RCM, but in exam they will be testing on the other aspects, like they will give exemptions, they will give conditions, etc. based on the DEL test. So therefore, first you need to know what is the list of service covered under RCM that you have achieved. Next, for each service you need to know what are the exemptions. Then you need to know what are the conditions for RCM. And then you need to know non-applicability of RCM. Means in that case RCM will not be applicable, FCM only will be applicable, even though the service is under RCM, but there are exceptions to RCM, that is called as exceptions to RCM where FCM will be applicable, non-applicability of RCM. So these three columns also you should be knowing. So first you should know, so what are the exemptions, then you need to know what are the conditions for RCM, then finally non-applicability of RCM. Okay. Now look into the first one, security lending as per SEBI by lender of securities to borrower of securities. So who is the supplier here? Lender, the one who is lending the securities, and the one who is borrowing the securities is the recipient. Why people will borrow the securities? Because there is a concept called as short sales. Short sales means in stock market, when you don't have shares but you place a sell order, then it will be called as short sales. Now you need to deliver the shares. What happened? You placed the sell order thinking that order will not get executed, but order got executed. When the order got executed, you need to deliver the shares. In T+1 working day, you need to deliver the shares, but you don't have the shares. How can you deliver? If you are not delivering the shares, a huge penalty will be levied on you. So to avoid that penalty, people will borrow the shares and you will deliver the shares. Thereafter you will buy the shares and you will replace the borrowed shares. It is simple, like any asset which you borrow, the same logic it will be, for which you will be paying a lending fee. So this lending fee will not be payable, the GST on this lending fee will not be payable by the lender, but it will be payable by the borrower. Clear? So what is the first one? Security lending service by lender of securities to borrower of securities. Do we have any exemptions? No. Any conditions for RCM in this? No. And any non-applicability of RCM in this? No. So we don't have any special points to remember in this. Got it? Then second point, I for what? Import of services. In this import of services, we have one exemption. What is that exemption? Import of other than OIDAR services. Other than OIDAR services. Sir, what is OIDAR service? You can see there, previously the definition of OIDAR service was any service which was mediated through internet and which was automated was called as OIDAR. Now from May 24 exam, they have made an amendment which says that any service which is mediated over internet is called as OIDAR services. even though it is not automated, it will come under OIDR services. Means any service which can be provided through internet. Service which can be provided through internet is called as a OIDR service. Can you give me examples? Very good. Netflix, Amazon, all OTT platforms will come under OIDR. Next. Service which can be provided through internet. Online classes. Very good. Previously, online classes was not OIDR. You know why? Because it was not automated. Some faculty should be there. But now, online classes will be coming under OIDR services. And then, Instagram marketing, Instagram, YouTube marketing is there na? Internet marketing, that is digital marketing, that is also OIDR services. Your cloud storage, so Google Drive or OneDrive or iCloud, that will come under OIDR services. And cloud computing like Zoho Books, QuickBooks, etc. will be coming under OIDR services. So these are all examples of OIDR service which can be provided over internet. Even online gaming. Online gaming also, some games without internet you cannot play na. You can download the game, and to play the game definitely internet is required. Of course, some games even without internet you can play, but some games you need internet to play, otherwise you will not be able to play those games. So that is called as OIDR services. Is it clear? Online gaming. Now say this, what is the exemption we are talking about? OIDR or other than OIDR? Other than OIDR service by non-taxable recipient. Can you tell me import of other than OIDR service? You are importing some service other than OIDR service. Software imported. Possible? Software is not OIDR because you are importing the software. Import of technical services, import of technology, import of consultancy services, import of medical services. You understood? All these are other than OIDR service. Who imported it? Non-taxable recipient. So who is non-taxable recipient? Generally, we are all individuals whom we trust a lot. Government only we trust a lot, correct? So individuals trust government will come under non-taxable recipient. You understood? So who will come under non-taxable recipient? Individuals trust government. Trust means charitable trust, and government. See there. Unregistered individual for personal purpose, trust importing for charitable activities, and government for non-business purpose will come under non-taxable recipient. So tell me who will come under non-taxable recipient? Unregistered individual. For what purpose they should be importing? Personal purpose. Number 2, trust importing for charitable activities, and government importing services for non-business purpose. I'll give you one example. Say you are importing Microsoft Office. Microsoft Office is not OIDR. Why Microsoft Office is not OIDR? Once you install the software in your laptop, even without internet you can use Word, PowerPoint, Excel and all. Yes, internet is not required to use that. So therefore it is not a OIDR service. You are a CA student. You have imported Microsoft Office software and you paid some 2000 rupees and you install it in your laptop and you are using it. Now for what purpose you are using it? For business purpose or for your personal purpose? Personal purpose. Now this will be called as import of other than OIDR service by non-taxable recipient. You are unregistered individual, correct? And you are using it for what purpose? Personal purpose. Therefore this service will be exempted. You understood? Then next, second example, Swami Nityananda Trust. This Swami Nityananda Trust is importing video conferencing software for the purpose of interacting with the pilgrims to give the spiritual knowledge. You understood? Therefore this will be coming under import of services other than OIDR by a charitable trust. For what purpose? Charitable activity. Spirituality will come under charitable activity. Therefore it will be exempted. Then third, government is importing litigation services. So say this China or Sri Lanka or even this what is that? Recently also big issue happened, no? Maldives. So these are all now occupied by China. Actually, they are trying to attack us in a triangle mode. So China on the top, Sri Lanka became bankrupt and they gave funding to Sri Lanka. You know that? Sri Lanka they gave funding. And then again Maldives also they started giving funding to the Maldives. So now their plan is simple. They wanted to capture India. So therefore from that side they will start attacking, and Maldives they will bring the army, their army. That's why they asked Indian army to get out, and then again from Sri Lanka. So they will be trying to attack and they wanted to capture India. So that is their plan, but they don't know that we are having friendship with Russia. If they do this, Russia will attack them. Okay, so we have our own calculations. So therefore this China will unnecessarily give lot of torture to us. So now what we will do, we will put a case on China. For putting a case on China, where the case we need to put before UN, before United Nations, we need to put the case. For that purpose, Indian government will be importing litigation services. So import of litigation services, not for business purpose, other than business purpose, for which they need to pay some amount, that will be exempted. Is it clear or not? So what are the 3 points under non-taxable recipient? Come on, tell me. Unregistered individual for personal purpose, then trust for what purpose? Charitable activities. Government for non-business purpose, then it will be exempted. So please tell me what is exemption here? Import of other than OIDR services by non-taxable recipient is exempted. Apart from that, all other import of services will be taxable. Do we have any conditions for RCM? No. And we have one exception. In one case, generally import of service who will pay GST? Recipient will pay GST. But in one case, supplier will pay GST under FCM. What is that one case? Import of OIDR services by non-taxable online recipient. Who is non-taxable online recipient? This definition also changed. Previous definition was any unregistered person importing for other than business or commerce. Now they changed it to any unregistered person for whatever purpose they may be importing. Any unregistered person plus registered person only for deducting TDS. These two people are called as NTOR. Any unregistered person or registered person only for deducting TDS. So it will be coming under import of OIDR services by non-taxable online recipient. So it will come under FCM, where liability to pay GST is on supplier. For example, you take Amazon Prime or Netflix. Now you are subscribing for Netflix. You are registered person or unregistered person? Unregistered person. So import of OIDR services always taxable. But who will pay GST? Generally RCM, but in this case you will not pay GST. The supplier will pay GST. Where is the supplier located? Outside India. So the supplier located outside India will be paying GST. Got the clarity? Now, so this import of service, mark it as very, very important for May 24 exam. So first we should know, we should see import of services. What is the exemption? What is the exemption? Other than OIDR by non-taxable recipient is exempted. Then when it will be coming under FCM, generally import of service RCM, but one exceptional case it will be FCM. Import of OIDR services by non-taxable online recipient. Who is non-taxable online recipient? Any unregistered person or registered person only for deducting TDS. Very good. What is OIDR service? Any service which is provided online over internet. Okay. Then next, what is the meaning of NTR? Non-taxable recipient. Unregistered person, that is unregistered individual for personal purpose, charitable trust for charitable activities, government for other than business or commerce. And you give the page number reference here related to this import of services. So the detailed discussion is there in exemptions chapter also. You give the page number reference here, refer page number 179. Refer page number 179. So as we completed this discussion, parallelly we will see this also. So import of services divided into two. Page 179, refer page 179. Import of services divided into two. OIDR services other than OIDR services. OIDR service always taxable, correct or not? Who will pay GST in case of OIDR service? If imported by NTOR, FCM, taxable under FCM. If imported by other than NTOR, RCM. Other than OIDR services, we should apply NTR. So exempted. If it is other than NTR, taxable under RCM. So when we use NTR, when we use NTOR, what is extra? What is extra in this? Oh, that is online OIDR service. You understood? So only when there is OIDR, we apply this NTOR. Otherwise, it will be only NTR. There is a difference between NTOR and NTR. NTR is 3 people only. 3 people only. Individual, trust, government. But in NTOR, everyone will come. Any unregistered person or registered person only for deducting TDS. Got it? Then OIDR services, this is the definition that is given in the law. Online information and database access retrieval service means services whose delivery is mediated by information technology over internet. Underline, mediated by information technology over internet. And the nature of which renders their supply impossible in the absence of information technology. Then it will be called as OIDR service. What are the 2 key points that you need to remember? Mediated by information technology over internet, and in the absence of information technology, that service cannot be rendered. It will be called as a OIDR service, and includes electronic services such as, they gave some list. Advertising on internet, I gave examples also there. Advertising on internet, example what? Instagram, YouTube. Then second, providing cloud services, QuickBooks, SAP. SAP is like this accounting software, okay, a lot of ERP, it's in ERP, so a lot of modules are there in that. SAP HANA, that is one, a cloud software. Then provision of e-books, movie, music, software and other intangibles through telecommunication network or internet, example Spotify, Kindle. So this will come, even Apple Music. Then providing data or information retrievable or otherwise to any person in electronic form through computer network. Example Udemy, lot of online courses will be there in Udemy. So you can enroll for that courses and you can complete the certification course. And then Canva for designing. So Canva is one website wherein, so you don't know Photoshop etc. and all, you can do beautiful design of posters, flyers, with invitation cards, wedding cards and all. So that will be that software then, but it will be internet, over internet, online. Then online supply of digital content, movies, television shows etc. that is Netflix, Amazon Prime. Digital data storage, digital data storage means iCloud, Google Drive, OneDrive. Then online gaming, example Minecraft, GTA Vice City, excluding online money gaming. So I told you already, online money gaming will not come under OIDR service. Online money gaming is treated as what? Specified actionable claims. So it will be coming under goods, okay. Then non-taxable recipient means, who is non-taxable recipient? Unregistered individual for personal purpose, trust for charitable activities, government for other than business or commerce. I gave an example there. Individual importing for personal purpose, example Mr. Arvind, a CA student, subscribed for Office 365. I gave you that example, na, that one. Then government importing for other than business or commerce. So 360-degree video conferencing solutions imported from Cisco WebEx by government. So this is not for business purpose, to interact between the officers, okay, government. Then charitable trust, example Swami Nityananda Trust imported architect services for construction of Kailasa for advancement of spirituality. that will also be coming under exemption. Okay, these are examples for exemption, you understood. Then next one, no, but don't laugh here, I am serious. So this guy is amazing actually. So because this guy is an inspiration to one big sector of community. Okay, so see the way he is earning money, the way he is living his life with babes. So that you know, it's not that easy, you know. Everyone cannot become like this, correct? People will not trust. So you are all, how many of you single, I don't know. One girl also not trusting you. But see this guy, how many girls are trusting him? What a crazy guy he is. And then NTOR, non-taxable online recipient, already we discussed. Any unregistered person receiving OIDR services or registered person is registered only to deduct TDS. So this is about import of service in detail. I mean, whatever examples I gave, all those things I have given here, that's why no need to make anything. Okay. Now come back. You understood now import of services point. Once more, import of service, what is the exemption? Other than OIDR by NTR, exempted. Then conditions for RCM, no. Any non-applicability of RCM? Yes. One case, import of OIDR services by NTOR. Three definitions you should know. NTOR, OIDR, NTR. You know that. NTR, individual, trust, government. NTOR, any unregistered person or registered only for deducting TDS. And OIDR, any service which is provided over internet. Then look into the next one, R, renting of motor vehicles. Come back to page 55, renting of motor vehicles. In case of renting of motor vehicles, we have 4 exemptions. So in renting of motor vehicles, who is the supplier? The person who is giving the motor vehicle on rent. Who is the recipient? The one who is taking on rent. Owner of the motor vehicle is the supplier and the person who takes on rent is the recipient. 4 exemptions we have. First exemption, hiring of a motor vehicle that can carry more than 12 passengers given on rent to a state road transport undertaking. Example, a private bus operator gives a private bus on rent to SCTC, State Government Road Transport Corporation, for which they get some rental. That rental will be exempted. But what is the condition here? To whom they should be giving it on rent? State road transport undertaking. What should be the capacity of the motor vehicle? More than 12 passenger, including driver seat, excluding driver seat, excluding driver seat, because 12 passengers means excluding the driver seat. Now what type of motor vehicle it should be? Electric motor vehicle or any motor vehicle? Any motor vehicle. They did not specify it should be electric motor vehicle. It can be electric or non-electric motor vehicle. But see the second point. You tell me what is the difference between first point and the second point? First point, any motor vehicle. Second point is electric motor vehicle. In the first point, so it should be to a state road transport undertaking. But in the second point, it is to a local authority. And in both cases, capacity should be greater than 12 passengers. Answer my question. I have an electric motor vehicle, capacity more than 12 passengers. I gave it to state road transport undertaking. I got some rental income, taxable or exempted? Exempted, 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 not taxable, exempted, because in the first point, it can be normal vehicle or electric vehicle, both are covered. So due to that reason, there it will be exempted. Next, I have a normal vehicle, please concentrate. I have a normal vehicle, non-electric vehicle, capacity more than 12 passengers, which I gave on rent to local authority. I got some rental income, taxable or exempted? Taxable. Like this they will twist. So please write down somewhere. You put a sticky note and you write down. Renting of electric vehicle, renting of electric vehicle, renting of electric vehicle greater than 12 passengers, renting of electric vehicle greater than 12 passengers to state transport undertaking, renting of electric vehicle greater than 12 passengers to state transport undertaking, hyphen. What is your answer? exempted. To state transport undertaking hyphen exempted. Next point, renting of non-electric vehicle. Renting of non-electric vehicle greater than 12 passengers to local authority. Renting of non-electric vehicle greater than 12 passengers to local authority hyphen exempted or taxable? Taxable. Okay, then come back. So what are the two exemptions? Tell me. I have a motor vehicle, any motor vehicle that can carry more than 12 passengers. I am giving on rent to a state transport undertaking. Second point, I have a electric motor vehicle that can carry more than 12 passengers. To whom I am giving on rent? Local authority. See the third point, I have a motor vehicle that can carry goods. To whom I am giving on rent? Goods transport agency. Now whatever rental income I receive will be exempted. Then fourth exemption, you see, I have a bus which I am giving on rent to a person. Say you are taking the bus on rent and you are providing transportation service to school by way of transporting their students, faculty and staff. You understood? You are providing transportation services to school here. School is there. School, what is what is the meaning of school here? Up to 12th standard or equivalent. Okay, there is an education institution up to 12th standard or equivalent. You are providing the transportation service to that education institution and you take the motor vehicle on rent from me. Now whatever rental income that I get will be exempted. Come on, tell me what are the four exemptions. Number one, hiring of motor vehicle that can carry more than 12 passengers to state transport undertaking. Number two, hiring of electric motor vehicle greater than 12 passengers to a local authority. Number three, hiring of motor vehicle that can carry goods to a goods transport agency. Number four, hiring of bus to a person who is providing transportation service to educational institution up to 12th standard. These four cases exempted. All other cases, renting of motor vehicles will be taxable. Wherever it is taxable, it will come under RCM if three conditions are satisfied. Please check those three conditions. What are the three conditions? Supplier should be other than body corporate. Sir, who is a body corporate? Body corporate means private limited company or a public limited company or body under any law for the time being in force except LLP. LLP will not come under body corporate. In GST, LLP will come under firm, partnership firm. LLP will not come under body corporate. Is it clear? So, what should be taken as the body corporate here? Private company or public company or body under any law. Body under any law means ICI. ICI is a body corporate. SEBI is a body corporate. LIC is a body corporate. Okay, RBI is a body corporate, like that. Okay, so just write down somewhere over there. Here itself you write down. So who is a body corporate? Who is a body corporate? Body corporate means, so company. Company, when I say, it can be private limited company or public limited company. Okay, company or body under any law. Or body under any law. In brackets write down, LLP is firm but not body corporate. But not body corporate. So body corporate means company or body under any law, but LLP will not come under body corporate. So what is the first condition? Supplier should be other than body corporate, means firm or individual, etc. Then recipient should be body corporate and the rate of GST should be 5%. All these are and means what? Cumulative conditions. All these three conditions should be satisfied, then only RCM. So tell me what are the three conditions? Come again. Supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. And if any one condition not satisfied, it will be coming under FCM. So who will pay GST? Supplier will pay GST. Now come on, tell me about renting of motor vehicles. 4 exemptions. After 4 exemptions, what are the 3 conditions? Supplier other than body corporate, recipient body corporate, rate of GST 5%, and any one condition not satisfied, FCM. Understood this? Renting of residential property, already you know pa. Renting of residential property, what is the exemption? 2 exemptions we have for renting of residential property. What is that? Residential property for residential purpose to an unregistered person. Then residential property for residential purpose to a registered individual for family stay. And any condition for RCM? Yes, recipient should be registered. Then only it will come under RCM, otherwise it will be FCM. So 2 cases we have exemption, and recipient should be registered. Basically, if recipient is unregistered, it is exempted. It's already covered there. So that's why I have given not applicable. So recipient should be registered. So this is about SIRR in detail we have seen. We'll take a break and thereafter we'll continue with the remaining points in RCM. So look into the next one. C for copyright services. In case of copyright services, basically original literary, dramatic, musical work and artistic work, all these cases it should be by the individual. Okay. So in case of original literary, who is the supplier? Author. In case of dramatic works, who is the supplier? Again, the person who writes the story. And musical works, the music director. Artistic works, again it will be the one who makes the paintings, drawings, etc. So all these cases, basically copyright will be given to an individual only. You understood? So they are giving the copyright to any other person. It will be taxable under RCM. Okay. And so for original literary, we have one condition, that is we don't have any exemption. If you see all these 4 cases, there is no exemption. So what are the 4 copyrights that we have seen? Original literary, dramatic, artistic and musical. All these 4 cases we don't have any exemption and we don't have any conditions for RCM. But only in one place we have non-applicability of RCM. What is that? In case of original literary, the author can opt to pay GST under FCM. If the author opts to pay GST under FCM, for the next 1 year, there is a lock-in period of 1 year. For the next 1 year, the author only will pay GST under forward charge mechanism. Now, here, sir, why they will be going for FCM when they have the RCM option? They can make the recipient, that is a publisher, only to pay GST. Na? Why they are going for FCM? Here, simple. If my outward supply is covered under RCM, I cannot take ITC on my inward supplies due to that reason. You understood? If my outward supplies is covered under RCM, then I cannot take ITC on my inward supplies. So I will go for FCM option. So in order to take the ITC on my inward supply, but the moment I go for FCM, for the next 1 year, I have to pay GST only under FCM. I cannot shift for RCM. You understood? But RCM to FCM, no problem. Anytime it is possible. But FCM to RCM, so only 1 year, after 1 year only it is possible. 1 year means 1 financial year or 1 year from the date of exercising the option? 1 year from the date of exercising the option. See here. If author opts to pay GST under FCM, lock-in period 1 year from the date of exercising the option. Then look into the next one, G, that is goods transport agency services. In case of goods transport agency services, we have 3 exemptions. Notified goods. What are those notified goods? You have to remember this 6 notified goods. Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural or man-made disasters, defense and military equipment. These 6 notified goods, if transported through GTA, some freight will be collected, na? That freight will be exempted. There is no GST on that freight. So you need to remember what are this list of goods, 6 notified goods. What is that? Number 1, agricultural produce. Number 2, food grains. What and all will come in food grains? Rice, then pulses, dals, these and all will come under food grains. And next, including flours and pulses. Flour means powder form, that is gram flour, wheat flour, maida, atta, etc. And then next, milk, salt. Third is organic manure. So instead of pesticides and fertilizers, we use organic manure which is made up of cow dung. So that is organic manure. And then next we have newspapers and magazines. Then relief material for natural and man-made disasters, defense and military equipments. Once again, tell me what are the 6 notified goods? Come on. Agricultural produce, food grains, including flours, pulses, milk and salt. Then organic manure, newspapers and magazines, relief materials, then defense and military equipment. Then second exemption you see, if the recipient is individual or HUF or AJP and they are unregistered and not having a factory, then the GTA service provided to them is exempted. So recipient is individual or HUF or artificial juridical person and they are unregistered and they don't have factory. If the GTA service is provided to them, the freight collected from them will be exempted. Third point, recipient is registered only to deduct TDS under section 51. Somewhere already we have come across this point, recipient registered only to deduct TDS. Where is that? NTOR. Sir, what is the meaning of that? Recipient is registered only to deduct TDS means they are registered under GST only for deducting TDS and they don't have any other transaction. So who are those people who are registered only to deduct TDS? As we have TDS TCS chapter, we will be learning there, but now I am just giving you. So basically TDS under GST is applicable in case of government supplies, that is whenever we are making supplies to government while remitting the money to us, they will deduct TDS. So we will be learning in TDS TCS chapter as to who are the people who are registered only to deduct TDS. Okay. So if they are registered only to deduct TDS, basically who are they? Government. Now you are making supply to them, what service? GTA service. That GTA service will be exempted. Clear? So tell me what are the 3 exemptions for GTA services? Notified goods, 6 notified goods. Next, recipient is individual, HUF or AJP who are unregistered and not having factory. Third point, recipient is registered only for deducting TDS. So basically, who is a goods transport agency? Any person engaged in transportation of goods by roadways. So write down transportation of goods, transportation of goods by roadways and issues a consignment note. Transportation of goods by roadways and issues a consignment note, that person is called as a goods transport agency. Then see the next one, government services. When we are talking about government services, we are referring to whom? Not only government but also court, tribunal, parliament, state legislature. Basically government services to business entities. Government includes central government, state government and local authority also. Okay. So here when I say government, so government means central government, state government or local authority, LA. Local authority means municipal corporation, municipality, gram panchayat, that will come under local authority. Now there are some 14 specific exemptions, you can see there 14 specific exemptions and then 2 general exemptions. In this case service is exempted, in all other case it will be taxable and then it will come under RCM. In that look into the specific exemptions. So right now we are into which case here? Services provided by government to business entities. So what are the exemptions? Number 1, Right to Information Act charges, RTA charges. Usually when you make some payment, RTA, you have to get this evaluated answer sheet for which you will pay some RTA charges. Now how much? 10 rupees. So the 10 rupees will be exempted, not only from you, even from any business entity if they get also, RTA charges is exempted. Then number 2, interdepartmental services. Interdepartmental service means one department of central government or state government providing service to another department of central government or state government. Example, so income tax department receives the service of state police department for the purpose of providing like security. Income tax department is going here, okay. So now what happens is that for the last few movies and all, one actor is getting 150 crores, 200 crores and all. Now this person for the last 10 years would have earned some 15,000 crores, 150 crores for one movie also you take, yearly one movie. Then 10 years, 10 movies. 10 movies into 150 crores is what? 1,500 crores. But really they would have paid income tax on that? No, they will not pay income tax on that and all. Now what these people will do? Definitely they will start a political party. When they start a political party, to protect their money, whatever they have earned, they need to protect. And the only way to protect the black money is by starting a political party. Now that if you see the flow, almost all actors who started political parties, they are merging their political parties with the BJP. Okay, Sarath Kumar went and merged, and yesterday PMK also, Mango Man also merged with so these people like BJP. And now what happens? Our Anna will be keeping quiet. So he will say, no, I will not merge because I am the alternative for DMK and ADMK like that. Now he will speak something. Already he spoke also. He don't know anything about CAA and he spoke something about CAA. Okay. And that too one small tweet he has put. And media is waiting. Okay. So they have said, no, he is against CAA, Citizenship Amendment Act like that and all. Now definitely next term also BJP will come and he will not keep quiet, he will speak something. Now what BJP will do? They will be sending their income tax department, boss you go there. And now, so this Anna's house and all, lot of fans will be there always. So that too now political party has started. So one Anand like that one guy is there, okay. So, Bussi Ananda. So, one Anand, okay. So that guy will be politician now, okay. So now people will have fear, na, income tax officers and all bureaucrats. So they don't know anything. What if these people start hitting them and all? So that's why they will take the support of state police department. Now state police department providing the security to the income tax department, for which income tax department will pay some charges to the police department. This is called as interdepartmental services, and the money received will be exempted. You understood? So what is the first point in government service exemption? RTI charges. Number 2, interdepartmental services. Number 3, right to use telecom spectrum. Telecom spectrum refers to radio frequency waves which is used by the telecom operators for the purpose of voice communication or data communication. This telecom spectrum owned by whom? Government. And they are allocating this spectrum. To whom they are giving the telecom license? Telecom operators. Government is giving the telecom license to the telecom operators. And when the license is given here? Before 1/4/2016. For that license, now if any charges is collected, either one-time charges or annual royalty is collected, that amount will be exempted. Now look into the next point. What is the difference between third exemption and fourth exemption? Third and fourth exemption. Fourth exemption is what? Right to use natural resources allocated before 1/4/2016, only one-time charges. Third point, telecom spectrum. Fourth point, natural resources. Third point, both one-time charges and annual royalty. But fourth point, only one-time charges. In both cases, when it should have been assigned? Before 1/4/2016. Then see the fifth point. What is the difference between fourth point and fifth point? Both are related to natural resources. But fourth point is related to natural resources to any person. Assignment of right to use natural resources to any person. Whereas in the fifth point, assignment of right to use natural resources to an individual farmer. And when it should have been assigned? Before 1/4/2016 or any time? Any time. Fourth point, it should be assigned before 1/4/2016, but for the individual farmer it can be assigned any time. In fourth point, only one-time charges exempted, but in fifth point, any charges will be exempted. So let's try to understand what is that. usually lot of natural resources will be available beneath the earth, like uranium or bauxite or lot of gases and all, so ethane, methane, etc. So these natural resources which are there beneath the earth belongs to government. Now what government will do, they will be giving the right to extract this to some companies, so they are called as leaseholders. So these leaseholders will be paying one time charges for getting this right. That one time charges will be exempted. That is what assignment of right to use natural resources. But when it should be assigned? Before 1/4/2016. What about the annual royalty? Based on quantity extracted, they will be paid annual royalty. So that annual royalty will be taxable even if the right is assigned before 1/4/2016. Now for individual farmer, what right they will be giving? Agricultural land will be pooled by the government under Land Ceiling Act. There is something called as Land Ceiling Act. Beyond a particular acres, you should not own the land. If you are owning the land beyond a particular acres, so then that will be taken over by the government. We have a restriction that is called as Land Ceiling Act. So mainly to avoid the landlords, in lot of villages if you see that particular entire village land will be belonging to one person. And slavery, it's like they will be using the people only as slaves for the purpose of doing the agriculture. So that's where long back, to abolish this Jamindari and Jagirdari system, this Land Ceiling Act came. So under that Land Ceiling Act, they will be taking over the land, and which will be with the government. What government can do with this agricultural land? They will give it on a lease model to a farmer, for which they will be getting some royalty. That royalty will be exempted. Is it clear? Assignment of right to use natural resources to an individual farmer. Any time it may be assigned, any amount collected will be exempted. Understood these 3 points, 3, 4 and 5. So what are those 3, 4 and 5? First 2 points you remember, RTI charges and interdepartmental services. Then 3, 4 and 5. First, telecom spectrum. Telecom spectrum. When it should be assigned? Before 1/4/2016. What is exempted? Both one time charges and annual royalty. Super. Next one, natural resource. When it should be assigned? Before 1/4/2016. What is exempted? Only one time charges. Then next one, natural resources to individual farmer. When it should be assigned? Any time. What is exempted? Everything is exempted. Okay. Then sixth point, merchant overtime charges under customs. Customs department will be working, so even during non-office hours, night times, early mornings, Saturdays, Sundays, etc. Whenever we do imports and exports during this time, so we have to pay some extra charges to the customs department, because customs department is working overtime. So this extra charges what customs department collects is exempted. That is called as merchant overtime charges. For what? For working during non-office hours and holidays, they will get this. Then next, number 7, safety certificate charges. Safety certificate charges will be collected by the safety officer for issuing a safety certificate. So safety certificate is must for certain establishments like shopping complexes, cinema theatres, malls, hospitals, education institutions, like that. They need to get the safety certificate. So in that safety certificate should be obtained, for which a safety officer will inspect the premises and will be collecting a safety certificate charges, that is exempted. Then next one, consideration for tolerating an act. This point yesterday only I told you. You enter into contract with government, you breach the contract. When you breach the contract, you need to pay some damages to the government. That damages which is collected by the government will be exempted. So what are these 3 points here? First 2, RTI, interdepartmental. Next 3 related to assignment of right to use natural resources, etc. And next 3 points, what is that? Merchant overtime charges, safety certificate charges, consideration for tolerating an act. Up to this clear? Next point you see, share of profit petroleum. So what is this profit petroleum and cost petroleum concept we need to understand. So this profit petroleum and cost petroleum, first read this. Share of profit petroleum for assigning right to extract petroleum crude or natural gas. Government receives share in profit on extraction in addition to royalty. And even there is one concept of cost petroleum also connected to this. Cost petroleum is nothing but recovery of expenses by the leaseholder, which is also exempted. Now, this cost petroleum and profit petroleum in detail I have given in the exemptions. So, please give the page number reference here. Refer page number 173. Refer page number 173. See that cost petroleum and profit petroleum. So, basically this is like a revenue sharing agreement between government and the leaseholder. I will just give you little background. What has happened is that lot of leaseholders are getting the right to extract the crude oil and natural gas from the earth, and these leaseholders will pay some royalty to the government. The royalty is the only income to the government, but these leaseholders will become rich. Example, Reliance Petrochemicals. You know how Reliance became super rich? Only because of the petrochemical company. Reliance initially started as only Vimal, a garment manufacturing company. They were not successful and that they have closed, and then they started this petrochemical company. In that petrochemical company, so they have made superb profit because they will extract the crude oil or natural gas and they will be paying only royalty to the government. I am not talking about today, I am talking about last 50 years, the same story. All these leaseholders will extract the crude oil and they will pay royalty, but these people will become rich. And now government is thinking, why should not we get the profit also, share of profit? If we are not giving the right, how they will be able to do? So therefore, they have made it like a joint venture contract. So production sharing contract between government and leaseholder, where government assign right to extract petroleum, crude or natural gas, okay, and for which apart from royalty, government receives a share of profit from the joint venture. Now, first revenue will be generated. So the moment crude oil or natural gas is extracted, they will refine it and they will sell. So we get some sales revenue. From that sales revenue, so government will take annual royalty. What is the treatment of that annual royalty? Taxable. Why it is taxable? Sir, what if it is assigned before 1/4/2016? Even if it is assigned before 1/4/2016, it will be taxable because only one time charges is exempted. So this annual royalty taxable. And who will be incurring expenses in extracting this petroleum, crude and natural gas? Leaseholder. So leaseholder will recover his expenses from the sales revenue. You understood here? Here government and leaseholder, they will form a joint venture. When they form a joint venture, for what purpose they form a joint venture? To extract the petroleum, crude or natural gas from the earth. Once they extract, what they will do with that? They will be selling. When they sell it, they get a revenue na. From that revenue, first government will take its annual royalty, and to incur this, like to do this activity, someone should spend the money. Who will be spending the money? Leaseholder will spending the money, so they will recover their expenses. The recovery of expenses is known as cost petroleum, and that will be exempted. You understood? Now, whatever baki left, the balance left is known as profit petroleum. You understood? So how to arrive at the profit petroleum? Sale consideration minus annual royalty minus cost petroleum. The balance is known as profit petroleum. In this profit petroleum, a percentage will go to the leaseholder and a percentage will go to the government. That is agreed between the contract. That percentage which is received by the government is exempted. That's what we have seen. So share of profit petroleum is exempted, but that percentage of profit which is received by the government is not a supply. Why sir it is not a supply? Investment activity is not a supply. Who is investing in this business? Leaseholder. So therefore investment activity is not a supply. 4 points you need to remember. Royalty received by the government, taxable. Then cost petroleum, recovery of expenses, exempted. Share of profit received by the leaseholder, not a supply, not a supply. Share of profit received by the government, exempted. Sir, then this share of profit also, why are you not telling it as not a supply? Because they are not investing. Government is not investing. They are getting this profit because they gave the right to extract the crude oil. So therefore, this will be coming under supply and it will be exempted. Once again, what are the 4 points you need to remember here? First, annual royalty collected by government. What is the treatment? Taxable. Second point, so cost petroleum, recovery of expenses by the leaseholder. What is your answer? Exempted. Third point, share of profit received by the leaseholder, not a supply. Share of profit received by the government. Can you remember these 4 points? Yes. Then that is about this exemption. Share of profit petroleum is exempted. Now come back. Then see the next exemption, registration charges under any law. Come back to page 56. You just give the page number reference there related to cost petroleum and profit petroleum. 10th point, registration charges under any law. That is when you incorporate a company, you need to pay some registration charges. Same way, when you take a motor vehicle, purchase a motor vehicle, you need to pay registration charges. You need to register the motor vehicle na. Same way, when you buy a property, you need to pay some registration charges. All these registration charges which is collected by the government is exempted. Then 11th point, fee for birth certificate, death certificate, driving license, visa or passport. Sir, how these are services provided to business entity? Right now we are discussing of what? Services provided by government to business entity, but these are given for individuals na. Means a business entity is receiving the services for the sake of their individuals, that is employees. Say a company has taken a keyman insurance policy. For that keyman insurance policy, they need a birth certificate and death certificate. A company is sending their employees on site for abroad for training purpose, then they need to receive the visa and passport. A company which is into transport business, they need to get the driving license for their employees. So these 5 certificates, what are the 5 certificates? Birth certificate, death certificate, driving license, visa or passport, the money collected will be exempted from the business entity. The next 12th point, guarantee commission for guaranteeing the loans taken by public sector undertakings. Public sector undertakings will be taking the loans, and it is unsecured loans. What are public sector undertakings? Example, ONGC, IOC, Steel Authority of India. So these are some examples. Next, BEML, Bharat Earth Movers Limited. These are some public sector undertakings, nothing but a government company. Now the government companies, when they borrow money, so that borrowal will be guaranteed by the government. As government is guaranteeing the loan taken by PSU, these PSUs will pay a commission to the government. That commission which is received by the government for guaranteeing the loans is exempted. That is known as guarantee commission. Understood? Then next one, excess royalty collection contractor to the extent of variable royalty. What is this? This discussion also I have given in detail in exemption. So please give the page number reference there and take the page. 174 GST implications on excess royalty collection contractor. Excess royalty collection contractor. So what is this concept of excess royalty collection contractor, sir? Basically, the type of royalty that government gets will be a variable royalty, because depending upon the quantity extracted, they will pay royalty to government. See here, state government of Andhra Pradesh has assigned the right to extract natural resources to Messrs Reddy Brothers for a royalty of 10,000 rupees per ton. Suppose if Reddy Brothers has extracted 100 tons, 100 into 10,000. If they have extracted 80 tons, 80 into 10,000, like that they will pay the royalty. But government don't need variable royalty. They want fixed royalty because their expenses will be fixed. For that purpose, they have appointed one person called as ERCC, Excess Royalty Collection Contractor. This excess royalty collection contractor will be receiving the variable royalty and will be paying fixed royalty to government. Is it clear? What is the advantage of this to ERCC? Suppose if variable royalty is more than fixed royalty, that is his income, Then what is the advantage of this arrangement to government of Andhra Pradesh? Even if variable royalty is less than fixed royalty, they get a constant amount. That is the advantage to government. You understood? Now in this case, for example, 50 lakhs is the variable royalty and 60 lakhs is the fixed royalty. On that 50 lakhs, Reddy brothers will pay GST under RCM. So because services provided by government to business entities covered under RCM na, so Reddy brothers anyhow will pay GST on 50 lakhs. Now ERCC is remitting how much to state government of Andhra Pradesh? 60. Now whether they need to pay GST on 60 lakhs? No. So ERCC is exempted to the extent of variable royalty. What is the variable royalty? Already GST paid 50, which means ERCC is required to pay GST only on 10 lakhs. You got the clarity? Why, sir? Suppose if they are also paying GST on 60, these people also paying GST on 50, that is meaningless. So why double taxation should come? That's why what they are telling, ERCC is exempted to the extent of variable royalty. Understood? Suppose if the variable royalty is 65 lakhs and fixed royalty is 60 lakhs, then anyhow on 65 lakhs, Reddy brothers would have paid GST. So ERCC is fully exempted. They are not required to pay any GST. So what is the exemption you need to remember? ERCC exempted to the extent of variable royalty. Now come back. So see this page 57. So that is about excess royalty collection contractor. Then 14th point, fee for granting national permit to goods carriage to operate throughout India or contiguous states. Generally, when vehicles and all going from one state to another state, yellow board vehicles, they need to pay some permit charges in the other state. These permit charges which are collected by the government, those permit charges will be exempted. These are the 14 exemptions that we have with respect to services provided by government to business entity. In these 14 exemptions, whatever may be the amount involved, that amount will be exempted. That can be 5 rupees or 50,000 or 1 lakh. Full amount will be exempted for these 14 exemptions. Clear here? Now, you don't have to by heart these 14 exemptions, but you should know when we see one point, is it covered under these 14 exemptions or not? Okay. Example, just now we have discussed this. You don't remember anything. Okay. Now, listen carefully. There is hotel Taj Hotel. Taj Hotel requested police department to provide the security outside the Taj Hotel, for which Taj Hotel has paid some money to police department. Is it covered anywhere in the list of 14 exemptions? No, it is not covered. How you are able to tell? So interdepartmental will not come. Why interdepartmental will not come? So one department to another department. So it's nowhere. We have not discussed this. Correct? So balancing figure is what? Taxable. You understood? You don't have to by heart this. The moment when you see in the question, you will automatically get the answer as to whether it is covered in the list or not. Okay. One more example also I will give you. That is, there is an advertising company. Advertising company wanted to keep a hoarding, and for keeping the hoarding, they have paid some charges to the local authority for keeping the hoardings. You know, these pillars and all, we will be seeing lot of flute boards, lot of real estate ads and all they will be putting, you would have observed. So Casa Grande, 50 lakhs only flat, like that and all they will be putting. So these ads, they need to take permission from local authority and they need to pay some charges to the local authority. Without taking permission, if we put and all, they will remove that hoardings. Okay. So these charges which are paid to the local authority will be coming under taxable or exempted. Anywhere in the 14 exemptions, therefore it will be taxable. You understood? Then one more case. There is a contractor who entered into contract with the government to construct the housing for a slum people, and he could not complete the construction on time, for which he paid 10 lakhs as damages to the government. So is it taxable or exempted? Where? Consideration for tolerating an act. Are you getting? Then there is a builder who paid money to state government for getting a this completion certificate. For the purpose of project, they need to get a completion certificate. To get the completion certificate, they paid some charges. Is it taxable or exempted? Taxable, because what are the 5 certificates which are covered? Birth certificate, death certificate, driving license, visa, passport. This completion certificate nowhere in the list. Clear or not here? So you need to revise this. If you are not able to recollect anything in the exam hall, don't worry, you will not. You prepare 100 times also, everything at a time will not come in your mind. But the moment when you see the question paper, you read the question, you are able to know whether it is exempted or not. That is the target. If you are able to recollect by seeing the question, okay, then yes, you have learnt. That much you should be learning. You got it? Not necessary to recite everything. Whatever 14 points, again to tell 14 points, practically not possible. So then why am I making you repeat this? Because when you speak, you will register that in your mind, and when you see the question, somewhere it remembers, it is there in our mind. So it appears that we have read this already, exempted. So we don't know what is it, taxable. Purida. So the moment you see the question, it appears that somewhere I read it, exempted. I don't know this, I don't know what it is also. Then what is the balancing figure? Taxable. You understood? For that reason. Then look into 2 general exemptions. So 14 specific exemptions we have seen. Now 2 general exemptions. When these 2 general exemptions will come? If a service is not covered under 14 specific exemptions, then the general exemption will be applicable. See the first general exemption. Services to a business entity whose aggregate turnover during previous year does not exceed the threshold limit. But this exemption is not applicable in case of renting of immovable property. I gave you an example of Taj Hotel. Taj Hotel requests police department to provide the security to the Taj Hotel, for which Taj Hotel has paid 4,000 rupees. Okay. In this situation, is it covered under 14 exemptions? Not covered under 14 exemptions. See the first general exemption. Whether the first general exemption is applicable in this case? No. Why not applicable? Taj Hotel turnover during the previous year definitely exceed threshold limit. So first general exemption not applicable. See the second general exemption. What is the second general exemption? Value should not exceed 5,000. In this case, how much is the value? Only 4,000. Therefore, it will be exempted. Understood or not? So this information alone, you just make note. Illustrations on government services to business entities. First one, services provided by state police department, services provided by state police department. If you are not able to see this, here and write. Services provided by state police department to Taj Hotel in brackets registered for a consideration of rupees 4,000. For a consideration of rupees 4,000. How you need to check? First you need to check what? Is it covered under 14 specific exemptions? Covered or not covered? Not covered. So that is the first thing we will write. Not covered under specific exemptions. Okay. Then what is their turnover during previous year? Exceed threshold limit or does not exceed threshold limit? Exceed threshold limit. So the first general exemption also not applicable, correct? as their, how you know that their turnover during previous year exceed threshold limit? Because they are registered. As they are registered, as they are registered, comma, their aggregate turnover during previous year exceed threshold limit. Okay. Then, so first exemption not applicable. What is the second exemption? Value does not exceed 5,000. Is it covered here? Value how much? It does not exceed. So, as value of supply, less than or equals to 5,000, comma, the said activity is exempted. Understood here? Then one more question. You tell me the answer for this. Charges collected by Chennai Municipal Corporation from an advertising company for placing hoardings and such advertising company commence their business during current year. Charges collected by Chennai Municipal Corporation from an advertising company for placing hoardings and such advertising company commence their business during current year, and the charges involved is rupees 20,000. Charges collected by Chennai Municipal Corporation from an advertising company for placing hoardings and such advertising company commence their business during the current year, and the charges involved is rupees 20,000. Now, what is your answer? Is it taxable or exempted? Think, apply and tell the answer. What is your answer? Exempted or taxable? One answer. Exempted. Exempted is the correct answer. Why it is exempted? First, specific exemptions not covered, and their turnover during previous year does not exceed threshold limit. Why it does not exceed threshold limit? Because they commence business. Due to that reason it is covered under first exemption, therefore it is exempted. But value, sir, see, both the conditions need not be there. It is not conditions, it is either this or that. Either their turnover during previous year does not exceed threshold limit, or the value of supply does not exceed 5,000. Not that both should be satisfied. Is it clear? So therefore write down the answer. Not covered under specific exemptions. Not covered under specific exemptions. Not covered under specific exemptions. And again, so as their aggregate turnover during previous year less than or equals to threshold limit for registration. Because they commence business current year only. the said activity is exempted. The said activity is exempted. Okay. Last, one more illustration. Third illustration, listen, you can make note. State government of Tamil Nadu provided shop on rent for rupees 6,000 to a flower vendor, whose aggregate turnover during previous year less than or equals to threshold limit. Now tell me, taxable or exempted? Huh? Their turnover during previous year does not exceed threshold limit. That is not applicable for renting of immobile property. You understood? So first general exemption is not applicable in case of renting of immobile property. See this, not applicable for renting of immobile property. So what is that? First we need to check, is it covered under specific exemptions? No, not covered under specific exemptions. Not covered under specific exemptions. Then even though turnover during previous year does not exceed threshold limit, First you should write not covered under specific exemptions. Second, even though their turnover during previous year does not exceed threshold limit, comma, the said activity not covered under specific exemption. The said activity not covered in first general exemption. As the value does not exceed, value exceeds or not exceeded? As the value exceeds 5,000 rupees, comma, second general exemption not applicable. Therefore, what is your answer? Therefore, the said activity is taxable. The said activity is taxable. Okay, sir, but who will pay GST? So, for renting of immobile property, so if the recipient is registered, if the flower vendor is registered, they will pay GST. If the flower vendor is not registered, government only will pay GST. Okay. So, but here it is given to flower vendor whose aggregate turnover during previous year does not exceed threshold limit, means not registered. The said activity is taxable, and continue, as the recipient is not registered, comma, it is covered under FCM or RCM? FCM. It is covered under FCM. But sir, you said if the recipient is unregistered, it is exempted. That is in which case? Residential property to unregistered person. But this is what? Government is giving a shop. Shop is residential property. Shop is what property? Commercial property. So that will not be coming under that exemption. Okay. So commercial property we studied always taxable, na? Therefore, this will be taxable, but it's who will pay GST? Either supplier or recipient. If the recipient is registered, recipient will pay, otherwise supplier will pay. That is in case of renting of immobile property. Understood here? So tell me what are the two specific exemptions? Come on. First is two general exemptions. First general exemption, if they are providing services, what service? Other than renting of immobile property. To whom? To a business entity whose turnover during previous year does not exceed threshold limit, then it is exempted. What is the second general exemption? Value of supply does not exceed 5,000 per invoice. Now see this important point. In case of continuous supply of service, 5,000 should be seen for a financial year. Okay, generally 5,000 per invoice. But if it is a continuous supply of service, what is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligation is known as a continuous supply of service. Sir, renting is continuous supply of service or not? Yes, renting is continuous supply of service. It takes more than 3 months, usually renting. So rental agreement will be for 11 months or 12 months, 3 years like that. So therefore definitely it takes more than 3 months and involves periodic payment obligation. So it's a continuous supply of service. You just write down there the meaning of continuous supply of service. So what is continuous supply of service? A service which takes more than 3 months to complete, and involves periodic payment obligations, then it will be called as a continuous supply of service. A service which takes more than 3 months to complete and involves periodic payment obligations is continuous supply of service. So the moment when you see like this in question, so don't apply 5,000 for per invoice. 5,000 you need to apply for per annum. For example, they will give 2,000 rupees per invoice per month, like that they will give 2,000 rupees per invoice per month, like that they will give. So you will think it is 2,000 less than or equals to 5,000, therefore exempted. No, per month is given, but per annum how much it will be? So 24,000. So definitely it is more than 5,000 rupees, therefore it will become taxable. Now, so we have seen, right now we are into what discussion? Services provided by government to business entities. In these services provided by government to business entities, we saw exemptions only so far. 14 specific exemptions and 2 general exemptions. Any conditions for RCM? No, we don't have any conditions for RCM. Generally, government service to business entity is covered under RCM, but in 2 cases, it will not be coming under RCM, FCM will be applicable. What are the 2 cases? First point already we studied. What is that? Renting of immobile property to whom? Unregistered business entity. See the first point. In case of renting of immobile property to unregistered business entity, FCM only will be applicable. Then second, that is an amendment here. Indian Railways will always be coming under FCM. Indian Railways also government only na, but their services will always be coming under FCM. So even though it is any service, RCM also not applicable, always Indian Railways will pay GST under FCM. That's the latest amendment they have added. So what are the 2 cases? Services provided by government will not come under RCM. Renting of immobile property to an unregistered business entity or services provided by Indian Railways. Then look into the next one. So we have completed up to Sir, CG, and in that GOT, G completed, O for overseeing committee. Overseeing committee services. To whom the overseeing committee will be providing services? To RBI. You just write down there, overseeing committee services to RBI. So overseeing committee is appointed only by RBI, and no exemption, no condition for RCM, no non-applicability of RCM. So always RBI only will pay GST under RCM on the overseeing committee services. Then transferable development rights, floor space index and long term lease of land. Now we need to understand, so what is this floor space index means what, TDR means what, etc. Okay, so just give me one sec. Okay, so have a look into this video, so that explains what is FSI and TDR. Okay. So first we are going to learn about FSI. So FSI means what? Ratio of building or complex to the total area of the plot on which it is built. Means plot area 2000 square feet. On the 2000 square feet, how much we can construct is known as FSI. So 2000 square feet, 2000 only we can construct. No, multiple floors we can construct na. So 3 floors, 4 floors also we can construct. Each floor also will have 2000, 2000, 2000 like that. How many floors? So the total built up area divided by plot area is known as FSI. Say this. Suppose if the plot is 10,000 square feet and the total built up area, one big building they are constructing, that is 20,000 square feet. So what is FSI? 2. How it will be 2? 20,000 divided by 10,000. Land at 10,000, but they constructed 20,000. So therefore constructed area divided by plot area is known as FSI, and this FSI in this example is 2. FSI of a particular area is determined by the municipal authorities. Sir, how do we know, like what is the FSI for our area? Municipal authority will tell. So for example, in Mylapore, Nungambakam, Annanagar, these are all some prominent areas, Adayar, wherein the FSI will be 3 also possible. That's where they will be making ground floor plus 3 floors, 4 floors and all they will be constructing. But if the width of the road is small, they will not give that much of FSI. They will give hardly ground floor plus 2 floors only permitted. So 3rd floor not permitted. Some places where it is constructed previously long back, it would have been some river, and now that river is dried. Now in that case they will tell ground plus 1 only permitted. So means they will give 1.5 only as the FSI. They will not give more than that. So like that FSI is determined by the municipal authority. They will fix that. Now let's see what is TDR. So basically TDR is what? Transferable development rights. What is the purpose of the TDR? It is a mechanism for hassle-free acquisition of land. So why that acquisition of land is required by the government? Mainly for the purpose of construction of rail project like metro project, etc. and all. So they will be doing road widening, etc. Say this. So there is a person who is having a building. Now government is coming and telling, so there is a metro line which is coming in your area. So right now it is happening in Chennai. If you see in Chennai, lot of places they are just like the demolishing and going. So best classic example, ICI you take. Opposite ICI, one building was there, petrol bunk was there. Opposite ICI, one petrol bunk was there. Completely they demolished. And there was one church also. Church full parking and all was there. Completely that building and all got demolished. Okay. So why? Because there is a metro line which is coming. So due to that reason, they will demolish that building. So that's where many places in the name of this metro project, they have demolished the building. So like that government is telling, in this route metro line is coming, so we will demolish your building. For which building owner is telling, no, no, don't demolish my building. For which what government officer is telling, don't worry, we will give you TDR. So for which he is thinking, done, deal okay. Now what is the purpose of the TDR? Now see here, TDR is an alternative to compensation. Actually this concept is known as compulsory acquisition. In income tax you would have come across compulsory acquisition. So here he don't want to sell, but government has acquired his property, for which either he will be paid a compensation or he will be given a TDR. TDR is like a virtual land. What he can do with the TDR, you see. Now the owner can use this TDR to exceed the FSI of any area where he wants to construct. So what is the hack for FSI? What is the hack for FSI? TDR. FSI says this much only you can construct, 2 floors only you can construct, but if you have TDR you can construct more than that. Understood? They created a rule and they created a hack also to break the rule. You understood? What is that? If you have TDR, you can increase. What is the advantage of this to the landowner? I am transferring my property. The property owner lost his building, so he got a TDR. Now in another place where I am constructing 2 floors, using this TDR I can construct 3 floors, 4 floors also. What is the advantage to me? More floors means more money, correct? I can give it for rental. Yeah, basically commercial projects I am talking about, not residential projects. Commercial project, one commercial complex, 2 floors means say only 2 floors shops I can give on rent. Suppose 4 floors means extra rent I will be able to generate na. So therefore that is the advantage. What is the advantage of this to the government? Government, rather than spending money out of their pocket, they will be giving this TDR. So cash outflow minimized to the government. Understood? Now sir, can the owner use this not only for his property, can he sell it to any other builder also? Yes. So he can also sell this to any other builder who requires more FSI, okay. And average rate of TDR in Mumbai is somewhere like 4,000 to 6,000 rupees per square feet they will be selling. So now this is known as transfer of TDR. So I have a TDR, now you are constructing one commercial complex, now you want to increase the number of floors, you are a builder, you can acquire the TDR from me or you can acquire the FSI from me. You understood? So as a landowner I will be transferring the unutilized FSI, or I will be transferring the TDR, or I can give the land on lease. To whom? To promoter or builder. On which who will pay GST? The promoter or builder will pay GST. But in this regard we have got one exemption. What is that exemption? Read there. Proportionate exemption to residential units booked before completion certificate or first occupation, whichever is earlier. So this information I have given in detail in the exemptions. You see that in exemptions you take page number 181, page 181. There is one chart, have a look into that chart, page 181, and you give the page number reference here, refer page number 181. Say this, there is a promoter or builder and this promoter or builder is having a invert supply of TDR, FSI and long term lease, for which the promoter or builder will pay a consideration of 10 lakhs. That 10 lakhs either it can be monetary or it can be non-monetary. What is the treatment of this 10 lakhs? Is it taxable or not? Yes, and it is taxable under RCM. So who is required to pay GST on this 10 lakhs? The promoter or builder is required to pay GST to government. Now what is the rate of GST? 18%. So 10 lakhs into 18%, 1,80,000. But in this 1,80,000 we get a exemption. To what extent we get a exemption? Now see this. Using this TDR, FSI and long term lease, the promoter or builder is making construction. How many constructions he is making? 40 units commercial and 60 units residential. So total how many units he is constructing? 100 units he is constructing. In this 100 units, how many units are residential units? 60 units residential units. Out of the 60 units residential, how many got booked before completion certificate? 25. Means you need to pay GST on this 25. Yes or no? So as he is required to pay GST on this 25 units, proportionate to the invert supply, the exemption is available. Why sir exemption they are giving? Because the rate of GST applicable to the promoter or builder is 1.5% or 7.5% without ITC. You don't have to remember the rate. You don't have to remember the rate. The applicable rate for promoter or builder is 1.5 or 7.5% without ITC, which means they cannot take ITC on their invert supplies, which means on invert supply also they need to pay GST, which they cannot take ITC. On outward supply also they need to pay GST. Then they will have huge tax burden, which they in turn pass on to the buyer. Then the price of the flat will increase, residential units will increase. That's why they have given the exemption. What is it they are telling? To what extent the exemption is available? Proportionate to residential units. What is the number of residential units booked before completion certificate? 25 divided by total number of units in the project. What is the total number of units in the project? 100 units. So what is the proportionate exemption? 25 divided by 100. So 1,80,000 into 25 by 100, that is 45,000 rupees will be exempted. So effectively they need to pay 1,35,000. So you tell me the formula for this exemption. Come on, from this example you tell me what is the formula. Value of inward supply of what? TDR, FSI, long term lease into 18% into numerator denominator. What is numerator? Units booked before completion certificate or first occupation, whichever is earlier, divided by total number of units in the project. Suppose if units are having different area, different carpet area, then you don't take the units as a ratio, you take the carpet area as a ratio. Now reframe the formula, come on. Value of inward supply of TDR, FSI and long term lease into 18% into carpet area of residential units booked before completion certificate divided by total carpet area of the project. Reason being, here we took units because all units will be of the same size, but literally in a project will the all units be of the same size? No, some are 2 BHK, some are 3 BHK, like that it will change na. That's why what should be taken as a ratio for apportionment? You take the carpet area. You got the clarity about the exemption here? So that is this I have given. Value of inward supply. Above this chart you can see value of inward supply into 18% into floor area of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total floor area of all the flats in the project. Okay, so the divided by total area should be taken. So that's why, so this 40 plus 60 total we are taking. Got the clarity about this? Once again, can you tell me what is the exemption? Value of inward supply. Inward supply of what? TDR, FSI and long term lease into 18% into floor area of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total floor area of the project. Then next, is there any condition for RCM? No. Non-applicability of RCM also no. Then look into the S point, that is sponsorship services. In case of sponsorship services, basically who is the supplier and who is the recipient? The one who receives the money is the supplier, the one who may pay money is the recipient. Who will pay money? Sponsorer will pay money. The one who is organizing the event will be the supplier. The one who sponsors will be the recipient. What is the exemption in case of sponsorship services? If the sponsorship is with respect to recognized sporting event, then it will be exempted. So generally BCCI or any recognized sports body like Indian Hockey Federation, if they conduct any sporting events, if they collect any money, sponsorship money, that will be exempted. So therefore sponsorship money collected by recognized sports body is exempted. Then is there any condition for RCM? Yes, there is a condition for RCM. Recipient should be body, corporate or firm. What if the recipient is other than body, corporate or firm? It will be coming under FCM. Then look into the next one, agent services. In case of agent services, already we know who are the 5 agents covered. First one, insurance agent. To whom insurance agent will be providing service? Insurance company. There is one exemption for insurance agent. If the insurance agent is working in rural area, the commission earned by the insurance agent is exempted. See this, service of business facilitator or business correspondent in rural area is exempted. You understood? And we don't have any condition for RCM or non-applicability of RCM. Then insurance agent service, rural area exempted, urban area will be taxable, And who will pay GST in that case? The insurance company will pay GST under RCM. Then look into the next one, recovery agent. Recovery agent is basically getting money from the bank. So all these people are in the banking sector. So a recovery agent will get money from the bank for doing the recovery of outstanding loans, for which that commission they will not pay GST, bank will pay GST under RCM, and we don't have any exemptions here. Direct selling agent, if you see, direct selling agent basically do the marketing of banking products. Like we get a call, say that you have a pre-approved loan, you need any credit card, like that, and a lot of spam calls we will be getting. So that is what direct selling agents will do. Direct selling agent services to bank, they get a commission, again bank only will pay GST under RCM. But there is one condition for RCM, please check that condition. So direct selling agent should be other than body corporate or firm. What if direct selling agent is body corporate or firm? It will not come under RCM, it will be FCM. So what is the difference between sponsorship service and direct selling agent service? Both places there is body corporate or firm. Observe the difference. In case of sponsorship services, recipient should be body corporate or firm for RCM. But in direct selling agent service, the supplier should be body corporate or firm for RCM. Then business facilitator to a banking company. Basically business facilitators are like agents who will be doing money remittance activities. Money remittance activities means what? So ATM is not there in that area. When ATM is not there in that area, they will give the cash and they will be taking your account details, so your money will get debited. So this is known as money remittance activity. So lot of people are there into this business facilitator. So this money remittance activity, they get a commission. So if they are working in rural area, the commission earned by them will be exempted. If they are working in urban area, then the commission will be taxable. And who will pay GST? Banking company will pay GST. You just write down, business facilitator is engaged in money remittance activities. Business facilitator is engaged in money remittance activity. Money remittance activity means what? Just like a ATM they are working, okay, movable ATM. Or in the place where there is no ATM, they will be providing the money remittance. I have seen this in Chennai itself. So in Mount Road, near Mount Road, there is one vehicle. In that vehicle there is a ATM. So Mount Road, that near this Ritchie Street. So I went for purchase of computer parts for our office, and at that time, so therefore like the person was asking me to pay by cash. Card means 1% extra, sir, like that shopkeeper was telling. So I was searching for ATM, nearby ATM, and one person said, sir, there is one van over there, you go there. I didn't understand, van, how ATM will be there. So then literally here one van is there, which is parked over there, and inside that van they have kept the ATM machine. It's a movable ATM, and I use the card and I have withdraw the cash. And I asked that person, how is it working? Is it the bank which is doing? No, sir, we are actually dealers, so we will be having association with the bank. That's a very good business. They are earning monthly 20 to 25,000 rupees by just their work is morning they need to take that van to the bank. The bank will load money in the ATM machine, and once the money is over, again they need to go to the bank and they need to refill it. Now for which they get a commission. So that commission will be somewhere 1% to 1.5%. So now people who are withdrawing cash in this, every time we withdraw the cash, for example, I have withdrawn 5,000 rupees. 5,000 rupees, 1% means what? 50 rupees he will get a commission. You understood? So like that, there is no problem for him, just money will be refilled by the bank and it will be withdrawn and he will get some money. So I asked him on an average how much you will be earning. So 20,000 to 25,000, that's a pretty good business. So which means if you have 4 or 5 vans like that also, so settled it is. You don't need any education, you don't need CA, etc. and all. So easily we can settle. And moreover, liability to pay GST on the commission is on home bank. They are not even required to register and pay GST also. Their outward supply is covered under RCM. That is what money remittance activity is. Suppose if they are working in rural area, the commission will be exempted. Then next, look into the last one, business correspondent, agent of business correspondent to business correspondent. Sir, who is business correspondent? Basically, they do all other activities of the bank like account opening, check collection, so loan processing. These are the works done by the business correspondent, but they are also agent. Just write down, business correspondent is engaged in, business correspondent is engaged in account opening, business correspondent is engaged in account opening, comma, check collection and loan processing. Check collection and loan processing. These are the activities of business correspondent. Now they have given one point. Are we talking about services of business correspondent? No, we are talking about the agent of business correspondent. Even in this place also, if they are getting commission in the rural area is exempted. Now have a look into this. This chart is already there in the book. I will tell you where it is, but first you concentrate here. There is a banking company here. That banking company is having an urban area branch and a rural area branch. So there is a banking company which is having urban area branch and a rural area branch. And they appointed a business facilitator. Mr. A is appointed as business facilitator of urban area branch. Mr. B is appointed as business facilitator of rural area branch. Now, A will be providing services to urban area branch and gets a commission. You tell me what is the taxability of this commission. You read that and tell me what is the taxability of this commission. Taxable or exempted? Taxable. Why taxable? Urban area branch, so it will be taxable. Then who will pay GST, sir? So it will be taxable under FCM or RCM? RCM, where we have business facilitator providing services to the bank is covered under RCM. So who will pay GST on this particular commission? The bank will pay GST under RCM. Understood up to this? Then Mr. B will provide services to the rural area branch, and for which the rural area branch will pay the commission. What is your answer for this commission? Is it taxable or exempted? Why it is exempted? Rural area branch, therefore it will be exempted. Understood up to this? Then next. Now there is a agent of business facilitator. Business facilitator himself is a agent. He will have a sub-agent. Agent of business facilitator. Agent of business facilitator. Say Mr. X is appointed as agent of Mr. A and Mr. Y is appointed as agent of Mr. B. Now X is providing services to A. Now A will give the commission. Is this commission taxable or exempted? Remember, if the main agent's commission is taxable, sub-agent's commission also taxable. If the main agent's commission is exempted, sub-agent's commission also exempted. Okay. So here this commission earned by Mr. X will be taxable or exempted? Taxable. Because it is urban area, na, it will be taxable. And will it come under RCM or not? Please check the five things. In the 5 places, anywhere we have agent of business facilitator to business facilitator, no. Only agent of business correspondent to business correspondent. So this point is not there. Therefore, it will be taxable under FCM. Then who will pay GST on this commission? Agent only will pay GST. Then Mr. Y provides services to rural area branch, for which Mr. B has given some commission. What is the treatment of this commission? Exempted. Why it is exempted? As the main agent's commission is exempted, sub-agent's commission is also exempted. Now from this chart, what is that you can remember? Two simple points. Number one, business facilitator, agent of business facilitator earning commission from the rural area branch is exempted. Second point, business facilitator shall never pay GST on their outward supplies and inward supplies. Please observe, business facilitator outward supply, who is paying? Bank is paying. Business facilitator inward supply, who is paying? Agent of business facilitator, means business facilitator shall never pay GST on outward supplies and inward supplies. Understood? Then let's see what happens in case of a business correspondent. Okay, same chart, but we are just seeing it from the perspective of a business correspondent. Okay, now instead of business facilitator, I am taking business correspondent. So there is a business correspondent, and with respect to rural area, no change here. A is appointed for urban area, B is appointed for rural area. Now B provides services to the rural area branch. Whatever commission that B is earning is exempted. So let it be business facilitator or business correspondent earning commission from the rural area is exempted. Same way, agent of business correspondent also earning commission from rural area is exempted. So no change between business facilitator and correspondent in case of rural area, but in urban area there is a change in the provision. So it is taxable, but FCM will become RCM, RCM will become FCM. See here. So it will be taxable and it will come under FCM, because please check the agent service. Business correspondent to bank is nowhere in RCM. Please check. Business correspondent to bank is not there in RCM. Only business facilitator to bank is in RCM. So therefore it is FCM. Then who will pay GST on this? Business correspondent will pay GST. Same way, X is acting as agent of Mr. A, and that commission earned by X will be taxable, but agent of business correspondent to business correspondent is covered under RCM. So therefore the GST will be payable by the agent of business correspondent. So business correspondent will pay GST on this particular service. So which means, what is the conclusion we can draw out of this chart? First point, business correspondent, agent of business correspondent earning commission from the rural area exempted, and business correspondent shall always pay GST on their outward supplies and inward supplies. On their outward supplies also they are only paying GST, on their inward supplies also they are only paying GST. Understood the exactly opposite treatment for business facilitator and correspondent? Here business facilitator shall never pay GST. Here business correspondent only shall pay GST. Okay. So these two charts I have given in the exemptions. You just give the page number reference here. Refer page number 165. Refer page number 165. Okay, the same chart I have given here. And what are the 3 points that you need to remember? Only 3 points. Out of these two charts, what are the 3 points you need to remember? Point number 1, business facilitator, business correspondent, agent of business facilitator, agent of business correspondent in rural area exempted. Second point, business facilitator shall never pay GST on outward supplies and inward supplies. Third point, business correspondent shall always pay GST on inward supplies and outward supplies. So this is about the agent services. So we have seen yes, A, that is sponsorship services and agent services. Now look into the next one, L and A, legal services and arbitrator services. Come back to page 58. 58, legal services, that is by an individual advocate or firm of advocates. So we have 4 exemptions for advocate services. Please concentrate. First one, they are providing services to a person other than business entity, that is exempted. Who is other than business entity? Who is the supplier we are talking about? Individual advocate or firm of advocates. They are providing services to a person other than business entity. Who is a person other than business entity? Individuals. So then that service will be exempted. Second point, if they are providing services to government, then also it will be exempted. So here, who is government? Central government, state government, local authority, government authority or government entity, then also it is exempted. Then third exemption, if they are providing service to another individual advocate or firm of advocate, even then it will be exempted. Fourth, if they are providing services to a business entity whose turnover during previous year does not exceed threshold limit, then also it is exempted. In remaining cases it will be taxable. So where is it taxable? If they provide services to a business entity other than government or other advocate or firm of advocate whose turnover during previous year exceeds threshold limit, then it will be taxable. So tell me, what are the 4 exemptions for advocate services? Come on. Services provided to a person other than business entity, exempted. If they are providing services to government, that is central government, state government, local authority, government authority or government entity, exempted. If they are providing services to another individual advocate or firm of advocate, exempted. If they are providing services to a business entity whose turnover during previous year does not exceed threshold limit, exempted. Remaining cases taxable. Wherever taxable, who will pay GST? Recipient, RCM, business entity will pay. Is it clear? In this, third exemption is there na, that is not applicable to a senior advocate. You got it? Third exemption, underline that, not applicable in case of services by a senior advocate. Okay, then in that case it will be taxable, sir. Yes, it will be taxable. But whom we need to see? We need to see the ultimate litigant or applicant or petitioner as the recipient. Say this. So there is a senior advocate who is providing services to individual advocate or firm of advocates. Okay, senior advocate is providing services. Don't write, just listen. Senior advocate is providing services to individual advocate or firm of advocates. Individual advocate or firm of advocates. Now in this case, we cannot say it as exempted. We cannot say it as exempted because the third point is not applicable to senior advocate. So we should see the ultimate litigant, applicant or petitioner. Who is that ultimate litigant or applicant or petitioner? Means the client of this individual advocate or firm of advocate. For them only the senior advocate will be providing services na. So the litigant or applicant or petitioner will be taken as the recipient. So for senior advocate service, who will be considered as the recipient? The litigant, applicant or petitioner. Means senior advocate will not raise invoice to individual advocate or firm of advocate. Then senior advocate will raise invoice to the litigant, applicant or petitioner. Is it clear here? So to whom the senior advocate will raise invoice? Even though they are providing services to another individual advocate or firm of advocate, they will not raise invoice to another individual advocate or firm of advocate. They will raise invoice to the litigant, applicant or petitioner. If this litigant, applicant or petitioner is other than business entity, what is your answer? Exempted. If that litigant, applicant or petitioner is government, exempted. If that litigant, applicant or petitioner is a business entity whose turnover during previous year does not exceed threshold limit, exempted. If that litigant, applicant or petitioner is a business entity whose turnover during previous year exceed threshold limit, then it will be taxable and they will pay GST under RCM. You got it? So that's why senior advocate providing service to another individual advocate or firm of advocate not given as exemption. You got it? Because the ultimate litigant or applicant or petitioner will be considered as recipient. You just write down that point here. Services provided by senior advocate, services provided by senior advocate to, services provided by senior advocate to individual advocate or firm of advocate, individual advocate or firm of advocates, comma, recipient is deemed to be litigant or applicant or petitioner. Services provided by senior advocate to individual advocate or firm of advocates. Recipient is deemed to be litigant or applicant or petitioner. Now, once again, what are the 4 exemptions for advocate services? If they provide service to a person other than business entity, or if they provide service to government, or if they provide service to another individual advocate or firm of advocate, or if they provide service to a business entity whose turnover during previous year exceeds or does not exceed threshold limit. In that, the 3rd exemption is not applicable for senior advocate. Now look into arbitrator service to business entity. Same ditto, copy paste, except 3rd point. Except 3rd point, same. That is, first point same. If they are providing service to other than business entity, exempted. Second point is not same. Services provided to government authority, government entity, exempted. 3rd point is not there. 4th point, services provided to business entity whose turnover during previous year does not exceed threshold limit is exempted. Why, sir? 3rd point is not there, because arbitrator will not provide service to advocate. Advocate settle the dispute through court of law. Arbitrator settle the dispute out of the court. It is like homeopathy doctor going to allopathy doctor for medicine. Why will a homeopathy doctor will go? He believes in his medicine only, na? So he will not go to another person, because there is a different system of practice. Advocate will settle the dispute through the court. Arbitrator out of the court. Definitely there won't be any service between advocate and arbitrator. So that's a hypothetical situation. That's why they have not given that exemption. Is it clear? Even if it is provided, that is provided to the advocate in his personal capacity, which means they will come under other than business entity and it will be exempted. You got it? So 3 exemptions for arbitrator services, and we don't have any conditions for RCM. No non-applicability of RCM. Then next one, director services. This is an important amendment. Please concentrate. Amendment for May 24 exam. Director is providing services to a company or body corporate. Previously, all services of director to company or body corporate will be coming under RCM. What if the director is an employee of the company? Then it is not a supply, because employee to employer in the course of employment is excluded from supply. So therefore it is not a supply. But all other service of director to company will be coming under RCM. But now they gave a clarification stating that if the director is providing services to the company in his personal capacity, it will not be coming under RCM, it will be coming under FCM. Example, there is a director who is having a immovable property which is given on rent to the company. Now, whether the director is acting in his individual personal capacity or in the capacity as a director, for that renting he is acting as a individual capacity, therefore this transaction will not come under RCM, it will be FCM. So if director is providing services in personal or private capacity, it will not come under RCM. And when there won't be any GST, if the director is employee of the company or body corporate, then it is not a supply. Now related to this, I have given few examples, you need to answer. So close your book for some time. See the first one, salary paid to director 2 lakhs. TDS is under section 192. 192 means what? Salaries. So therefore GST is applicable or not applicable? GST not applicable. Why? Employee to employer in the course of employment. Okay. Sitting fees of 1 lakh paid to director, TDS under section 194J. 194J means not salary. Correct. Professional fees. So it will be coming under supply. It's not salary means it will come under supply. Who will pay GST? Director or company? Company under RCM, because he is acting in the capacity as a director. Then director rents immobile property in his personal capacity to company for 2 lakhs per month. Taxable under FCM. Who will pay GST? Director will pay GST. Then, so this is related to the security agency services. So that also we will complete and we will come back to this. So look into security agency services. Security agency services provided by a registered person, provided to a registered person is covered under RCM. So what are the conditions for this security agency service? Recipient should be registered. Supplier should be other than body corporate or firm, but recipient should be registered. And they are not opting for composition scheme. They are registered but not opting for composition scheme, are registered not only to deduct TDS. What if they are registered but opting for composition scheme, still FCM? What if they are registered only for deducting TDS, still it is FCM? When it will be RCM? Supplier should be other than body corporate, recipient should be registered but not under composition scheme, and not registered only to deduct TDS. If any one condition not satisfied, then it will come under FCM. Accordingly, director who is having ABS security agency, so director is having a security agency, he provides security services to company for 1 lakh per month, company is registered. Now you tell me, is it FCM or RCM? RCM. Why RCM? It will come under security agency services. Security agency service supplier other than body corporate, director, yes, and the recipient is body corporate, yes, and they are registered, so therefore it will come under RCM. Then fifth one, director who is also having ABS security agency business provides security services to company for 1 lakh per month, and the company has opted for composition scheme. FCM, good. Director provides GTA services to the company in his business name. GTA service will be coming under RCM, okay, and therefore he is acting in his personal capacity, but GTA has an option to pay GST under FCM, but that FCM option they need to decide with respect to each financial year, and once they have decided that option, that will be applicable throughout the financial year. So here also we have a lock-in. It went off here. So listen, please listen. GTA is also having FCM option. So FCM option or RCM option they need to decide with respect to each financial year. And when they need to decide this, sir? Previous quarter they need to decide this option, okay. Previous quarter means, so for the current financial year, what is the previous quarter? Current financial year is what? 23-24. For 23-24, what is the previous year? 22-23. For 22-23, what is the last quarter? That is January to March. So they need to decide. So we don't know whether it is FCM or RCM, but depends. If nothing is given, GTA service will be coming under RCM. Then look into 7th point. Director renting motor vehicle to a company. Director renting motor vehicle to company and the rate of GST is 12%. Where it will come? Yes, director renting motor vehicle to a company and the rate of GST 12%. For renting a motor vehicle, what are the 3 conditions? Pa, 5 minutes pa, konju control panikonga pa. Okay, முடிஞ்சிடும் break கொடுப்பேன். இந்த சினிமா தியேட்டர் மேலே ஏந்து போகாதீங்கப்பா, கடுப்பாக இருக்கு. ஒரு 5 நிமிஷம் பா. So director providing GTA services to company in his business name. You see the book here. Projector is director providing GTA services to the company in his business name. We have seen now. Next point, director renting motor vehicle to company, rate of GST 12%. For renting a motor vehicle, 3 conditions should be satisfied. Supplier should be other than body corporate. Yes, director is other than body corporate, and the recipient should be body corporate. So yes, company is a body corporate, and the rate of GST should be 5%, but here the rate of GST is 12%, so it will not come under RCM, it will be FCM. Then 8th point, director renting motor vehicle to company and the rate of GST is 5%. Will it come under RCM? Supplier other than body corporate, recipient body corporate, rate of GST 5%, so it will come under RCM. Then director providing direct selling agent service to body corporate for a commission of 50,000. For direct selling agent service, what is the condition? Supplier should be other than body corporate or firm. Is the supplier other than body corporate or firm? Yes. So it will come under RCM. Then director unregistered who is also partner in X and Y provides direct selling agent service to body corporate X and Y company name. Now in this case, supplier is, that is irrelevant. Supplier is body corporate or firm, correct? For direct selling agent, when it will be RCM, supplier should be other than body corporate or firm. But in this case, the supplier is a firm. So which means it will be coming under FCM. You understood? So, but they are unregistered. It is coming under FCM, but they are unregistered. So they will not pay GST. But don't change the service as exempted. You understood? Service is taxable. Service will come under FCM. But if they are unregistered, there is no GST. No GST does not mean it is exempted. You got it? You just write down there, no GST means the service is taxable under FCM, but the supplier is unregistered, so GST not payable. Service is taxable under FCM, but supplier is unregistered. Therefore, GST not payable. Therefore, GST not payable. So mark this illustration as very, very important because of the amendment. Because of the amendment what we have in relation to director service, they can coin a question like this. Now, we completed list of services which are covered under RCM 9 subsection 3. Now, few questions for that. Listen. In the entire list, in few places, we have this FCM versus RCM option. Which and all place? GTA, author, original literary, correct? Original literary also they can choose, GTA also they can choose. but original literary 1 year from the date of exercising option lock-in, GTA will be 1 financial year lock-in. And so when the GTA should exercise the option? Previous year last quarter, they should decide. Next. So in this list, in some places we have conditions for RCM. Okay. First, security lending, no. Import of service, no. Renting of motor vehicles, yes. 3 conditions. What are they? Supplier other than body corporate, recipient body corporate, rate of GST 5%. And then renting of residential property, recipient should be registered. And then C, copyright, no conditions. G, GTA services, no conditions. Government services, no conditions. Overseeing committee, no conditions. T also no conditions, correct? Then salads, in that sponsorship service, what is the condition for RCM? Recipient should be body corporate or firm. Then agent service also condition is there. What is that? Direct selling agent. In direct selling agent, supplier should be other than body corporate or firm. And then next, for legal service and arbitrator service, no condition. But the next one, what is that? Security agency services. In security agency service, what is the condition for RCM? Supplier should be other than body corporate and the recipient should be any person, not body corporate. Recipient can be any person, but they should be registered but not opting for composition scheme and not registered only to deduct TDS. So this list of goods covered under RCM, initially they have made applicable for your CA intermediate exam. Thereafter what has happened, they have released one study guidelines. In that study guidelines, they have removed it, okay. So it is not there, okay. I just wanted to show you that study guidelines point. So you can see here in study guidelines for your exam GST, they have omitted few topics. In that you can see categories of supply of goods, tax on which is payable on reverse charge. Goods covered under RCM is not applicable for your exam. Which attempt? May 24 exam, okay. Due to that reason, this is not in syllabus. So they have omitted it for May 24 exam. And for CMA students, so if you are appearing for CMA intermediate exam, for CMA intermediate exam this is applicable, okay. And this study guideline came very recently here. That's the reason why while printing the book already I have given this, but good only na, it is there but not applicable for your exam, so you don't have to learn this, okay. So with this we completed 9.3, we will take a break and afternoon we will be discussing about 9.4 and 9.5, then we will start with the next chapter, value of supply, okay. Okay, kindly look into practice manual discussion related to this segment 3, liability to pay GST. Take page number 66. See the MCQs related to this. First MCQ, GST is not payable by recipient of services in the following cases. So not payable is the question. Services provided by way of sponsorship service to ABC Limited. So recipient is company. In case of sponsorship service, if the recipient is company, it will come under FCM or RCM? RCM. Then next, services supplied by director of Galaxy Limited to Mr. Krishna. It is not covered under RCM. Why it is not covered under RCM? Director is not providing services to company. So director is providing service to another individual, which is not covered under RCM, so it will be FCM. Services by Department of Post by way of Speed Post to MNO Limited. Anywhere we come across in RCM, the Department of Post is covered under RCM? No. So therefore it will be FCM. Services supplied by recovery agent to SNSP Bank. Is recovery agent service covered under RCM? Yes, in that 5 agents, recovery agent is there. So therefore it will be RCM. So they are asking GST not payable by recipient of service, means they are asking which of the following cases FCM is applicable. So 2 and 3, so option C is the answer. Then XX registered in Delhi purchased books from PC traders registered in Uttar Pradesh. Books are exempt from GST. XX arranged the transportation of these books from a GTA which charged a freight of 9,000 rupees for the same. GST is payable at 5% on such GTA services. Which of the following statement is correct in the given context? So, do we have any exemption? If the goods are notified goods, it is exempted. Books is not notified goods. And if the recipient is individual, HUF or AJP not having a factory and are unregistered, exempted. Recipient is not individual, HUF or AJP. If the recipient is registered only to deduct TDS, then also it is exempted, but that is also not there. Consequently, this will be taxable. GTA service, if nothing is given, who will pay GST? RCM. So therefore, in this case, who will be paying GST? Supplier is GTA. No, GTA nothing is given means RCM. Only if they opt for FCM, then FCM option will be available. So who is the supplier? GTA. Who is the recipient? XX is the recipient. So option A is the answer. GST of 450 is payable by XX under RCM. See this note. GTA can pay GST under FCM, however, it is assumed that they are not opted for FCM because it is not given in the question. Then, but sir, 5% means RCM, 12% means FCM. No, now not like that. Under FCM, GTA is having two options, FCM, RCM. Again in FCM, they can either go for 12% with ITC or 5% without ITC. So they can choose between that. So therefore, previously, the moment you see 12%, we used to take FCM, 5% means RCM, now not like that. So therefore, FCM or RCM both are possible. Which of the following services does not fall under reverse charge provisions as contained in 9(3) of CGST Act? Services supplied by arbitral tribunal to business entity. Is it covered under RCM? Arbitral tribunal to business entity, yes. Arbitrator services is covered under RCM. Arbitral tribunal means arbitrator. Don't get confused between fee collected by court or tribunal versus this arbitral tribunal. That is different, this is different. Arbitral tribunal means arbitrator. Arbitrator services to business entity is covered under RCM. Sponsorship services provided to any partnership firm, will it come under RCM? Sponsorship service come under RCM. Please check the book. When it will come under RCM, what is the condition for RCM? Recipient should be body corporate or firm. Here the recipient is firm, so it will come under RCM. Sponsorship provided to any body corporate, yes, that will also come under RCM. Sponsorship services come under RCM if the recipient is body corporate or firm. Then service of renting of motor vehicle for passengers provided to a recipient other than body corporate. For renting of motor vehicle, what are the three conditions for RCM? Supplier should be other than body corporate, recipient should be body corporate. But here recipient is other than body corporate, therefore it will come under FCM. So which of the following service does not fall under reverse charge? Option D. Then in case of GTA services, tax is to be paid under forward charge if GST is payable at 12%. Okay, definitely if the GST is 12%, so it will be FCM. So now what are the rates applicable to GTA? Say this, GTA can opt for either FCM or RCM. This is there in exemptions. Okay, wait, just hold on. Look into this. GTA can either go for FCM or RCM. So FCM or RCM, but they need to decide it when? With respect to each financial year. If it is FCM, what is the rate of GST? If it is FCM, they have two rates. Either they can go for 12% with ITC. What is this 12% with ITC means? GTA can take ITC on their inward supplies. What is their inward supplies? What are the inward supplies for GTA? They will buy a truck. On the truck, GST paid can be taken as credit, and they will receive some repair services. On the repair services, GST paid can be taken as ITC. On insurance services, they can take ITC. Telephone, mobile, etc., GST paid can be taken as ITC. So if they want ITC on their inward supply, they have to go for 12%. Suppose if they don't want ITC, then they have another rate, 5% without ITC, means they cannot take ITC on their inward supplies, but you are their recipient. Whether GTA pays 12% or GTA pay 5%, you can take ITC. This with ITC, without ITC is not for you. You are who? Recipient of GTA. This with ITC, without ITC is to whom? Supplier, not to the recipient. So I am GTA boss, I am under 12%. Now you receive services from me. Now can you take the 12% ITC? Yes. I pay 5%. Can you take 5% as ITC? Yes. For you, no problem. For me only, on my inward supplies, I cannot take ITC. Whereas in case of RCM, what is the rate of GST? 5%. Always the rate of GST is 5%, and there is no with ITC, without ITC concept, because liability to pay GST is on recipient, and that is about this. Now, this 12%, 5%, they can choose with respect to each invoice. But this FCM versus RCM, they need to choose with respect to each financial year. Whereas this 12% and 5% with respect to each invoice. With respect to each invoice, they can choose either 12% with ITC or 5% without ITC. Now the MCQ is what? When it will be FCM? That is a question. When GTA will go for FCM? I mean, in which of the following cases GTA service will be taxable under FCM? The moment it is 12%, see 5% means there is a confusion, either FCM or RCM, but 12% means no confusion, always it will be FCM. You understood? But when it is 5%, we have a confusion. What is that? If they opt for FCM, then only FCM. Please read the question first. You should understand the question. In case of GTA service, tax is to be paid under forward charge. If GTA is payable at, GST is payable at 12%, means no doubt it is FCM, correct or not? Why option B is wrong? GST is payable at 5%, it may be FCM also 5%, RCM also 5%, correct? Then unregistered individual end customer is the recipient, then it is exempted. If the recipient is an unregistered casual taxable person, so then also it may be covered under RCM. See, when it will be always FCM, the moment if it is 12%, always it is FCM, so option A is the correct answer. Then look into descriptive questions. Question number 1, state the person liable to pay GST in the following independent cases, provided recipient is located in the taxable territory. Services provided by arbitral tribunal to business entity. Based on this, do we have any exemption? We have 3 exemptions. First of all, for business entity, we have exemption if turnover during previous year does not exceed threshold limit. Is it given in the question? No. The question is what? Who will be liable to pay GST? So that only we need to answer. So who will pay GST in case of arbitral tribunal to business entity? FCM or RCM? So who will pay? Business entity will pay. Sponsorship service provided by company to an individual, who will pay? FCM or RCM? Why? Because recipient is not body, corporate or firm. So when sponsorship service will come under RCM? If the recipient is body, corporate or firm, so it will come under FCM. Renting of immobile property service provided by central government to a registered business entity. FCM or RCM? RCM. When it will come under FCM? If the recipient is unregistered. Please check the table, don't look at me, look into the table. We discussed, look into the table here. What is that you are looking here? Nothing. There is nothing here. Look into the table. In the question only is there. Answer you search. So in the table you will see government services. Government service to business entity. In 2 cases always it is FCM. What are the 2 cases where it is FCM? If the renting of immobile property is given to a unregistered business entity or Indian Railways, correct? Here it is what? Registered business entity. So it will not come under FCM, it will come under RCM. Suppose if it is given as unregistered business entity, then it will come under FCM. So that is what you need to write, whether it is FCM or RCM. Then second question, legal fees is received by Shushrut, an advocate services from Tattva Trading Company having a turnover of 50 lakhs in the preceding financial year. What is the maximum threshold limit for registration in GST? 40 lakhs. 40 lakhs. Now their turnover is more than 40 lakhs. So services, advocate service provided to a business entity whose turnover during previous year exceed threshold limit. Taxable or exempted? Taxable. And will it come under FCM or RCM? RCM. So this is RCM, where liability to pay GST is on that company. Then third one, first you need to check exemption, then you need to talk about RCM. Question number 3, state the person liable to pay GST in the following independent cases, provided recipient is located in taxable territory. Services supplied by an insurance agent to insurance company. RCM. We have any exemption for insurance agent? No. Yeah. Exam got postponed. Okay. Clear, we should clear this attempt. Little bit. No exemption. Heart attack vandrumpa. See here, insurance agent in rural area is exempted. So we have an exemption, but is it given as rural area? No, that's why we are telling it as RCM. If it is given as rural area, we will be writing it as exempted. Services supplied by a recovery agent to a car dealer. Recovery agent to a car dealer. FCM. Why FCM? Recovery agent, direct selling agent, business facilitator, agent of business correspondent should be which sector? Banking sector. Here it is recovery agent to a car dealer. It is not a banking sector. That's why it will not come under RCM. It will be FCM. Security services. Services provided by way of supply of security personnel provided to a registered person. So in case of security agency service, when it will come under RCM, what are the 2 conditions? Supplier should be other than body corporate. Is it other than body corporate? They have not given anything. Okay. Then recipient should be registered. Is recipient registered? Yes. So security services, services provided by way of supply of security personnel. Supplier they did not give, means it will be other than body corporate, and the recipient should be registered. Is the recipient registered? Yes. So due to that reason it will come under RCM. Then question number 4. So every attempt they are asking questions on RCM. 2 questions they will ask, 2 marks each. For 4 marks they will be asking. This is standard. Every attempt you will be seeing question. Apart from the first question involving computation of net GST payable, separately also you will be getting 4 marks question like this, where in 2 situations they will ask, and they will ask you who is liable to pay GST. This they have asked in November 18 exam. Decide which person is liable to pay GST in the following independent cases where the recipient is located in taxable territory. Ignore aggregate turnover and exemption. So don't bother about exemption, just FCM, RCM. Okay. First one, Mr. Raghu provided sponsorship services to Weavin Cricket Academy and LLP. FCM or RCM? Why RCM? Recipient is body corporate or firm. They will come under firm category. LLP is a firm. As the recipient is a firm, it will come under RCM. Safe Trans, a goods transport agency, transported goods of Kapil and Co., a partnership firm which is not registered under GST. FCM or RCM? RCM. Why? First, notified goods are exemption not available. See, we don't have to bother about exemption. They are asking about exemption, you ignore. GTA service, in the absence of information, is it FCM or RCM? RCM. When it will be FCM? Only if GTA opt to pay GST under FCM, it will be FCM. Otherwise, it will be by default. So that's what I have given RCM. And note, if GTA opts to pay GST under FCM, option to be exercised between 1st Jan to 31st March of the preceding financial year. Is it clear? Then next, question number 5. Mr. Vicky Franklin, an unregistered famous author, received 3 crore of consideration from Shiv Bhagwan Publications located in Indore for supply of service by way of temporary transfer of copyright. So this is temporary transfer of copyright related to original literary works of his new book. So it is covered under RCM na, but author is having an option to pay GST under FCM. For that, author should be registered. But what happened here? Author is unregistered. He finished his work and made available the book to the publisher, but has not yet raised the invoice. Mr. Vicky Franklin is of the view that SBP is liable to pay tax under RCM. That is, Shiv Bhagwan Publications is liable to pay tax under RCM. SBP does not concur with his view and is not ready to deposit the tax under any circumstances. What is your answer? Is Vicky Franklin correct or not? Why? As per section 9, subsection 3, read with notification number 13 of 2017, in case of temporary transfer of copyright pertaining to original literary, the liability to pay GST is on the recipient. However, if the author opts to pay GST under FCM, then the liability will be shifted to the author. In the present case, the liability to pay GST is on publisher under RCM. That is what you need to write as the explanation. Got it? Now see the another part. Further, if the view of Vicky Franklin is correct, what is the recourse available with Vicky Franklin to comply with the requirement of GST law, as SBP has completely refused to deposit the tax? Now they are asking, can Mr. Vicky Franklin pay GST under FCM? Yes. For that, what you should do first? Register. Very good. First he need to register and then he need to opt to pay GST under FCM. Now from the date he exercises the option to pay GST under FCM, for the next 1 year he will only be paying GST under forward charge mechanism. Done? That part we should write. Next. Question 6. In the following independent cases, decide who is liable to pay GST, if any. You may assume that the recipient is located in the taxable territory. Ignore aggregate turnover and exemption available. Veer Transport, a registered GTA paying IGST at 12%, transported goods by road of Dilip and Company, a sole proprietor firm other than specified person, which is not registered under GST or any other law. Is it FCM or RCM? FCM. Why it is FCM? 12%. The moment you see 12%, it will definitely be FCM. But sir, if the recipient is individual, not registered, then it will be exempted now, sir. Of course, yes. But they have given in the question, ignore exemptions, etc. That's why we are not bothered about exemptions here. Then second part. Mr. Kamal Jain, an unregistered famous author, unregistered famous author, received 20 lakhs of consideration from PQR Publications Limited for supply of service by way of temporary transfer of a copyright. FCM or RCM? RCM. RCM. Then next. Question number 7. Mr. Priyam, director of Sun Moon Company Private Limited, provided service to the company for remuneration of 1,25,000. Briefly answer whether GST is applicable in the below mentioned independent cases. If yes, who is liable to pay GST? Mr. Priyam is an independent director of Sun Moon Company Private Limited and not an employee of the company. So will it come under RCM? Yes, director, not an employee, receiving a remuneration will come under supply and it will be taxable under RCM. Second part, Mr. Priyam is an executive director, that is employee of Sun Moon Company Private Limited. Out of the total remuneration of 1,20,000, 1,25,000, 60,000 has been declared as salaries in the books of Sun Moon Company Private Limited and subject to TDS under 192. Now, TDS 192 means what? It is a salary. So, therefore, that 60,000 will be excluded from supply. What about the remaining amount? So, however, 65,000 has been declared separately other than salaries in the company's account and subject to TDS under 194J. TDS 194J means it will be professional fees. That will be coming under PGBP. So, therefore, it will be covered under supply. And who will pay GST? The company will pay GST under RCM. So, mark this question 7 as important. Then question number 8. Income is received by Maharashtra government from renting of immobile property to Ganapati Moria Private Limited, registered in Maharashtra. Turnover of the company was 18 lakhs in the preceding financial year and applicable threshold limit to them is 20 lakhs. Is GST payable in the present case? If yes, who is liable to pay the same? So, what is it they are doing? They are renting immobile property to one person. Okay. What type of property it is? No, I mean residential property, is it given? No, they just said immobile property. And moreover, here it is government giving immobile property on rent, means no doubt it will be a commercial property. And to whom they are giving on rent? To a business entity. That business entity turnover during the previous year does not exceed threshold limit. Is it relevant? No, not relevant, because the first general exemption is not applicable in case of renting of immobile property. But the second general exemption is applicable. But for second general exemption, what should be the rent? 5,000. It should not exceed 5,000. But is it given as 5,000? No. So, due to that reason, it will be taxable. So, who will pay GST? Again check. Is the recipient registered or unregistered? Read the question carefully. Is that Ganapati Moria Private Limited registered or unregistered? Registered. So, they will pay GST under RCM. Understood? This is literally one question we discussed. The flower vendor, state government has given on rent. One question we saw na, in the same line. Okay. Mark this also as important. Then question number 9, state the person liable to pay GST in the following independent services provided. Siddhi Builders, registered in Haryana, rented out 20 residential units owned by it in Sanskriti Society to Rudra Technologies, an IT based firm registered in the state of Haryana for accommodation of its employees. So, where it will come? Residential property to unregistered person. Unregistered person? No. So, it is not exempted. To registered individual for family stay? No. So, it will be not exempted, it will be taxable. And residential property, wherever taxable, I told you it will be coming under RCM. So, who will pay GST in this case? Recipient. Who is that recipient? Rudra Technologies is liable to pay GST under RCM. Is it clear here? Then next, number 2. Messrs. Purohit Consultants, a partnership firm registered in Delhi as a regular taxpayer, paid sponsorship fees of 70,000 at a seminar organized by a private NGO, a partnership firm in Delhi. Now, in case of this sponsorship, check who is the recipient. Partnership firm paid sponsorship fees, means recipient is partnership firm. So will it come under RCM? Yes. Sponsorship service come under RCM if the recipient is body, corporate or firm. As the recipient is firm, therefore it will come under RCM. Then next question, see this question is related to like RCM, and there are multiple points like circular and all we saw del creditor agent related. So that is this. So carefully look into the question, a very important question. So this type of question can be tested for May 24, look into it. Charm Limited registered under GST in the state of Jharkhand, manufactures cosmetic products and appointed Mr. Handsome of Mumbai, who is registered under GST in the state of Maharashtra as their del creditor agent to sell their products. Now up to this you read and tell me who is supplier, like who is Charm Limited, who is the del creditor agent. Charm Limited is the principal and Mr. Handsome is the del creditor agent. Now being a del creditor agent, he agrees to raise invoice in his own name, underline that, agrees to raise invoice in his own name, means invoice is raised by agent in his name, means agent is acting on behalf of principal, and also guarantees for the realization of payment from customers to Charm Limited. Okay, of course, del creditor agent will do that. In order to realize the payments from the customers on time, he extends a short-term transaction-based loans to them and charges interest for the same. Hope you remember the circular related to interest received by del creditor agent. What is the taxability of interest earned by del creditor agent? If the del creditor agent is raising invoice, the interest collected by del creditor agent will be taxable. If the invoice is not raised by del creditor agent but by the principal, the interest received by the del creditor agent will be exempted. Now in this question, whether invoice is raised by del creditor agent or not raised by del creditor agent, raised by del creditor agent means the interest collected by him will be taxable. Now continue. So Mr. Handsome provides you the following details of transaction carried out during the month of March. Outward supply, goods sold by Handsome in DTA capacity 2,80,000. This 2,80,000 is taxable in whose hands? That company Charm Limited or agent Mr. Handsome? Why Mr. Handsome? Because he is raising the invoice. So the 2,80,000 is taxable in his hands. Interest earned from the above customers for short-term credit facility. So as per CBIC circular, this interest is also taxable. Commission bill raised on Charm Limited in respect of DTA services, even that 30,000 also will be taxable. I told you, commission is an independent activity. Whether he is a del creditor agent or normal agent or any agent, income by way of commission will always be supply under 7(1)(a) and it will be chargeable to GST. So 30,000 also will be taxable. But first two transactions is intrastate, means what is the type of liability? CGST, SGST. But the commission will be coming under interstate supply. So what is the type of liability? IGST. Now look into the inward supply. Interstate supply of goods received from Charm Limited, since being a DCA, no consideration was paid. Value under section 15 is 2 lakhs. No, listen. Handsome is a agent acting on behalf of principal. Now they purchased from principal. They purchased some goods from the principal. Is it supply for the principal? Yes. Why it is supply for the principal? Because the agent is acting on behalf of principal. So principal will raise invoice to Handsome for what value? 2 lakhs, and whatever GST paid can be taken as ITC. Then received training in marketing and distribution from Charm Limited as per DCA agreement free of cost. Company charges 75,000 for such training when they provide the same to others. Now here, if you tell what is the treatment of this, super pa. So my life is settled, because otherwise there is no point in taking classes. Okay. So by this point I will be able to know whether I am a good teacher or bad teacher. Tell me here, what is the treatment of this? My future is in your hands. Supplier, not a supplier. Read it again. Once again you read it. Please pa, please pa. Read it again. Received training in marketing and distribution from Charm Limited. Charm Limited is principal. Handsome is agent. Free of cost means no consideration. Is it supply or not a supply? Why not a supply? Okay, no consideration. Yeah, but no consideration Anna, because 71C may come na. Very good, super. Sama. Okay. So I told you this because 10 times I stressed this point. 71C principal agent transaction only for goods, only for goods. 71C principal agent only for goods, only for goods, only for goods, like that multiple times I told. This is services. So first of all, this activity is not a supply. As this activity is not a supply, the question of GST does not arise. Okay. Now, applicable rate of tax on both inward and outward supplies is 9% each for CGST and SGST and 18% for IGST. Amount given above are exclusive of taxes. So there is no GST on this. Means these are all exclusive of tax. Into we need to take the tax rate. Don't take it on inclusive basis. Subject to the information given above, necessary conditions are complied for availment of ITC. So they can take ITC, no restriction. You are required to calculate the gross GST liability and eligible ITC for the month of March of Mr. Handsome. Now this chart you don't have to draw in exam. This is for your understanding purpose. To explain you the answer, I have given this chart. See here, Charm Limited is the principal, Handsome is the Del Creator agent, and there is a customer. Now Charm Limited sent the goods to Del Creator agent. Del Creator agent is sending the goods to the customers. Now who raised the invoice? Del Creator agent raised the invoice to the customer, correct? So now what is that Del Creator agent collects from the customer? Price plus interest, and this interest will be included in the value and taxable, and because agent is acting on behalf of principal. Now Charm Limited is sending goods na, that is also supply under 71C, even though without consideration, because if the agent is acting on behalf of principal, then goods sent by principal to agent will become supply under 71C. Today's discussion only we have seen this. The first point you have written today is this: transaction with respect to goods between principal and agent. Agent acting on behalf of principal, supply under 71C. So due to that reason it will become supply. But Charm Limited provided some training services. That training service is not a supply. Why it is not a supply? There is no services under 71C between principal and agent. Now first we need to do the computation. So we need to make two statements here. First statement, computation of gross GST payable. Second statement, computation of ITC. Third statement, computation of net GST payable. First, gross liability, outward supply. So 2,80,000 taxable na. So 2,80,000, what is the rate of GST? 9% and 9%. So please calculate 2,80,000 into 9%. How much? 25,200, 25,200 CGST, SGST. Then interest is taxable, but you need to write a note for that. Interest you need to write a note, and even for this also you need to write the note. I have given the notes below. So you go through this answer later to know how to present it in the exam. Okay, like this notes you need to write. First, why this 2,80,000 is taxable in the hands of the agent you need to write. Second, why interest is taxable you have to write. So interest is how much? 20,000, Again same, intrastate, CGST, SGST 9%, 9%. Whereas commission, again you need to write a note for the commission. So why the commission will be taxable also you need to write a note. And commission is supply and 30,000 interstate, so IGST. So 5,400. This is the gross GST payable, 27,000, 27,000 and 5,400. Now, what is their inward supply? Only one inward supply, that is 2 lakhs worth of goods. That too intrastate, interstate, clearly given in the question itself as interstate. So IGST, 2 lakhs into 18%, 36,000 will be the IGST. Now IGST credit can be set off with any GST liability. There is no restriction. But IGST credit should be first utilized for payment of what? IGST. Thereafter between CGST, SGST in any manner, any proportion. So see the net GST computation, 27 CGST, 27 SGST, 5,400 IGST. Now IGST credit first 5,400 we will set off. The balance, what is the balance left? Please take your calculator. 36,000 minus 5,400. What is the balance left? Divided by 2. Because equally we are distributing. Equally we are dividing between CGST, SGST. So 15,300 and 15,300. So the net GST payable is 11,700, 11,700. Sir, is this 11,700, 11,700 the only answer? No. Alternative answers also possible. What you can do, fully you can use for CGST, thereafter for SGST, or fully you can use for SGST, thereafter for CGST. Any answer may come, but the total net liability should be 23,400. That is 11,700, 11,700. That's what they will check in the answer. So not necessary that your answer will match with the key, but the total of the net liability should not be more than 23,400. So mark this question as very, very important. Question number 10. Okay, then one more question, 6 marks question related to this. Mr. Jayesh, a registered supplier of Mumbai, received the following amounts in respect of various activities undertaken by him during the month of October 2022. Commission received as a recovery agent from NBFC 80,000. What is your answer? Taxable or exempted? First you check. Recovery agent, do we have any exemption? Recovery agent, do we have any exemption? Check here, check here, check here, check and tell here. Don't tell yes or no blindly. Check the book. Already one table we have seen na. In the table, do we have any exemption for recovery agent? No. So therefore it will be taxable. And for recovery agent, will it be coming under RCM? Banking sector or some other sector? Banking sector. So it will come under RCM. Yes. So who will pay GST? Jayesh or NBFC? NBFC will pay. It is not Jayesh. So therefore don't tax it in the hands of Jayesh. Is it clear? So it will be taxable under RCM. Is it inward or outward? Inward transaction, outward transaction, outward. Yeah, outward. They are receiving commission. When they are receiving commission, they are providing the services. So it's a outward supply. That is what first you need to find in the question. Suppose if it is inward, taxable under RCM means it will be taxable in their hands. If it is outward, taxable under RCM means it will be taxable in the hands of the recipient. You understood? First, when you read the transaction, check whether it is inward or outward. You are receiving commission means you are supplier, correct? Supplier only will receive money, recipient will pay money. So therefore, when you are receiving commission means you are the supplier, and so therefore it is your outward supply. Then outward supply, that is as a recovery agent to bank or NBFC coming under RCM. Then second point, actionable claim received from normal business debtors. actionable claim received from normal business debtors. So what is this? What type of actionable claims will be covered under supply? Specified actionable claims, HC block. All other actionable claims are excluded from supply, correct or not? So due to that reason, this is an outward supply, this is outward, but it is not a supply. Why not a supply? Because it is other than HC block. Only HC block is covered under supply, boss. All other actionable claims are excluded from supply. Do you remember that? Then number 3, don't sleep. Forever you will sleep then. You understood? After result, happily better sleep. Why to do 3 attempts, 4 attempts maximum? Thereafter at house they will tell, okay, you are not fit for this, so better you quit, like that they will tell. And what we will also do, okay fine, anyhow parents said na, so we will better quit, like that we will also quit. So why? So we should challenge. If someone is telling that you are incapable of doing this, prove them that you are capable of. How you will get sleep and all? You should not sleep. So because already you are under an enormous pressure. What is that pressure? You have to prove that you are capable of. Otherwise, why you chose CA? Yeah? You chose CA because you want to show to someone that I am capable of achieving something in our life. Correct or not? Then when you are having this big ambition before you, how you will get sleep? Yeah? I am not getting sleep. Really, night time and all properly I am not able to sleep because I have a fear. What if this will be my last batch? What if tomorrow I will not earn money? What if I go for begging? Always the fear will be there. Really I will have a fear. What if my career is gone? So because of that, so 3 o'clock I will get up and sit and I will be thinking, oh no, I should do something. So I should achieve something in my life, still more like that. So you will not get sleep here. Have that fear in your heart. Okay, if not this June exam, better you take a ticket, train super fast express, the express train will be going and you jump and die. Okay, so don't take it for granted. So listen, don't sleep. Okay, these are all important questions. What if this question comes in exam? See this. Next one, third point. Amount received from ABC Limited for performance of classical dance in one program. Actually, there is one exemption. That is, performance artist, one who performs before the audience. In what art form? Dance, music or theatre. In which genre? Classical or folk. Amount will be exempted if the consideration does not exceed 1,50,000 per performance, like that one exemption is there. We have not yet discussed the exemptions. So that point it is, and here also it is outward, but the amount is how much? 1,74,500. It will be taxable. Whether this service is covered under RCM, we did not come across anywhere in RCM. So therefore it will be coming under FCM. Then fourth point, business asset, old computers given to a friend free of cost. The market value of all the computers was 51,000. No input tax credit has been availed on such computers when used for business. Supplier, not a supplier. Why? ITC not availed. Disposal of business asset on which ITC availed. So ITC not availed. Therefore, it is not a supply. Then next one. What if it is supply? What if ITC availed? What if ITC availed? It will become supply and you will take 51,000 as the value on which GST is payable. Okay. Next one. Fifth point. Consideration received for 1 month rent from a registered individual person for renting of residential dwelling for use as residence. Outward. It is outward. Consideration received for 1 month rent from a registered individual for renting of residential dwelling for use as residence. So we can take the exemption because he is a registered individual. Yes. With what assumption we need to take it as exempted? Assuming that he has taken it on rent for his family stay. Therefore, it will become exempted. Then next, details of input services. So see the fifth point here. So we have taken it as nil. Why we have taken it as nil? Renting of residential property for residential purpose to a registered person is covered under RCM. So in the above case, registered individual has to pay GST under section 9(3). But if such registered individual uses for family stay, then the said service is exempted. So we are taking the assumption that he is using for his family stay. Sir, can we also take other assumption that he is not using for his family stay? Yes, then it will come under RCM, because in question they did not tell whether it is taken for his family stay or not. Due to that reason, both the answers are possible. Okay. Then details of input services. This is inward supply. Input service means inward supply. Paid to unregistered GTA for various consignment of transportation of goods by road. Each individual consignment in a single carriage was less than 1,450. Previously we had this exemption, GTA services, where per carriage if it does not exceed 1,500 exempted. Now that exemption is not there. So therefore it will be taxable. When it is taxable, who will pay GST? So we don't know whether GTA opted for FCM or RCM. So in the absence of information in the question, we will take it as RCM. So therefore this 15,100 will be taxable under RCM in the hands of this person, that is Mr. Jayesh. Now all these amounts stated above in both the tables are exclusive of GST wherever applicable. Aggregate turnover of Jayesh in the previous year was 42 lakhs. You are required to compute gross value of supplies. See the question properly. They are not asking you to compute what is the GST payable. They are asking compute the gross value of supplies on which GST is to be paid by Jayesh for the month of October. Okay. Now, so where and he need to pay GST, 80,000 he need to pay GST, no. Again 10 lakh 50, no GST. 7 lakh 74, 1 lakh 74 500 he need to pay GST, so take that. Then again here nothing, here also nothing, and 15,100 also he need to pay GST under RCM. So therefore 1 lakh 74 500 plus 15,100, so that will be 1 lakh 89,600 is the value of taxable supply on which he need to pay GST. You got it? So this also mark as very, very important. The previous two questions, that is question number 10 and question number 11. That's the usual style of questions which you can expect from the last 2-3 attempts. They started asking this type of questions. Now on 9.4 and 9.5, they have not tested one question also so far in old syllabus. So from May 2018 to November 2023, not even one question or one MCQ is tested on 9.4 and 9.5. But 9.4 and 9.5 is there in the study material. It's there in the syllabus. So we need to learn this. Okay. Even though questions are not asked, but what if a question is asked? We cannot take it for granted because it's there in the syllabus. That's why we need to learn this. Now look into 9 subsection 4. Please take page number 60. Listen, when 9 subsection 4 is applicable, if there is a promoter or builder who is making inward supply from an unregistered person, that promoter or builder is required to pay GST under RCM. But why promoter or builder is required to pay GST under RCM? Why will you purchase from an unregistered person? Mainly you don't want GST burden. That's why you buy from an unregistered person. Basically promoter or builder, the rate of GST, already I told you, 1.5% or 7.5% without ITC. Means can the builder take ITC on their inward supplies? No. Builder cannot take ITC on their inward supplies. Due to that reason, see, you are buying a mobile and on that mobile there is 18% GST. Shop A not charging GST. Shop B charging GST. Which shop you will buy? Why shop A you will buy? Correct. Like that, as a promoter or builder, you cannot take ITC on inward supply. So, will you buy from a registered person or unregistered person? Because unregistered person will not charge GST to you, so you don't have the GST burden, correct? Then it will be loss of revenue to government. So, what they are telling, as you are buying from an unregistered person, you pay GST under RCM. Sir, what if I buy from a registered person? No problem. Already you paid GST to him and he will pay GST to the government. So, therefore, no problem for us. Only thing when you are purchasing from an unregistered person, you need to pay GST under RCM. But sir, there are certain things which definitely needs to be purchased from unregistered person only. Like sand. Sand naturally will be purchased from an unregistered person, and bricks and all from an unregistered person. Manpower, labor and all will be unregistered. Now, how do they expect me to pay GST under RCM? So, they have given you a relief. What is that relief? 20% of your total inward supplies in a year you can get from an unregistered person. It's okay. You don't have to pay GST under RCM. But yeah, 80%. But how much? 80% you should definitely buy from a registered person, otherwise you need to pay GST under RCM. Is it clear here? So, what is it they are telling? How much of the inward supplies of inputs and input service you can buy from an unregistered person? 20%. Are you required to pay any GST under RCM on that? No. But 80% you need to purchase or receive from a registered person, otherwise you need to pay GST under RCM. Now, in that 20% we don't have cement. Means cement always should be purchased from a registered person. If you buy cement from an unregistered person, you need to pay GST under RCM. You know why? Cement is 28%. In all the construction material, cement is the major material where the rate of GST is 28%. Due to that reason, they don't want to lose the GST there. So, cement definitely you should buy from a registered person. Okay, sir. Total I purchased 100 lakhs in a particular year. 20 lakhs from unregistered person. 80 lakhs from registered person. Should I pay any GST under RCM? No. So, because 80 lakhs already I purchased from registered, 20 lakhs from unregistered. Now, check one point. What is that point you need to check? In that 20 lakhs, whether there is cement. If there is cement in the 20 lakhs, so I should pay GST under RCM even though I achieved 80% condition. Is it clear? So, have a look into this. You are making inward supplies, you are a promoter or builder. You are basically a promoter or builder and you are having inward supplies. Now, these inward supplies of a promoter or builder is divided into two: inputs and input services and capital goods. So, any issue ma? AC not working? Huh? No, it has been informed there is some power issue, power went off, power came, so they are turning on, okay, it will come. Okay, say this. AC issue or any other issue? AC only. Okay. I'm going to check. So, inward supplies of a promoter or builder divided into two: inputs and input services, capital goods. Now, capital goods if purchased from a registered person, no need to pay GST under RCM. Why no need to pay GST under RCM? Because anyhow capital goods are purchased from registered person at the time of purchase itself you would have paid GST. So, no need to pay GST under RCM. What if capital goods are purchased from unregistered person? You need to pay GST under RCM at the rate applicable to capital goods. If capital goods is 12%, you pay GST 12% under RCM. If capital goods is 5%, you pay GST under RCM 5%. Is it clear? This is step number 1 pa. What is step number 1? capital goods purchased from RP, ignore. Purchased from RP, ignore. Purchased from URP, pay GST under RCM. At what rate? At the rate applicable to capital goods. Clear? Now you take inputs and input services. But in these inputs and input services, 5 things you exclude, because these naturally you will be purchasing from an unregistered person only, and these are actually non-taxable supplies or exempted supplies. What are those 5? Electricity. Electricity, there is no GST. On electricity there is no GST, no need to pay GST on electricity bill. High speed diesel, motor spirit and natural gas, TDR FSI long term lease. Why TDR FSI long term lease is excluded? Because anyhow it is covered under 9.3. Already it is covered under RCM 9.3. So therefore again no need to bring it under 9.4. So what are the 5 things we should take out from inputs, input service and capital goods? Electricity, high speed diesel, petrol, natural gas, TDR FSI long term lease. Sir, why petrol, diesel, natural gas? What about crude oil? Crude oil also non-taxable na, but is it used in construction? Aviation turbine fuel is also non-taxable. Is it used in construction? Alcoholic liquor for human consumption is also non-taxable, but is it used in construction? Yes, sir. Everybody. So they will mix alcohol in cement. So they will make, so that whenever you feel like you want to have alcohol, like that. How we have? Where from they are using alcohol in construction here? They are not using alcohol in construction. So therefore that is no way connected, that's why it is not given. Okay. Electricity, high speed diesel, motor spirit, natural gas, TDR FSI and long term lease. Suppose if it is purchased or received from a registered person greater than or equals to 80%. So let's take total inputs and input services is 150 lakhs. Please write down. Total inputs and input service is 150 lakhs. In that 150 lakhs, 135 lakhs is purchased from a registered person. What is the percentage? More than 80%. But total 150 pa. In 150, 135 is from a registered. Is it more than 80%? Yes, more than 80%. So we achieved the condition. Achieved the condition or not? What is the condition? 80% should be from a registered person. We achieved the condition. What is the balance from unregistered person? 15 lakhs. Total 150 lakhs. In that 135 you purchase from registered person, balance is 15 lakhs. In this 15 lakhs, 5 lakhs is cement. In this 15 lakhs, 5 lakhs is cement, 10 lakhs is other goods and services. Now you tell me what is the treatment of this 5 lakhs. On this 5 lakhs are you required to pay GST under RCM? Sir, but I achieved the condition. Even then on cement we need to pay GST under RCM. At what rate, sir? 28%. What about other goods and services? Why? Because we already achieved the condition of 80%. No need to pay GST under RCM on these other goods and services. Got the clarity? Now, suppose out of this 150 lakhs, if you are having inward supply, so from a registered person, somewhere like 100 lakhs, 100 lakhs, okay. So now, is it greater than or equals to 80 or less than 80? Less than 80. What is the shortfall? 150, 80% is how much? Out of 150, 80% is how much? 120. In that 120, 100 is from registered. So shortfall is how much? 20 lakhs. The shortfall is 20 lakhs. For this 20 lakhs, what is the treatment? For this 20 lakhs, what is the treatment? Check in this 20 lakhs, do we have cement or other goods and services? Suppose If cement is there for 5 lakhs and other goods and services 15 lakhs, what is the treatment of this cement? Pay GST at what rate? 28%. What is the treatment for this 15 lakhs? Pay GST at what rate? 18%. But sir, these goods may be less than 18% also. But even then you need to pay GST at the rate of 18%. What is the disadvantage in this? Had you purchased from registered person, you would have paid the regular rate. What is the regular rate? The applicable rate? 12% means 12%, 5% means 5%, etc. Just because you are purchasing from an unregistered person, you end up paying GST at what rate? 18%. And so they are forcing you indirectly to go for purchase from a registered person. That's why, like a penalty, they created this 18%. Okay. Now the moment this 20 lakhs you pay GST under RCM, you achieved 80 lakhs, correct or not? Sorry, you achieved 80%. Now what is beyond 80%? Again I am repeating, total 150 lakhs pa. In this 150 lakhs, 100 lakhs already purchased from registered. The shortfall is 20 lakhs. On the 20 lakhs we paid GST under RCM. Now what is beyond 80%? 30 lakhs. What is beyond 80%? 30 lakhs. In this 30 lakhs, say 10 lakhs is cement and 20 lakhs is other goods or services. What is the treatment of this 10 lakhs? Should we pay GST under RCM? Why? Already we achieved condition, but cement is an exception. Even though we have achieved the condition, but on the balance amount we need to pay GST under RCM if it is cement. What about other goods and services? 20 lakhs. We don't have to pay GST under RCM. Now, how sir we need to apply this in the answers, questions and answers, how we need to apply? Remember 3 simple steps. Okay. So for that purpose, I am just giving you 2-3 illustrations we will see, because maybe this can be asked as a MCQ question. So please write down in your notebook illustrations on section 9 subsection 4. Illustrations on section 9 subsection 4. First one, purchased from purchases, inward supplies from registered person, inward supplies from unregistered person. You prepare a table like this: inward supplies, particulars, inward supply from registered person, inward supply from unregistered person. Particulars, inward supply from registered person, inward supply from unregistered person. Capital goods, in particulars write down capital goods, in brackets 12%, from registered person 20 lakhs, from unregistered person 10 lakhs. Then cement, in brackets 28%, that is the rate of GST, from registered person 30 lakhs, from unregistered person 20 lakhs. Other inputs 12%, from registered person 40 lakhs and from unregistered person 10 lakhs. Then input services, 18% is the rate of GST, from registered person 30 lakhs from unregistered person 20 lakhs. Compute GST payable under RCM under section 9(4). Okay, I'll give you 5 minutes time. Let's see. You try, just do some rough work and tell me what is a GST payable under 9(4). I am not expecting a correct answer from you, but you try. Six lakh 80. Okay. $12.8 lakhs, 12,80,000. 6,80,000 only. Okay. Finished, everyone? Say this. So you do this computation in 3 simple steps. Step 1. First you take capital goods. Capital goods, whatever you purchased from a registered person, are you required to pay any GST under RCM? No. So what are the capital goods which are purchased from unregistered person? How much? 10 lakhs. On that you need to pay GST under RCM, that is 12% at the rate applicable to capital goods. So 10 lakhs into 12%, 1,20,000. This one everyone would have got. Step 2, cement. Cement always we need to purchase from registered person, otherwise we need to pay GST under RCM. So cement, how much is from unregistered person? 20 lakhs. On that, what is the rate of GST? 28%. So 20 lakhs into 28% is how much? 5,60,000. Now step 3. Other inputs and input services from unregistered person. other inputs and input services from unregistered person divided by total inputs and input services. In the total we need to take everything into 100. Other inputs and input service from unregistered person divided by total inputs and input service into 100. Say this. What is the other inputs and input service from unregistered person? 10 lakhs, 20 lakhs. How much? 30 lakhs by total. What is the total? Everything including cement except capital goods, everything else you take. 30 plus 20, 50 plus 40 plus 10, 100 plus 30 plus 20, 150. So 30 lakhs divided by 150 lakhs into 100. How much? 20%, which means we don't have to pay any GST under RCM because 20% of inward supply can be from a unregistered person. So now what is the total? So total is 5 lakh 60 plus 1 lakh 20, 6 lakh 80,000 is the GST payable under RCM under section 9 subsection 4. Very good. So he said the first time like correct answer, and those who got 6 lakh 80, good. You did this way only or some other way? This way only. So 6 lakh 80,000 is correct answer, but 12 lakh 80,000 no, that is wrong. So here why sir exactly 20% we don't have to pay? That's what the provision na. Cement already we paid here. Beyond cement we don't have anything else to be paid under RCM if we are in the 20% range. That's why we are not required to pay. Is it clear? Now suppose in this question, same question, what will be your answer? Write down. What will be your answer in above question if input services from registered person is 20 lakhs and input services from unregistered person is 30 lakhs. What will be your answer in the above question if input services from registered person is 20 lakhs and input services from unregistered person is 30 lakhs? Step 1 same, correct? What is that? Capital goods. How much is the capital goods value? 10 lakhs. On that 10 lakhs, 12%, 1 lakh 20,000. So there is no change in this. Then step 2. Step 2, it is input, that is cement. Cement, how much is purchased from unregistered person? No change. 20 lakhs into 28%, that will be 5 lakh 40,000, 5 lakh 60,000. Then step 3, other inputs and input service from unregistered person. What is the other inputs and input services from unregistered person? Input services from unregistered person divided by total inputs and input services into 100. So that is numerator will be 40. Why 40? That is other inputs will be 10 and input services will be 30. So 40 divided by 150 into 100. How much? 26.67%, which is greater than 20%. So should we pay any GST under RCM? Yes. So how much? Sir, total 150 lakhs. What is the excess? Out of this 150 lakhs, what is the excess? 6.67% into what is the rate of GST applicable for this? 18%, because 20% is only allowed from an unregistered person. Beyond that 20%, if you buy from an unregistered person, we need to pay GST under RCM at 18%. How much that will come to? So you take 6.6666 so on, because 6.67 when you round off, you may not get the correct number. So 150 lakhs you press in your calculator into 6.66666. End of the calculator, you press 6% into 18%. 1,80,000. So therefore, total GST payable under RCM under 9(4), that will be already 6,80,000 plus this 1,80,000, that will be 8,60,000 will be the answer. Understood here? Any of these two, either this question or this question, either in MCQ or somewhere in a descriptive, you can expect a question like this, okay? And I have given in the book these steps. What are the steps involved? Already I have given how you need to arrive at the answer. And this is the answer. Hope you have written this. Even if not, don't worry, anyhow I will share this PDF so that you will be able to see this. Now see the steps for computation. First you need to take capital goods purchased from registered person, GST not payable under RCM. If you buy from unregistered person, GST payable under RCM at the rate applicable to capital goods. Then cement, step 2, cement you need to take. Purchased from registered person, no need to pay GST under RCM. Purchased from unregistered person, you need to pay GST under RCM at 28%. Then balance inputs and input service from unregistered person divided by total inputs and input services. When you take total, you need to include cement but exclude TDR, FSI, long term lease, electricity, petrol, diesel and natural gas. If it is less than or equals to 20%, okay, you have achieved, no issue, no need to pay any GST under RCM. Suppose if it is more than 20%, in this example we got 26.66%, then we need to pay GST under RCM on the excess over 20%. At what rate of GST? 18% GST. And this computation for capital goods, whether we have 20% allowance, we have allowance of 20% in case of inputs and input service, like that do we have for capital goods? No. So see the first note, the above computation to be made together for inputs and input services, and separate computation of capital goods as 80% condition is not applicable for capital goods. And the regular time of supply provisions will not be applicable. Then when we will do this computation and pay GST? Yearly, not monthly. Generally we need to pay GST on a monthly basis, but in this case we need to do on a yearly basis. Not applicable as computation to be made on annual basis or up to project completion as the case may be. Sir, what is this up to project completion as the case may be? Suppose if the project takes 2 years 8 months, first year one computation, second year one computation, in the third year you need to do computation only for 8 months, because a project is going to get completed in 2 years 8 months, so 8 months only we need to do. And this should be computed separately for each project, and at the time of filing your annual return you have to pay this GST, okay? And I have given one illustration that is for your practice. I have given along with the answer also below. So we did 2 illustrations now. In the same line you try this question also, and the answer I have given below, you can go through that, okay? So you try this today. Today you make this for homework, and if you have not got the answer in tomorrow's class, you ask me as to how we have arrived at the answer, but you try. I want you to try this illustration one. Then we are moving on to section 9 subsection 5. Liability to pay GST on e-commerce operator in case of notified services. So 9.3 we completed, 9.4 we completed, now we are moving on to 9.5. I told you 4 services supplied through e-commerce operator, liability to pay GSTs on e-commerce operator. What are those 4 services? H, housekeeping services, A, accommodation services, T, transportation of passengers through any motor vehicle, and E, eating food in the restaurant. But there are exceptions to this 9.5. Even though these 4 services are covered under 9.5, but there are some exceptional cases where 9.5 will not be applicable. Now, you remember first what are the services under 9.5. This is okay. But now you need to make an effort in remembering what are the cases where 9.5 is not applicable, even though it is housekeeping service, accommodation service, transportation service and eating food from the restaurant. So this area is important. So this is important, non-applicability of section 9.5. Now listen, housekeeping service, we have one condition, supplier should be unregistered. What if supplier is registered? It is not coming under 9.5. Then who will pay GST? Supplier only will pay GST. Ayya, 9.5 says services through e-commerce operator, liability to pay GST is on e-commerce operator. Suppose if it is not covered under 9.5, general rule. As per general rule, who will pay GST to government? Supplier will pay GST to government. Is it clear? So now, first service is what? Housekeeping service. Sir, please concentrate, very, very important, because there are many amendments in this, that's why. So they can test it in MCQs. Don't, no, leave that. So 2 marks, if you leave also it is waste. Easily we will be able to crack the MCQs. Please listen. Housekeeping service. In case of housekeeping services, what is the condition for 9.5? Supplier should be unregistered. What if supplier is registered? Then it will be coming under 9.5 or not? No. Then who will pay GST? Supplier will pay GST. So what is the exception for this H point? If the supplier is registered, it will not come under 9.5. That's an exception. Got it? Then same way. A for accommodation services. Accommodation services, what is the condition for 9.5? Supplier should be unregistered. What if supplier is registered? Then it will not come under 9.5, supplier only will pay. Example, there is a hotel. That hotel is registered. Even registered hotels can list through e-commerce operator. Possible or not? If you see GoIbibo or Make My Trip, e-commerce websites, even big luxury hotels also will be listed there. Which means if the supplier is registered, providing service through e-commerce operator, who will pay GST? Supplier. That hotel only will pay GST. Same is the case of housekeeping services. In housekeeping services, if the AC mechanic is registered, if he provides service through urban company, who will pay GST? The AC mechanic only will pay GST. Is it clear? Then look into T, transportation of passengers through any motor vehicle. Here supplier may or may not be registered. That is irrelevant. But we have one exception. What is that? It's a latest amendment. If there is a company providing transportation of passengers in omnibus. Sir, what is a omnibus? Capacity greater than 6 passengers is called as a omnibus. Capacity greater than 6 passengers is called as a omnibus. What are the vehicles that you can see more than 6 passengers except driver seat pa? More than 6 passengers except driver seat. Innova will come. Yes, Innova, actually Innova is 7-seater. How sir 7-seater? Back 3, middle 3, 6 and driver seat you don't count. So front 1. Even if in the middle 2 bucket seats are there, so they will not give it like a 60-40 seat, 2 separate seats will be there. Even then it will become a omnibus or not. What should be the definition of omnibus? Greater than or equal to 6 passengers. Greater than 6 passengers. Greater than 6 passengers. Now what I am telling is that in Innova, front row driver seat don't take pa, driver seat ignore, 1 passenger front, middle 2 passengers, back side 3 passengers, exactly 6. Will it come under omnibus or not? No. Only that 7-seater Innova, 7 passengers, okay, except the driver seat. When 7 passengers means in the middle row 3 people should be sitting, then only it will be called as a omnibus. You got it? And this Tata Sumo also will be coming under omnibus. Tempo traveler no doubt will come under omnibus. Maxi cab, all these things will come under omnibus. The main confusion is with respect to this Innova or this what is that Ertiga or even Fortuner. These kind of vehicles only confusion will come. Whether it is omnibus or not omnibus, that's why I told you properly you check the seat given in the question. If they are telling 7-seat including driver, it is not a omnibus. Why it is not a omnibus? Excluding driver, it should be more than 7 passengers. More than 6 means what? 7. More than 6 means 7 passengers should be there, then only. It is not greater than or equal to 6. It is greater than 6 passengers. Say this. If there is transportation of passengers through omnibus, okay, that is capacity greater than 6 passengers by a company, then it will be coming under FCM, that is supplier will pay, but e-commerce operator will not pay. For example, lot of private buses are there. So the moment if it is a festive season in Chennai, so I like festival seasons in Chennai. The best time in Chennai is festival season. You know why? Half of the Chennai population will not be in Chennai. Really, half of the people who are in Chennai will not belong to Chennai. They will leave to their hometown, etc. and all. Roads and all will be empty. Superly we can drive, and so nice it will be, pleasant experience. And therefore, this festive time, I will never travel anywhere during festive time, because you take railway station, you take bus stand needless to say. So wherein lot of government buses and all will be there, but that will be full. Private buses, exactly during festive seasons, they will increase the fare like crazily. Usually 200 rupees means at that time it will be 400, 500, 600 and all it will be going. So these private bus operators, majority of the private bus operators are companies. Correct? Parveen Travels or TVT, like that, lot of travels are there now. Apple Travels, a number of people are there. Apple, Pineapple, Orange, like that and all. So these people provide transportation of passengers, and that will be omnibus. Definitely capacity greater than 6 passengers. As they are already registered as a company, let them pay GST. That's why this exception has been created. You understood? So transportation of passengers through e-commerce operator. Who will pay GST? E-commerce operator. What is the exception to this? Company, that is important. Company, what mode? Omnibus. And what is omnibus? Capacity greater than 6 passengers. Then it will be coming under exception where liability to pay GST is on the company supplier. Then look into last one, E, eating food in a restaurant. In case of eating food in a restaurant, there is one exception. Generally, supply of food through e-commerce operator, liability to pay GST is on e-commerce operator. But there is one exception where supplier only will pay GST. There is a restaurant in a specified premises. What is that specified premises? Hotel, which is giving rooms on rent per day greater than 7,500 rupees. What kind of hotel it is? Definitely it is a 5-star hotel. See, the tariff, usual tariff for a 3-star, 4-star hotel will be 5,000 rupees. 4,000, 5,000, this range. The moment it touches 5-star, then the tariff will be greater than 7,500 rupees per day. In Chennai, only 3 to 4 hotels we have this tariff of greater than 7,500. The Park is there, Taj is there, ITZ is there, ITZ Grand Chola, like that one hotel, that is there. But residency and all will be less than that. It's like 6,000, 7,000 rupees, this much only. Okay. What, sir? You are going for a lot of rooms or what? No, general knowledge only, pa. Okay. Already marriage over, vehicle went for garage also, no use. So, therefore, why will I go for hotels and all here? There, this is this. And this eating food from a restaurant. Now, what is it? I told you there is a hotel. That hotel is having a room greater than 7,500 rupees per day. Sir, all rooms greater than 7,500 rupees per day. Yeah? Any one room greater than 7,500 per day. Any one room greater than 7,500 per day. In that hotel, there will be a restaurant. In that hotel, there will be a restaurant. So, one of my friend told me, in Taj Hotel, biryani will be good, chicken biryani will be good. So, then I asked him, who will go there, buy parcel and bring and all? He said, Swiggy, it is available. Out of curiosity, I opened this Swiggy app and searched for the Taj Hotel biryani. So, it was 600 rupees biryani, okay. 600 rupees for what? Chicken biryani. Why 600 rupees? I don't know. Maybe bucket biryani we will get for 600 rupees. And 600 rupees they are charging. But even then people will be buying 600 plus GST. Okay, let them buy. But in this case, who will pay GST? Swiggy will not pay GST. The Taj Hotel only will pay GST. If there is a restaurant inside a hotel which has a tariff more than 7,500 rupees per day, it's an exception to 9 subsection 5 where liability to pay GST is on supplier. If restaurant is in the specified premises, that is in a hotel having declared tariff greater than 7,500 per day. Got it, pa? So now this table you need to remember. So to know what are the services which are covered under 9.5 and what are exceptions to 9.5. In that, this omnibus point is very, very important. Now look into some important points below this. Wherever e-commerce operator is liable to pay GST, they are not required to deduct TCS. So generally, e-commerce operators are required to deduct TCS and remit it to the government on behalf of the supplier. So the supplier can take ITC, that is like a credit with respect to the TCS, and adjust against his liability. So to understand this TCS concept, so as we have this TCS in syllabus now, so we will see how this TCS will work with the help of one example. So kindly look into this TCS chapter. Again we will discuss it later, but just we need to understand how the TCS works. For that I have given page 303. Page 303. Page 303. Say this. There is a supplier, MI Mobile, e-commerce operator, Flipkart, and there is a buyer. Now supplier will enter into contract with e-commerce operator to list their mobile and sell that mobile through e-commerce operator, because if you see this MI, Realme and OnePlus, these people target only e-commerce sales. They don't target this counter sales, like they will not start this, what is that, brand outlets, etc. So iPhone and Samsung, Apple and Samsung, they try to sell it through outlets. Whereas these people like MI, Oppo, Vivo and even Realme, lot of brands, even Nothing, these people and all target mostly the e-commerce market. The two, this e-commerce operator will push it too much. So they will be giving ad, the moment you open the app itself, so this mobile, this mobile launch, that mobile launch, like that, lot of ads they will be giving. So supplier will give a commission to them, that's why they will push it. Otherwise, why e-commerce operators will be interested to sell the mobile? So they get a commission. How much is the commission that they are getting? This e-commerce operator is getting 1000 rupees plus GST at 18%. Understood this first point? Concentrate here, please listen. There is a supplier MI Mobile, e-commerce operator Flipkart, and there is a buyer. Now MI Mobile will enter into contract with e-commerce operator Flipkart to list their mobile and sell it. What is the benefit that e-commerce operator get? E-commerce operator will get a commission of 1000 rupees plus on the GST they need to pay 18%. Now there is a buyer who placed an order for the mobile and supplier packed the mobile and delivered it to e-commerce operator along with invoice for 10,000 rupees plus GST 28%, that is 12,800 rupees. Now e-commerce operator will deliver the mobile to the buyer and from buyer they will collect 12,800. What is the 12,800? 10,000 plus 28%, 12,800 they will collect from the buyer. Correct? Now e-commerce operator is having 12,800. How much they need to remit to the supplier? So in this they need to deduct their commission. How much is their commission? 1000 plus on the 1000 they also required to pay GST. So what is the GST liability on e-commerce operator? Sir, this is supply of goods or supply of services through e-commerce operator? Supply of goods through e-commerce operator. So will it come under 9.5 or it will not come under 9.5? It will not come under 9.5. What will come under 9.5 is supply of services. That too which services? Only 4 services. But this transaction is not 9.5. Then who will pay GST on this mobile? Supplier only will pay GST. Okay. So now e-commerce operator will get a commission. On that commission, e-commerce operator will pay GST. So see the 6th point. What is the GST liability on e-commerce operator? So 1000 into 18%, 180 rupees they will pay GST. Plus, in addition to this, they are also required to pay TCS. Why they need to pay TCS? Sir, this supplier tomorrow may not show the true value of the sale. Now, as a buyer, when you buy from e-commerce operator, are you interested to know about the seller? Will you see who is the seller? No. What is that you check? You check the product. You see the review and you see the price between platform. Same product, Amazon how much, Flipkart how much, Meesho how much, like that you will compare and you will buy. Correct or not? These 3 things only you will check. You are least bothered about who is the seller. Now this supplier will receive the money, tomorrow he may not pay GST to government or he may suppress his value. 10,000 rupees he will show as 5,000 rupees. Possible or not? Now government wanted to know how much is the real value of supply of this supplier. What is the real value of that mobile? So supplier may show a lesser value. So government wanted to know the true value of that. For that reason, they are asking e-commerce operator to pay 1% of the value of that supply as TCS. So this 1% of what? 10,000 or 12,800? 10,000 rupees, not 12,800. So value, because actually government wanted to know only the value. They don't need full amount. They need to know what is the value of the product. So what is the value of the product here? 10,000 into 1%. What is 10,000 into 1%? 100 rupees they will pay as TCS. Is it clear? Now listen carefully. This 180 rupees MI can take as input tax credit. For this 180 rupees, who is the supplier? Flipkart. Flipkart is the supplier. They are providing the services, commission agent services. And who is the recipient? MI is the recipient. So this 180 rupees can be taken as input tax credit by MI, and this 100 rupees TCS can also be taken as TCS credit by MI. What they will do? They have to pay some GST na. How much GST MI is required to pay? 2,800. While paying the 2,800, this 180 rupees input tax credit and this 100 rupees TCS credit they will deduct, and net amount they will pay 2,520. Understood the purpose of TCS? Sir, TCS which is deducted by the e-commerce operator will be remitted to the government on whose name? Supplier name. So, supplier can take this as TCS credit in their cash ledger and they can adjust it against their liability. Now, you tell me how much Flipkart will remit to MI. Just take your calculator. How much Flipkart got from the buyer? 12,800. In this 12,800 rupees, they will be retaining their commission. How much is their commission? So, reduce 1000. 12,800 minus 1000. And what is the GST on commission? 180. That also they will deduct, na? Minus 180. And what is the TCS? 100. That also they will deduct. So, minus 100. So, what is the leftover amount? That 11,520 they will remit to the supplier. Got the clarity? So, amount remitted is price minus commission minus TCS. So, 11,520 will be given to the supplier and the supplier will get these two credits and he will pay the GST, net GST, gross GST 2,800, that is 10,000 into 28%, 2,800 minus 180 minus 100, net GST 2,520. From this illustration, what is the objective of TCS? Simple. Supplier may not pay 2,800 as liability, may reduce his liability and pay a lesser amount. When he pays a lesser amount, government will question him, boss, your e-commerce operator paid 1% 100. If 1% is 100, 100% will be how much? 10,000. But you have showed a lesser value. So, you made a suppression of turnover. So, there will be an audit trial that will be available. That is why they created this concept of TCS. Is it clear? Nothing else. There is no other use of TCS, mainly to know whether supplier suppresses his value or not, for which they created. So, this will be an additional burden for the e-commerce operator. And sir, e-commerce operator may cheat the government, na sir? Possible. If it is their money, they will cheat. Someone's money means why they will cheat? You understood? If it is their liability, they will cheat. Definitely they will cheat. If it is their liability. But it is not their liability. It is someone's liability which they are paying and they are deducting also. So, then there is no problem for them, na? Definitely they will comply with the provisions, and that is where it is like supplier tomorrow suppresses the value. So, this e-commerce operator will give away the clue. See boss, this much I have deducted as TCS. For 1% if it is this much, for 100% how much? Now they will check the supplier's return. In the supplier's return, if it is less than that, they will send a notice to the supplier. Got it? Now, sir, in case when the transaction is covered under 9(5), please concentrate. Right now we are into the discussion of 9(5) only, from there only we jumped there. Whenever the transaction is covered under 9(5), who is liable to pay GST? So, should we know who is the supplier and how much is his liability? Whether government is required to know who is the supplier and what is his liability? No, because the liability to pay GST is on e-commerce operator. That is why TCS not applicable in case of 9 subsection 5. So, TCS section is section 52. The purpose of TCS section is what I told you. Sir, TCS is mainly to know what is the value of supply of the supplier. When the transaction is covered under 9(5), the liability is on e-commerce operator only. So, there is no point in knowing the value of the supplier. That is why TCS is not applicable. So, remember 9 subsection 5 and section 52. 52 is TCS section, which is mutually exclusive. Wherever 9(5) comes, 52 will not come. Wherever 52 comes, 9(5) will not come. That is what I have given. Section 9(5) and section 52 are mutually exclusive. You understood why 9(5), 52 is not applicable? I am repeating it again, carefully listen. So, in case of 9(5), the liability to pay GST is on whom? E-commerce operator. Supplier has any liability? No liability on supplier. When supplier is not having any liability, why we need to know as a government the value of supply of the supplier? We don't have to know the value of supply of the supplier. We don't need to know the turnover of that supplier because he's not having any liability. That's the reason why they are telling to the e-commerce operator not to deduct any TCS. But why TCS is required to be deducted generally? Mainly to know what is the value of supply made by the supplier. Okay. So when e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. They are not required to deduct TCS. Then next point, only in case of notified services under 9(5), e-commerce operator is liable to pay GST. Whereas in other cases, who will pay GST? Supplier will pay GST. And e-commerce operator will have what liability? Only commission. That's what we have seen in this example. Sale of mobile through Flipkart. What is the liability on Flipkart? Mobile commission commission. But on mobile, who is required to pay GST? Supplier. That is, MI Mobile is required to pay GST on the goods. Whereas e-commerce operator is having GST liability only on the commission. That is this. And every e-commerce operator who is liable to pay GST or liable to deduct TCS is compulsorily required to get registered. So this threshold limit and all is not applicable for e-commerce operator. Basically, e-commerce operator is always required to get registered, compulsory registration, every e-commerce operator. Because if 9(5) applicable, 52 not applicable. So this 9(5) means they need to compulsorily register. Then when 52 applicable, 9(5) not applicable. So e-commerce operator liable to deduct TCS is also compulsorily required to get registered. Then what is the one point that you can remember? Every e-commerce operator is compulsorily required to get registered. The next point, every supplier of goods through e-commerce operator. Sir, I am selling goods through e-commerce operator. Now I should compulsorily required to get registered. However, this was an old provision. Now there is an amendment in this provision. Please listen, it's an amendment. If I am a supplier of goods through e-commerce operator and I am making only intrastate supplies, not interstate supplies. If I am making only intrastate supplies through e-commerce operator, I don't have to compulsorily register. I can register only when my aggregate turnover exceeds threshold limit. But I should not make interstate supplies. That's where in Meesho or Flipkart or Amazon, when you enter your delivery pin code, some products, it will show that this product cannot be delivered to your location, like that it will come in many times. Why is it like that? Because the seller who is selling that product should not make interstate supplies, he should make only intrastate supplies because he was an unregistered person. You got it? Sir, previously before amendment, every supplier of goods through e-commerce operator is compulsorily required to get registered. But now after amendment, what they are telling, if the supplier of goods through e-commerce operator is making only intrastate supplies, they are not compulsorily required to get registered. They need to register as and when their aggregate turnover exceeds threshold limit, and meanwhile they need to get a unique enrollment number. This is not registration number, just a unique enrollment number they need to get. So highlight this. Every supplier of goods through e-commerce operator is compulsorily required to get registered. However, if such supplier is making only intrastate supply of goods, then they should register as and when aggregate turnover exceeds threshold limit for registration. But important condition is what? They should make only intrastate supply of goods, no interstate supply. Sir, what about services, supplier of services through e-commerce operator? Whether it is supplier of notified services or other than notified services through e-commerce operator, no compulsory registration. They need to register only when aggregate turnover exceeds threshold limit. Now, this information only I just gave as a chart form in page number 64. Have a look into that. Generally, when is it called as supplies through e-commerce operator? There should be three parties, then only it will be called as supplies through e-commerce operator. Supplier, e-commerce operator and recipient. Supplier and e-commerce operator should not be same. For example, if I am selling my products through my own platform, it will not be called as supplies through e-commerce operator. Example, Amazon sells its own goods in the name of Amazon Basics through their Amazon platform, that is not called as supplies through e-commerce operator. Same way Flipkart, their own brand they have called as Flipkart Smart Buy, like that one brand they have, that is their own brand. If they sell their own goods through e-commerce operator, it will not be called as supplies through e-commerce operator. Same way, Max Showroom is selling the garments through their app, that is not called as supplies through e-commerce operator. If they sell the garments through Myntra, then it will be called as supply of goods through e-commerce operator. You got the clarity? Same way, PVR Cinemas, if they allow you to book the ticket through their own app, it will not be called as supply of service through e-commerce operator. If PVR Cinemas allows you to book the ticket through Book My Show, then it will be called as supplies through e-commerce operator. So basically, in case of supplies through e-commerce operator, there should be three parties: supplier, e-commerce operator and recipient. Supplier and e-commerce operator should not be same. Now, supplies through e-commerce operator is categorized into three. Supply of goods through e-commerce operator, example Amazon, Flipkart. Supply of notified services through e-commerce operator, example that HATE, Urban Company, Swiggy, etc. Whereas supply of other than notified services through e-commerce operator, Book My Show. Book My Show is not covered under HATE na. For notified services, Book My Show is not covered. So it is other than notified services. Now, in the first case, supply of goods through e-commerce operator, who will pay GST? Supplier, e-commerce operator, recipient? Supplier. So liability to pay GST with respect to supply is on the supplier. Whereas in the second case, supply of notified services through e-commerce operator, who will pay GST? Supplier or e-commerce operator? E-commerce operator. Liability to pay GST on e-commerce operator with respect to supply. Third case, in case of supply of other than notified service through e-commerce operator, who will have liability to pay GST? Supplier or e-commerce operator? Supplier. Liability to pay GST with respect to supply. Now, whenever liability to pay GST is on e-commerce operator, no problem. They will only pay GST on the full transaction. Whereas, when the liability to pay GST on the transaction is with supplier, then e-commerce operator is having what liability? They have to pay GST only on the commission and other charges, they will pay GST. Got the clarity? Sir, in case of supply of notified services through e-commerce operator, entire transaction e-commerce operator only will pay GST, so supplier don't have any liability. Whereas, in case of supply of goods through e-commerce operator or other than notified service through e-commerce operator, GST on the transaction is payable by the supplier, then e-commerce operator will have only liability on commission. They need to pay GST only on the commission part. Is it clear? Commission and other charges. Now, look into this illustration to understand this. Messrs. ABC Hotel, they started business on 15/5/2020 and they provide direct services to their guests, accommodation service. Also, they have listed through e-commerce operator and they provide services to their guests. If they provide services through e-commerce operator will get a share of 25% and ABC Hotel will get a share of 75%. So 75/25 is the sharing ratio. And for ABC Hotel, the applicable threshold limit will be 20 lakhs. Now, 1st May 2020, they commence the business. They can make direct supplies as well as supplies through e-commerce operator. Direct supplies means what? Customer will directly go to the hotel and book the room. That is known as direct supplies. Whereas supplies through e-commerce operator means customer will book the room through e-commerce platform, GoIBibo, Make My Trip, etc. There they will be booking the ticket, booking the hotel. Now, direct supplies, they got 5 lakhs. Supplies through e-commerce operator, 5 lakhs. Now, direct supplies 5 lakhs, why it is given as no GST? They commence business only this month, their aggregate turnover does not exceed threshold limit, so they are not registered. When they are not registered, they will not pay GST, correct? Whereas, if they provide services through e-commerce operator, why e-commerce operator will pay GST, that 5 lakhs? Sir, when the supplier is unregistered, this is what service? Accommodation service. Accommodation service, when the supplier is unregistered, it will come under 9.5. If you have a doubt, you check the previous to previous page. HATE, in case of accommodation services, supplier should be unregistered. Yes, in this case, a supplier is unregistered. So, due to that reason, liability to pay GST is on e-commerce operator. So, on 5 lakhs, e-commerce operator will pay GST. Same way, June month also. June month, 5 lakhs direct supplies, no GST. But with respect to 9 lakhs, who will pay GST? E-commerce operator shall pay GST. So, here, if you observe, so what are the total supplies of the hotel? 5 plus 5 plus 5 plus 9. So, 10 lakhs and 14 lakhs is the aggregate turnover of ABC hotel. Sir, that 5 lakhs and 9 lakhs, even though e-commerce operator pays GST, but that should be including the aggregate turnover of the hotel. Is it clear? Hotel will not pay GST on 10 lakhs, boss, but e-commerce operator will pay GST on this 14 lakhs, na? Even though e-commerce operator pays GST on 14 lakhs, but what should be including the aggregate turnover of the hotel? Their direct supplies 10 lakhs and supplies through e-commerce operator 14 lakhs. Everything should be included in their turnover. Now, they are crossing the aggregate turnover, correct? When they cross the aggregate turnover, they need to register. The moment they register, it is no more 9 subsection 5. Why it is no more a notified service? Accommodation services, if the supplier is registered, supplier only should pay GST. So, on this 10 lakhs, 8 lakhs, 5 lakhs and 5 lakhs, GST is payable by ABC Hotel. Understood the reason why ABC Hotel will pay? Because the moment hotel is registered, so it is no more a notified service. So, liability to pay GST is on the hotel. Then in this case, what is the liability on e-commerce operator? Very good. Commission. How much commission they will get? 25% of what? Total 10, 8, 5 and 5 No, only on 8 and 5. What is 8 and 5? 13 lakhs. 13 lakhs into 25% is their commission. On that only they need to pay GST. Clear here? So, see the first point. When e-commerce operator is liable to pay GST under 9.5, they shall issue invoice to the guest. So, therefore, for this 5 lakhs and 9 lakhs, who will issue invoice? Hotel, e-commerce operator. E-commerce operator. So, e-commerce operator will issue invoice for 14 lakhs plus GST to guest. Up to the date when ABC Hotel is liable to get registered, they shall raise bill or statement to e-commerce operator to collect their share. Now, out of this 14 lakhs, ABC Hotel should get their share, na, 75%. So, how much is 75% of 14 lakhs? 10.5 lakhs as their share. But even though they get 10.5 lakhs, but how much should be included in their aggregate turnover? However, in their aggregate turnover, 14 lakhs shall be included as per CBIC circular. Why? Because aggregate turnover says not only your direct supplies, but also supplies through e-commerce operator is also counted as your turnover, even though you are not raising invoice for that, but e-commerce operator raise invoices, so that these people will quickly get registered. If that 14 lakhs fully you add in this turnover, these people will get registered. So far they are unregistered. So once they register, they will only pay GST, na? That's why full 14 lakhs should be added in their aggregate turnover. As and when ABC hotels are liable to get registered, they shall issue invoice to the guest. Correct? On entire 10, 5, 8 and 5, that is 28 lakhs, Who will issue invoice? ABC Hotel only will issue invoice. Now, as and when ABC Hotel are liable to get registered, e-commerce operator will pay GST only on commission. What is their commission? 8 plus 5, 13 into 25%, 3.25 lakhs plus GST. Clear? So, that is about this illustration. If at all they want to complicate your life, they can create a illustration like this. Okay, this is the maximum difficulty that they can ask in 9.5. Now see the next page. Whenever e-commerce operator is liable to pay GST, 9.5, who is liable to pay GST? E-commerce operator. Now they need to register. If they have physical presence in India, they will register in India. What if they don't have physical presence? Check whether they have a representative in India. That representative will register and pay. What if they neither have physical presence nor they have a representative? Example, Ola is having a physical presence in India, it's an Indian company, so they will register and pay. But Uber is not an Indian company, it's a foreign company, but they have representative office in India, so that representative office they will register and they will pay GST. But if you take urban company, it's a Dubai based website. They neither have physical presence nor they have a representative in India. So they should appoint a representative in India for the purpose of registering and paying GST. Got it? So say this. So is the person e-commerce operator? No, leave it. So is supply made through e-commerce operator? Yes. Is that supply of service notified? No. Then e-commerce operator not liable to pay GST. If it is a notified service, e-commerce operator is liable to pay GST. Whether e-commerce operator is having physical presence in the taxable territory, yes, then e-commerce operator will be liable to pay GST. No, e-commerce operator is not having physical presence. Then do they have a representative in the taxable territory? Yes, then that representative shall be liable to pay GST. If they neither have physical presence nor they have a representative, e-commerce operator shall appoint, it's not may, shall appoint, mandatory, shall appoint a person in the taxable territory for the purpose of paying tax, and such person is liable to pay tax. Got it? This is about 9.5. In this, only one area I have not discussed, that is page number 63. Page number 63, one table is there, that we will discuss after completing TCS. So you just put a question mark, you fold that page and keep. We will complete TDS TCS chapter. So because this is connected to TDS TCS, then we will come back and connect between this 9.5 cases and TDS TCS. Okay. With this, this chapter is over. We have completed practice manual questions also. We'll take a break and thereafter we'll start with new chapter, segment 4, value of supply, which is an important one. Take a break for 15 minutes. Once for all, come back. Thereafter, don't leave in the middle. 15 minutes. Okay. Look into page 74, segment 4, value of supply. Section 15 talks about value of supply. Value of supply is required for the purpose of determining how much GST we need to pay. From supply chapter, we knew whether a transaction is supply or not a supply. And from composite supply, mixed supply, we came to know which rate to be taken. Then from liability to pay GST, we came to know what are taxable supplies, exempted supplies, and who is liable to pay GST. Now in value of supply, we are understanding on what value we need to pay GST. So that value as per section 15 subsection 1 is the transaction value. Transaction value means what? Price actually paid or payable, or in other words, the price involved in the transaction. Example, you are going to a theatre wherein the ticket price is 300 rupees. So the 300 rupees is the transaction value. You are purchasing a water bottle for 20 rupees, the 20 rupees is the transaction value. Like the price which is involved in the transaction is known as the transaction value. So say this, as per 15 subsection 1 and 15 subsection 2, value of supply is the transaction value, that is price actually paid or payable. if the following conditions are satisfied. What are the conditions? Two conditions. Price must be the sole consideration. Supplier and recipient are not related. If all these two conditions satisfied, then only we will take transaction value. What if supplier and recipient are related? Will not take the price involved as the transaction value, because logically between related parties the price involved is not a genuine price, it is an influenced price. Due to that reason we will not take transaction value. Then what, sir, we will do? We will go with the market value. So open market value, like that we have one concept that we will be taking, which is nothing but, in income tax many places we come across something called as FMV, fair market value. So that only in GST we call as open market value. Suppose if price is not the sole consideration, when price is not sole consideration, apart from price, if I am getting any other consideration means, say I am purchasing, like you are purchasing one TV and you are giving your old TV also, plus you are paying 20,000. So is 20,000 the sole consideration? No. Apart from 20,000, you are also giving your old TV to the dealer. So the dealer is getting a non-monetary consideration. That is known as price is not the sole consideration. So then transaction value will not be taken. So what are the two conditions for transaction value? Supplier and recipient are not related. Number two, price must be the sole consideration. If any one condition is not satisfied, then transaction value not applicable, value determined as per CGST rules. What is that value determined as per CGST rules? Write down open market value. Open market value will be taken. The value determined as per CGST rules, which is nothing but the open market value, that open market value will be taken. Okay. Now, look into this. There is a supplier, there is a recipient. Supplier is making some supply of goods or services or both, for which the recipient makes the payment. That is the transaction value. For this transaction value, we have some inclusions. In that, the first inclusion, 15.1 talks about meaning of transaction value. 15 subsection 2 talks about inclusions. In that 15 subsection 2, the first one, 15.2a, any taxes, duties and cess by whatever name called other than GST should be included in the value. Example, you buy a ticket, 300 rupees ticket, and entertainment tax 30 rupees. Now while computing GST, whether this entertainment tax 30 rupees to be added or not required to be added, should be added. Means in the computation, GST will come at the end. We include all taxes, duties, etc. and finally we compute the GST. So what does 15.2a says? First inclusion says any taxes, duties and cess by whatever name called other than GST should be included in the value. That is about 15.2a. Then 15.2b, recipient is incurring some expenditure on behalf of the supplier. That expenditure should be included in the value, because it's an indirect consideration to the supplier. Actually that amount who should incur? Supplier should incur. But who incurred it? Recipient incurred on behalf of the supplier. Therefore it should be included in the value. Clear? For example, I am a finished goods manufacturer and I have to pay to my raw material supplier, but I did not pay. You are my recipient. I asked you to make the payment to the raw material supplier. So instead of me paying, now you paid because of me only. So means it's an indirect consideration. Example, I collect 10,000 rupees from you and I have to pay 4,000 rupees, but I asked you to make the payment of 4,000 rupees. Now what will be my value of supply? 10,000 plus 4,000, which you incurred on behalf of me, is also my consideration, so that should be added. So that is about 15.2b. What is 15.2b? Recipient incurring expenses on behalf of supplier. 15(2)(a) is what? Taxes, duties and cess. Why? Whatever name called other than GST. 15(2)(b) is what? Recipient incurring expenses on behalf of supplier. What if recipient is incurring expenses on his own account? Will it be included in the value? No, it will not be included in the value. For example, you go to one electronic shop, you buy a TV, and now what happens? They will deliver the TV at the gate. Now you need to take care of this up to your house, you need to transport, but you don't have a vehicle to transport. So you requested them to transport that, for which they collected some charges, but this transportation charges is incurred by the recipient on his own account. So it will not be included in the value. You understood? Any expenditure incurred by the recipient on his own account will not be included in the value. So therefore it is not liability of supplier incurred by the recipient in this case. Now 15(2)(c), any expenditure incurred by the supplier. So previous point is expenditure incurred by recipient on behalf of supplier. Now this point is expenditure incurred by the supplier and charged to recipient, that should also be included in the value. But here we have one exception. Suppose if the supplier is incurring this expenditure as a pure agent of the recipient, then it is not required to be included in the value. But this pure agent concept is not there for your syllabus. So in the study material they have not given this pure agent. So due to that reason you don't have to worry about this. So I am just showing you for proof. So this is your updated study material, and in this value of supply, so they have not given rule 33. Actually rule 33 talks about pure agent. They have not given anything related to that, just the section 15, because I have gone through. So nowhere we have the information related to pure agent. Okay. So incidental expenses 15(2)(c), actually it should come here, but they did not give. So due to that reason don't worry about this. So this is not applicable. Just as a one line you remember, if it is expenditure incurred as a pure agent, it will not be included in the value. But for CMA intermediate exam this concept is there. Okay. And so as many students requested me, sir please take classes for CMA inter also. So but I am not able to do that because there are some differences in the syllabus for CA and CMA. That's why these lectures I am taking for CA intermediate, and separately the extra topics for CMA I will post one video in my YouTube channel, all CMA inter extra topics, so that if any of you is writing for CMA inter or if your friends are writing for CMA inter, ask them to follow the same lectures plus extra one more video they need to watch, that will be for CMA inter, because for them the portion is more compared to you. Okay. But the depth will be less. So portion is more, but the complicated questions and all will not be asked for them. Now coming back to this, so pure agent concept not there, so leave it. Any expenditure incurred by the supplier and recovered from the recipient should be included in the value. But when sir that expenditure should be incurred? Now check whether it is incidental expenses or other expenses. So related to these expenses I have given in detail in the next page. You please have a look into one chart. Expenses incurred by the supplier and recovered from the recipient. If it is pure agent it will not be included, but we don't have to bother about that. Suppose if it is in the course of supply, it is divided into two, incidental expenses and other expenses. What is the meaning of incidental expenses? Without incurring that expenses, the supply cannot be made, is known as incidental expenses. Whereas Other expenses means even without incurring that expenses, supply can be made, but these expenses adds value to the supply. Example, you go to a hotel, restaurant and you order for one dosa. So, when you order for dosa, will they give only dosa or they will give chutney and sambar also? They give chutney and sambar also. So, this chutney and sambar is incidental expenses. Without that chutney and sambar, the supply cannot be completed. So, expenditure incurred in making chutney and making sambar is coming under incidental expenses. Whereas, vadakari, like that one extra dish is there. So, lot of people who order dosa will also order for vadakari. And if you don't know what is vadakari, you are not eligible to be in Tamil Nadu. So, you should be knowing it, okay. So, then why the hell you are in Tamil Nadu? Better leave the state, okay. So, you should be knowing. So, because like how in Mumbai people, vada pav means we should know what is vada pav because that is their, culinary dish. So, without vada pav they cannot. Morning, afternoon, night, anytime they will eat vada pav and survive. We are knowing na. So, like that, so you should also know about vadakari. Vadakari is one dish which is made out of leftover vada of the previous day. So, they will make this, but the taste of this will be very, very good. And this vadakari will not come under incidental expenses. Why it is not incidental expenses? Even without that, the supply is completed, but this will add value to the product. So, that is known as this vadakari, okay. Other expenses. Now, one more example you take, when you buy a car, for that car there will be lot of accessories, even for two-wheelers, lot of accessories, this front bumper or mat, foot mat like that and a lot of things they will be giving. All these are incidental or others, others. Why others? Even without that bumper, even without the foot mat, the product is ready. But these are just adding value, so it will come under other expenses. Understood the difference between incidental and others? Now, if it is incidental expenses, always it should be included in the value. Don't see when it is incurred, whether it is incurred before or at the time of supply or after supply, always it should be included in the value. So, before or at the time of delivery of goods or supply of service, or after delivery of goods or supply of service, it should be included in the value. Example, packing charges. Why packing charges is incidental? Sir, without packing charges, how the product can be given? So, packing charges is incidental. Whether it is before delivery of goods or after delivery of goods, before delivery of goods. So, definitely it should be included in the value. Installation expenses. Installation expenses is also incidental. For example, you are buying a AC, they will do the installation, it is incidental. Whether it is before or at the time of delivery or after delivery they collect, after delivery they collect. But as it is incidental, it should be included in the value. Is it clear or not? The moment you know that it is an incidental expenses, always it should be included in the value. Don't check when is it incurred. But if it is other expenses, check whether it is before or at the time of delivery of goods or supply of services. Yes, then it should be included in the value. If it is after delivery of goods or supply of services, it will not be included in the value, it will be excluded from the value. Clear? For example, you purchased a two-wheeler and there are multiple color options in the two-wheeler. So, therefore, you purchased a two-wheeler with copper color, copper orange, okay. So, you purchased that and you didn't see how it is, but you came to know, you thought that copper orange is a good color, like that you have purchased it and the bike got delivered. When the bike got delivered, that orange is not what you expected, it is BJP orange. And immediately everyone started asking you what you joined for BJP or what. So, you are driving this color vehicle, so police and all unnecessarily stopping, okay. So, out of practical experience only I am telling you this. Therefore, I had one bullet, Royal Enfield. and this Royal Enfield, I was having black color, and it was 10-year-old vehicle, and I wanted to sell that, but I don't want to sell because this was the first bike that I have purchased, so sentiment will be there, so I don't want to sell this bike. And what I did, I gave it to one mechanic, one premium mechanic only, and I told him I want to change the color. And he told me, sir, multiple colors are there, sir, you can choose like that. So he told me some options, already black only, so why I should go for black? So usually this copper color, is a very good color. Actually, it is like dark orange, brown orange mix kind of, it will be copper color, literally copper color. That bike I saw somewhere on the road, and I thought, okay, this color will be good, and I said, you put it. He did the painting and he delivered the bike. Literally it is like orange color, literal, pure orange color. And therefore I said, I don't need this color, because everyone is asking, police unnecessarily stopping. So far they have not stopped me for 10 years. I will wear helmet, everything will be there. But they are stopping and they are asking me to show everything and all. So then I thought, okay, it is risky, and like that color changing will happen. So say one person purchased a bike with one color and he want to change the color. When he want to change the color, so that will be chargeable, some expenditure. So usually new vehicle means will not take risk, we will give it to the dealer only to change the color, company color only they will be changing. Now in this case, this expenditure is incidental expenditure or other expenditure? Other expenditure. Whether it is before or at the time of delivery or after delivery? After delivery. So therefore it should not be included in the value. That's a separate activity. You understood? Then transportation charges. You place an order for a product from Amazon or Flipkart. Now they also charge a delivery charges. Is the delivery charges incidental expenses or other expenses? Other expenses, because the delivery charge is not related to the product, that is separate, it is other expenditure. But is it incurred before or at the time of supply or after supply, or before the time of delivery or after delivery? Before the time of delivery, so therefore it should be included in the value. You understood this here? So tell me, what is the charge that you need to remember? Expenditure incurred by supplier and charged to recipient divided into 2. What is that? Incidental expenses, other expenses. Incidental expenses always should be included in the value. Other expenses divide into 2, before at the time of delivery or supply of service, or after delivery or supply of service. If it is before at the time of delivery of goods or supply of service, to be included. If it is after supply of goods, that is after delivery of goods or supply of service, not to be included. But the challenge here is to know what is incidental expenses and what is other expenses. Sometimes by seeing the question we will be able to know whether it is incidental or others. Sometimes we don't know. What should we do, sir? You apply other expenses only, because incidental expenses only one place, if it is after delivery it should be included, that is installation. Installation alone if you see, it should be included. But all other expenses if you see, before or at the time of delivery, it is given means it should be included, otherwise it should not be included. Only one expenditure, even after delivery of goods or supply of service, it should be included. What is that one expenditure? Installation expenditure. This way easily you remember, okay. So when we start doing the problems and solutions, you will get to know that. Then 15.2a, 15.2b and 15.2c we completed. So tell me, what are these three inclusions? First, taxes, duties and cess, by whatever name called other than GST. Then second, 15.2b, recipient incurring expenditure on behalf of supplier. Then third, 15.2c, supplier incurring expenditure and charged to recipient. Incidental anytime, other expenses before or at the time of delivery of goods or before at the time of supply of services. Then 15.2d, interest. Interest, late fee or penalty for delay in receipt of consideration. That should also be included in the value. This is not interest on account of loans, advances, deposits. This is on account of delay in receipt of consideration. Then 15(2)(e) is related to subsidies. Okay. So these 4 inclusions you understood now, 15(2)(a), B, C, D. Now look into 15(2)(e). This is in page 77, 15(2)(e). Subsidy received by the supplier divide into 2, directly linked to the price, not directly linked to the price. Sir, what is the meaning of directly linked to the price? Means subsidy is received. Please concentrate, the subsidy point is little tricky. Subsidy generally is like a grant, and that grant is based on our outward supply. It is known as subsidy directly linked to the price. If the grant is not related to our outward supply, for a particular activity if it is given, then it is called as general subsidy. Example, subsidy for every electric vehicle sold. What type of subsidy? Directly linked to the price. Subsidy for setting up a solar plant, not directly into the price. Why? You are setting up a solar plant, for that they are giving. Subsidy for setting up a factory in the backward region, not directly linked to the price. Are you understanding this? These are some subsidies not related to your outward supply. Outward supply means for every product sold or every service rendered, when you are getting some money, that is known as directly linked to the price. So say this, directly linked to the price means subsidy paid on the basis of every product sold or every service rendered. Suppose if it is not directly linked to the price, it is general subsidy. Please ignore it for valuation purpose. You treat it like donations, conditional donation, unconditional donation, like that you treat. Which subsidy you should treat like donation? General subsidy, not directly linked to the price. Such subsidy shall be ignored from value even though it is covered under the definition of consideration. What if it is directly linked to the price? Now check whether it is from CGRSG or others. Why CGRSG? Because we have one point related to consideration, meaning of consideration. You check the meaning of consideration, turn the previous chapter, you can see consideration excludes refundable security deposits and subsidy from CGRSG. So subsidy from CGRSG is not treated as consideration. Consequently, it should not be included in the value. You got it? So directly into the price from CGRSG, such subsidy shall be excluded from the value. What if the subsidy is from other than CGRSG? Should it be included in the value? Yes, such subsidy shall be included in the value. Now see this. Say there is a CA coaching center, and that CA coaching center is providing coaching to below poverty line students, okay, and they collected from the student, they collected 10,000, and because they are providing coaching to below poverty line students, from a NGO they got 2,000, and from government they got 3,000. Now you tell me what should be taken as the value of supply for payment of GST? 12,000, 10,000, 13,000, 15,000? 12,000. First, whatever money that is collected from the student should be taken as the transaction value, and that should be included. Whereas subsidy from NGO, so all these two subsidies are directly linked to the price. For every student they are giving this subsidy. So this is directly linked to the price. From other than CGRSG, should it be included in the value? Yes. Whereas if it is from government, should it be included in the value? No. If it is from CGRSG, it will not be included in the value. Therefore, what will be taken as the value of supply? Value of supply will be equal to 12,000. Understood here? Simple. Now, the problem is when the price given is after considering the subsidy or without considering the subsidy, when we don't know only, the confusion arises. When they give clearly like this, no problem, easily we will be able to arrive at the answer. So this 10,000 is transaction value, 2,000 is subsidy from NGO to be included in the value, 3,000 is from government, it will not be included in the value, therefore value of supply 12,000. Now what they will do, they will tell the price per student 10,000, subsidy from NGO 2,000, subsidy from government 3,000, and here they gave clearly that 10,000 excludes 2,000 and 3,000. What if they are not giving in the question? Then in that case, two assumptions are possible. The given price is after considering the subsidy, or the given price is without considering the subsidy. What is the meaning of price after considering the subsidy? Price after considering subsidy means there is some original price. From that original price, we reduce the subsidy and the given price is arrived. Okay. For example, whatever question 10,000 rupees is given and the question is silent. Now, the 10,000 is assumed to be price after considering subsidy, means there is some original price. What is that original price? Some X. From that X, they reduce 3,000 and 2,000 and they arrived at 10,000. So, the given price is arrived based on that. You understood? So, in the given price, subsidy is reduced. That is, X is the original price minus subsidy, that is the given price. And subsidy from CGRSG, so that is to be ignored. Subsidy from others to be included. Why subsidy from CGSG ignored? Subsidy from CGSG to be excluded, and the given price it is already excluded, so therefore you ignore it. But subsidy from others to be included and the given price it is excluded, so we need to add. Then view 2, there is another view also we can take. What is that? Price without considering subsidy. Price without considering subsidy means what? In the given price, subsidy is not reduced. They have not reduced the subsidy, which means the original price itself is the given price. You please remove this. The original price itself is the given price. Whatever is the original price, that itself is the given price, and they have not reduced the subsidy yet. Okay. Now, let us see a question to understand. See the next page, there is one question. C Limited owns a coaching institute in Puri. The institute charges 18,000 per student for giving training in digital marketing. However, this training program is subsidized by different institutions as follows. State Government of Orissa 500 per student, PQ Charitable Trust 200 per student, and Government of Japan 100 rupees per student. Now, the question is silent. Whether this 18,000 is after considering subsidy or without considering subsidy, they have not given. So, now suppose if it is given as after considering subsidy, what would have happened? Let us see. So, if the price is after considering subsidy, so what is the given price here? Given price 18,000, do not write, it is already there in the book itself, but I am writing because I like writing. Okay. So, I am explaining you. So, given price 18,000 is after considering subsidy. What is the meaning of this statement? So, there is some X as the price. From that X, they reduced 3 subsidies. What are the 3 subsidies given in the question? How much state government? 500. Next. PQ Charitable Trust, how much? 200. Then Government of Japan, 100. That will be 18,000. This is the meaning of this statement. The given price 18,000 is after considering subsidy, means there is some original price. From the original price, they reduce this subsidy and they arrived at 18,000. Now, what we need to do? we need to take the transaction value. What is the transaction value? 18,000 is the transaction value under section 15. Now, what is the first subsidy? 500. 500 is from whom? State government. Subsidy from state government. Subsidy from state government as per provision to be included or to be excluded? To be excluded. And all these three is per student, means directly linked to the price. Okay. So it is to be excluded. And what we have done in the given price? As per provision, it is to be excluded. In the given price, it is already excluded. Therefore, ignore. Don't do anything. Then, what is the 200 rupees next subsidy? This 200 rupees is from a charitable trust. Subsidy from trust. Subsidy from trust to be included or to be excluded? Only from CG or SG to be excluded. All other subsidies is to be included. And in the given price it is excluded. So we need to add how much? 200. Then next one, this 100 rupees is what? Subsidy from government of Japan. Whether it is to be included or excluded? Only central government, Indian government, central government or state government to be excluded. All other subsidies is to be included. But in the given price, what we have done? Deducted, excluded. So we need to add how much? 100. So therefore, the value will be taken as value of supply will be 18,300. Understood here? Suppose if it changes to price without considering subsidy, like that if it is given in question. So in question you need to check properly whether it is given as after considering subsidy or without considering subsidy. Suppose if the question says the given price is after considering subsidy, this is how you need to arrive at the answer. Suppose if given price 18,000 is without considering subsidy, then what does it mean? There is some original price X, from that they did not reduce any subsidy, so that X itself is 18,000, they have not reduced any subsidy. Now in this case, what will be taken as a transaction value? Same transaction value under section 815(1) is 18,000. Now what is the first subsidy? First subsidy is what? 500 rupees. That is from subsidy from state government as per provision to be included or to be excluded? To be excluded. What we have done in the given price? We have not at all excluded, correct? So we need to deduct. How much is that? 500. Then what is the next subsidy? Subsidy from trust. Subsidy from trust, as per provision it is to be included, and in the given price we have not done anything, means it's already included, so ignore. You understood? We have not deducted here, means it's already included, so ignore it. Then subsidy from government of Japan, so as per provision it is to be included, in the given price it is already included, so ignore. Now this will be taken as the value of supply, that will be 17,500. Understood? So depending upon the question we need to change. Sir, what if question they did not give anything? Usually assumption we take is that in the absence of information in the question, consider after considering subsidy, view 1 for exam. Okay. So we need to take this only if the question is silent. Okay. That is about this subsidy point. Now tell me what are the 5 inclusions? Come on. say this 15(2)A, 15(2)B, 15(2)C, D and E. 15(2)A. So remember this keyword TRCIS. Okay. So T for taxes, duties and cess other than GST, or recipient incurring expenses on behalf of supplier. Yes, supplier incurring the expenditure and charge it to recipient. I, interest, late fee, penalty for delay in receipt of consideration. Yes, subsidy directly linked to the price other than CG or SG. Then some important points related to this. Only when taxes are charged to the recipient, it should be included. What does it mean? Say, I am a property owner. I have a commercial property and I am collecting rent from a tenant. Now, I pay property tax to state government, and that property tax I am not recovering it from the tenant. Should this property tax be included for payment of GST? No, because I am not charging it to the tenant. So therefore, it should not be included. Just because any taxes, duties and cess by whatever name called should be included, don't include everything if you are not charging it to the recipient. So supplier should recover that money from the recipient, then only it will be included in the value. So only when taxes are charged to recipient, it should be included. Example, municipal tax paid by property owner but not charged to tenant, not required to be included in the rent. Then what if the amount collected, but we have not collected any GST from the customer? We don't know that we need to collect GST from the customer, so we collected only the price. So then the amount so collected from the customer is assumed to be inclusive of GST. Say this, a trader charged 500 rupees for a product and GST not collected from the recipient separately. Now this 500 rupees itself should be assumed to be inclusive of GST. If the 12% is the rate of GST, how much will be the GST payable? Not 500 into 12%, 500 into 12 by 112. 500 into 12 by 112, that is 54 rupees will be taken as the GST payable. Is it clear? Then next, both value and GST to be rounded off to nearest rupee. So what does it mean? Generally tax is 45.85, so you take it to 46. Tax is 45.25, you take it as 45. So that is the meaning of rounded off to nearest rupee. 50 paise or more means you take it as next rupee. If it is 50 less than 50 paise, you ignore that fraction. And as per CBIC circular, TCS collected under Income Tax Act. Actually, GST also we have TCS, income tax also we have TCS, but these two TCS is not same. In GST TCS, namesake only it is TCS, but it will not work like TCS as per Income Tax Act, because in case of GST TCS, who is deducting the TCS? E-commerce operator, like TDS only you should take. Whereas income tax TCS, who will be collecting? The supplier will collect the TCS from the recipient and remit it to the income tax department, and the recipient, while filing his income tax return, he will be taking it as a credit. So let's try to understand as to how this income tax TCS will be working. So there is a car dealer here. There is a car dealer. In case of car, sale of car, there is TCS, correct? So there is a car dealer, and this car dealer is engaged in sale of car to a buyer. So Mr. X is purchasing the car, sale of car, and from Mr. X, what and all will be collected by the car dealer? Car dealer will collect the price plus GST plus TCS will be collected. Let's take the car value as somewhere like 15 lakhs is the car value, and TCS will be somewhere like 15,000. Usually 1% TCS will be collected. So price 15 lakhs and GST at 28% and TCS at 1%. Now the question is, while computing TCS, whether GST to be included or not. While computing TCS, GST to be included or not to be included? Not to be included. This is as per CBDT circular, and that will come in income tax. Okay. Now the question is, while computing GST, in indirect tax what is the question? In income tax what is the question? While computing TCS, whether GST to be included or not? Not to be included. That is as per CBDT circular. Now I am talking about CBIC circular. While computing GST, whether TCS should be included or not. But as per 15(2)(a), any taxes, duties and cess by whatever name called other than GST should be included in the value. Then logically this TCS should be included in the value, na? No, because this TCS is actually not a tax on income. Sir, that Mr. X is spending money. When Mr. X is spending money, car dealer is collecting this TCS 1%, and that 1% will be remitted to the government in the name of Mr. X. Now when Mr. X is filing his income tax return, he will tell whether he has a taxable income or not. What if Mr. X is not having any taxable income as per Income Tax Act? He may have agriculture income, na? When he is having agriculture income, so then he is not having any taxable income. So entire 1% he will get as a refund or not? Then what is the purpose of TCS under Income Tax Act? Just to know what is the source of income of that person. For that reason only they created this. Means it is not a tax, it is an interim levy to know whether a person has a source of income or not. So due to that reason, don't treat it as tax. Accordingly, while computing GST, TCS should not be included in the value. Okay. So what is that you need to know? While computing GST, TCS should not be included in the value. That is this point. See here. As per CBIC circular, TCS collected under Income Tax Act not required to be included in the value. Why it should not be included in the value? Because TCS is not a tax but an interim levy. For example, purchase value of timber wood is 1 lakh and TCS charged at 2.5%, rate of GST 18%. Now while computing this 18%, whether 2.5% we need to add? No. And again while computing 2.5%, whether we need to add this 18%? No. So see how the valuation, how the computation will be. Amount before tax 1 lakh. TCS will be computed on 1 lakh into 25%. Means while computing TCS under Income Tax Act, whether GST to be included or not? No, GST should not be included. That is 2,500. And while computing GST, TCS should not be included. So GST is also computed on 1 lakh into 18%. Clear here? So what are the 2 points you need to remember for TCS under Income Tax Act? While computing TCS under Income Tax Act, GST should not be included. Again while computing GST, TCS should not be included. Then next, incidental expenses, other expenses discussion already we have completed, and look into illustration 1. Admission to True Theatre is rupees 90 per ticket for a Tamil movie as well as a Hindi movie, plus entertainment tax at 10% on Tamil movie and 20% on other languages. In the month of November, True Theatre sold 2000 tickets of Tamil movie and 1500 tickets of Hindi movie. Find the value of taxable supply. So first Tamil movie we will take. What is the price per ticket? 90. How many tickets they are selling? 2000 tickets. And while determining the value for payment of GST, should we add entertainment tax or not? Yes, because entertainment tax is taxes, duties and cess by whatever name call other than GST. Therefore, it should be included in the value. Understood? So, this 90 plus 10%, 99 and multiplied with 2000 tickets, 1,98,000 will be taken as the value. Whereas Hindi movie, if you see, 90 rupees plus 20%. Why 20%? Because Hindi movie it will be, other languages it will be 20% and multiply with 1500 tickets, that will be taken as the value. Understood? What is the provision that we have applied here? 15(2)(a), taxes, duties and cess by whatever name called other than GST should be included in the value as per 15(2)(a). Then look into illustration 2. Mr. A supplied goods worth rupees 10,000 plus GST 1,200 on 28/4/2021 with a credit period of 30 days. Non-payment shall lead to interest at 24% per annum charged by Mr. A to Mr. B. Payment along with interest is paid by Mr. B on 30/9/2021. Compute the GST payable. Now listen, related to interest, there are few points. First point, interest on account of delay in receipt of consideration should be included in the value, that we know. Second point also we discussed that interest is taxable on receipt basis or accrual basis, receipt basis. Third, generally interest is assumed to be inclusive of GST. Why it is assumed to be inclusive of GST? Because on the top of interest we will not collect any GST. So, interest generally is assumed to be inclusive of GST. Fourth point, to recover this interest we will be giving a document called as debit note. Who will be giving debit note to whom? Supplier will be giving debit note to the recipient to recover this interest. Is it clear? So, what are the 4 points you need to remember for interest? Number 1, interest on account of delay in receipt of consideration include in the value, and it should be taken on inclusive basis or exclusive basis. Interest is taxable on what basis? Inclusive basis, and that is in the absence of information in the question. And it is taxable on receipt basis or accrual basis? Receipt basis. And how to recover this interest? What is the document given by the supplier to recipient? Debit note. And what is the rate of GST applicable to the interest? The rate applicable to the original supply. This interest is because of an invoice, na? In invoice whatever is the rate, principal supply whatever is the rate, that rate will be applicable. It's not 18% that will be applied on interest. Is it clear? So, these are the 5 points that you need to remember, and somewhere below you have some space, na? There you write down these 5 points. So, first, interest on account of delay in receipt of consideration. Interest, I will dictate, you write down. Interest on account of delay in receipt of consideration. Interest on account of delay in receipt of consideration should be included in the value, as per section. Interest on account of delay in receipt of consideration should be included in the value as per section 15 subsection 2 clause D. Second point, such interest is taxable on receipt basis. Such interest is taxable on receipt basis. Third point, interest assumed to be inclusive of GST. Interest assumed to be inclusive of GST in the absence of information in question. Interest assumed to be inclusive of GST in the absence of information in question. Then, to recover such interest, supplier shall issue a debit note to recipient. To recover such interest, supplier shall issue a debit note to recipient. Then GST rate on interest, is based on the original supply in invoice. GST rate on interest is based on original supply. GST rate on interest is based on original supply in invoice. So, in invoice, whatever is the rate of GST, that will be taken. Suppose if invoice has 12%, interest also taxable at 12%. If invoice is having 18% GST rate, invoice 18%, then the interest collected is also taxable at what rate? 18%. Suppose if the invoice, the GST is exempted, the interest is also exempted. In the invoice, if the invoice is taxable at 5%, then the interest collected on account of delay in payment of invoice also taxable at 5%. Now, look into this question now. So, read the question once again. Mr. A is supplying goods. What is the value of that goods? 10,000 plus GST 1,200. What is the date on which it is supplied? 28/4/2021 with a credit period of how many days? 30 days, which means the recipient should make payment by 28 May 2021. Suppose if the recipient is not making a payment, non-payment shall lead to interest at what rate? 24% per annum charged by Mr. A to B, and B has made payment on 30/9/2021. Whether B has made the payment on time? No, there is a delay. How many days delay B has made the payment? Sir, by 30th, 30 days he need to pay. 30 days means what? 28 May. Now he made a payment on 30th September. So 28th May means you count number of days in May. 31 minus 28. So that will be 3 days in May. June 30 days. July 31 days. August 31 days. September 30 days. See how many number of days delay? 125 days there is a delay in making payment. So for 125 days, supplier will charge interest to the recipient on what amount? 10,000 plus 1,200, 11,200. So please check the answer. 11,200 into what is the rate of interest that supplier is charging to recipient? 24% into what is the number of days for which interest is collected? 125 days divided by 365. So total how much interest is collected here? 921 rupees is collected as interest. Now this 921 rupees is assumed to be inclusive of GST at what rate? This supply is taxable at what rate? This supply is taxable at what rate here? For 10,000, 1,200 is GST means 12% is the rate of GST. So this 921 also taxable at what rate? 12%, and this 921 is assumed to be inclusive of 12%. So how to calculate the GST? 921 into 12 by 112. How much? 99 rupees is the GST, 822 rupees is the value. and to recover this interest, supplier will be giving a debit note. So on which date they will give debit note? 30th September. Why 30th September? Sir, interest is taxable on receipt basis. So that's why the debit note will be given on 30/9/2021. Understood here? Suppose, sir, in question they have not given when the interest is collected, then in that case you add it regularly. If you know exactly which date the interest is collected, then you split that invoice and debit note like this. Suppose we know that interest is collected, but we don't know when the interest is collected, in the regular value itself you add that interest. Okay. Now look into illustration 3. ABC Limited is a supplier who is supplying some goods to Mr. X recipient, and the invoice value of the goods is 1 lakh plus 12,000. Now recipient Mr. X is making a payment of 1,12,000 to ABC Limited. Simple. So 1 lakh will be taken as the transaction value, no doubt. But see the twist. ABC Limited is receiving some design services from XYZ Limited for 40,000 plus GST 4,800. Actually, who should pay this 44,800 to XYZ? ABC should pay. But ABC is asking Mr. X to pay 44,800 to XYZ. Understood here? Now, in this case, 15(2)(b) will come into the picture. Why 15(2)(b)? Any amount that the supplier is liable to pay. Actually, this 44,800 who should pay? ABC. But which is paid by the recipient. Recipient is incurring expenditure on behalf of the supplier. So that 44,800 should be included in the value, and the value will be 1,44,800, and GST will be computed at the rate of 12%. But there is a cascading effect of taxes here. Why cascading effect of tax here? That 4,800 is GST, it is included, again on that GST is computed. So this is like a penalty that government is imposing for making the recipient to incur your liability. Is it clear? So when recipient incurs your expenditure, the entire amount will be included in the value, because of which there will be a tax on tax. Suppose if you pay this 40,000, if you pay this 44,800, that 4,800 you will take as credit. So how much will be included in your value? Only 40,000. So 1,40,000 only you will be recovering from the customer. So the GST burden will come down. Is it clear or not? But when you ask your recipient to make the payment, so what is the penalty here? So the entire amount 44,800 will be included in the value. In that 4,800 is GST na? On that again we are computing the GST. Is it clear? So remember, entire amount which the supplier is liable to pay but paid by the recipient should be included in the value. Don't deduct any GST. Full amount you need to add. Then next, taxability of interest income, already we have seen this. Subsidy also already we discussed. Now this point, one CBIC circular is there which is related to subsidy. Generally, when you see some shops and all, lot of shops today, small shops, tea shops, everywhere, GPay or Paytm, PhonePe and all, they are accepting. They don't have any problem. But card they will not accept. If you say card, they will tell, so no, card don't pay, either cash or GPay. Why you know? Because in case of card payment, there is a processing fee. So full amount they will not be getting. For example, you are buying a book. Okay. So what is the price of that book? 600 rupees is the price of this book. Now you are making payment through card. So we have a swiping machine also. You make the payment through card 600. You know how much I will be getting? I will not get 600. I will get 2% less. So in 600 minus 2% I will get. The 2% the acquiring bank will take as processing fee. You understood? Suppose if you scan and pay, I'll get entire 600. Really, I'll get entire 600 if you scan and pay. Then sir, scan and pay, why there is no processing fees? There is processing fees, but that processing fees government will bear. You understood? Government will give incentive to the acquiring bank. My acquiring bank is Paytm. Okay, of course I have to change that in future. So because I don't know when this company will be closed and all. Already FASTag they have removed. You know that Paytm FASTag and all is not working. So this swiping devices and QR scanner etc. and all, they have given permission, but I don't know when it will be removed. So fine, Paytm is a acquiring bank. Whenever you make the payment by scanning the QR code, so I will get full money because Paytm gets an incentive from government to encourage people to use UPI transactions. This incentive will be given. So who is giving incentive to whom? Government of India, Ministry of Electronics and Information Technology. They created this UPI platform. See, this UPI platform is so amazing platform which is not there anywhere in the globe. Only in India it is there. We have to really feel proud about it, because in abroad and all they are still using Visa and Master. So this Visa and Master, any debit card, credit card, they use only card. They don't have this UPI, pay through mobile. This option is not there. What they have is card they can add into their mobile and use it as a NFC, and they will make payment, but still it is card payment only. But this UPI payment is not there anywhere in developed countries also. So that is something which our Indian government has created. We should be so proud about it. So this UPI is actually developed by Ministry of Information Technology and Electronics, mainly to bring the digital money into India. And this UPI platform, please listen, this UPI platform success depends upon its usage. And when people will use, if the other person is not getting full money, he will not encourage that. So if the transaction amount is up to 2000, if the transaction amount is up to 2000, Ministry of Electronics and Information Technology will pay the incentive to the acquiring bank. Due to that reason, full amount the vendor will be getting. This incentive, which is paid by Ministry of Information Technology and Electronics to the acquiring bank, is treated as subsidy from central government. Therefore, it will not be added to their value and there is no GST on that amount. Is it clear or not? Say this, there is a customer and this customer will receive the services from the acquiring bank by way of services supplied by acquiring bank to facilitate RuPay debit card or UPI transaction, and the customer will not pay any consideration. So means there is no processing fees. There is no processing fees. Why there is no processing fees? Because this acquiring bank receive an incentive from Ministry of Information Technology, and this incentive will be treated like subsidy collected from central government or state government. Usually subsidy received from central government or state government, will it be included in the value or not included in the value? Not included in the value, and consequently it will not be taxable. Then look into the next one, exclusions from the value of supply. So far we have been discussing about the inclusions in value of supply, exclusions from the value of supply. Discount is excluded, but this discount is divided into three. Discount given before or at the time of supply. What is the discount given before at the time of supply? Trade discount or regional discount or quantity discount. These are some examples of discount given before or at the time of supply. Trade discount means what? You will go and you will bargain for half an hour or 1 hour to reduce the price. That is known as trade discount. Quantity discount, it is like, see, I am purchasing 10, I am purchasing 20, you give me discount like that. So we will go and speak. That is quantity discount. Regional discount, I am from another state, so I will go and promote your product in another state, you give me a discount like that, we will ask. That is called as regional discount. But all these discounts are given before or at the time of supply, it is allowed as a deduction. Whereas if the discount is given after supply, but terms are agreed before or at the time of supply, what is a cash discount? Today I will not give you discount, but I will agree. When if you make the payment within the time, say 5 days or 10 days, I will give you a cash discount of 1% or cash discount of 2%. Somewhere in financial management, you would have come across 1 by 10 net 30. Have you come across this 1 by 10 net 30? What is 1 by 10 net 30 means? You got a credit period of 30 days. If you make payment within 10 days, you will get a discount of 1%. That is the meaning of 1 by 10 net 30. So, today I agreed the terms, but if you make the payment within 10 days, I will give you a discount of 1%. This is known as cash discount, but the terms are agreed before at the time of supply. Is it allowed as a deduction? Yes, it will be allowed as a deduction. But to allow it as deduction, there is one document which is to be given by supplier to recipient. What is the name of the document? Credit note. So, why credit note needs to be given? Because generally in GST, supplier only will be giving debit note or credit note to the recipient. Okay. So, let us try to understand this debit note and credit note implications along with entries, okay, so that you will get an idea. Kindly make note of this in your notebook. Give a side heading, credit notes and debit notes in GST. Credit notes and debit notes in GST. Generally in GST, who will be giving debit note or credit note to whom? Supplier to recipient. Recipient will not give debit note or credit note to supplier. So, it will be given by supplier to recipient, by supplier to recipient. Now, let us see the transaction. So, invoice by supplier for rupees 1 lakh excluding GST at 12%. For this transaction, in the books of supplier and in the books of recipient, what is the journal entry? For this transaction, in the books of supplier in the books of recipient, what is the entry here? In the books of supplier, journal entry சொல்ல முடியலையப்பா. Bank, debtor, cash, creditor, tell everything you tell, no, everything. So, recipient account debit. So, that particular recipient account debit to sales, to GST payable, because there is a liability na, GST payable. So, to GST payable, recipient account debit to sales account and to GST payable account. What is the recipient account debit? 1 lakh 12,000, very good, because he need to pay entire 1 lakh 12,000, but we will recognize how much as sales? 1 lakh, and what is the GST payable? 12,000. Now, for the same transaction, what is the journal entry in the books of recipient? Purchasers account debit, how much? 1 lakh, very good. Then ITC account debit, because we can recognize input tax credit, recipient can take ITC. How much ITC can take? 12,000 to supplier account. To supplier account 1,12,000. So, in the supplier books, recipient shows what balance? Debit balance. Okay. Now, what happens? Supplier is not getting the money on time. So, supplier charges a interest to the recipient. Now, what is the entry? If supplier charges an interest of rupees 5,000, supplier charges an interest of rupees 5,000 excluding GST by issuing a debit note. Then what is the journal entry for this? In the books of supplier and in the books of recipient. In the books of supplier, in the books of recipient. First we will see in the books of supplier. Recipient account debit. Already recipient showing what balance? Now again we are making a debit to him, that's why the name of the document is debit note. Recipient shows what balance? Debit balance. Further we make a debit to him. So entry is recipient account debit. Recipient account debit. How much? 5,600. How sir 5,600? That 5,000 is excluding GST. Means GST is also payable on interest na. Why GST payable on interest? Interest on account of delay in receipt of consideration is included in the value and chargeable to GST. So that's why GST payable. So recipient account debit 5,600 to interest payable, receivable, interest receivable account, because it's a income 5,000, nominal account, credit, okay, to GST payable account. What is it? GST payable account 600, which means whenever we collect the interest on that we need to pay GST. That's why supplier will be giving a debit note to the recipient, as recipient is further debited and GST liability will arise. For the same transaction, what is the journal entry in the books of the recipient? Interest payable account debit. How much? 5,000, and this 600 can be taken as ITC by the recipient. So GST credit, that is ITC account debit. ITC account debit 600 to supplier account. So on the basis of debit note, what is the advantage to the recipient? Supplier has to pay GST on interest and recipient can take ITC with respect to that. Now, suppose if supplier gives a discount to the recipient, post supply discount, okay, for rupees 2,000 and along with GST, for which a credit note is issued. Let's see what is the journal entry in that case. If supplier gives a cash discount of 2,000 excluding GST by issuing what note? By issuing credit note. If supplier gives a cash discount of rupees 2000 excluding GST by issuing a credit note. Let's see the entry in the books of supplier. In the books of supplier and in the books of recipient. Now, in the books of supplier, what is the entry? Discount. Discount is giving, so it's a loss to him. So, discount account debit. How much is the discount that is given? 2000. But GST is also there, na? Yes. So, to that extent his liability will come down. To that extent his liability will come down. What is 12% on 2000? 240. To the extent of 240, his liability comes down. Why? Simple logic. Sir, 1 lakh is the value, 12,000 GST. Now the value is 98,000. How 98,000? 2,000 we are giving. Means proportionately GST will be only on 98,000. But already we paid GST on 1,12,000. So to the extent of 2,000, whatever GST we already paid, to that extent liability will be reduced. Liability shows what balance? Credit balance. As we are reducing it, we are making a debit. GST payable account debit. So what is the advantage of giving credit note to the supplier? The supplier's liability, future liability will get reduced. To recipient account. Recipient originally showed what balance? Debit balance. Now we are making a credit to him. That's why the name of the document is known as credit note. Okay. Recipient account 2,240. Fine. Then what is the journal entry in the books of recipient? Supplier account debit 2,240 to discount receipt. So discount account to discount account 2000. Because of this, see, originally 1 lakh was the value. So 12,000 was the ITC. Now the value is only 98. 98 means that proportionate ITC only can be taken. But they have taken excess ITC. So that excess ITC needs to be reduced. ITC shows a what balance? Debit balance. To reduce that ITC, they need to make a credit. So to ITC account. So 240. Now you tell me, what is the consequences of credit note to supplier? GST liability will be reduced. What is the consequences of credit note to recipient? His ITC will be reduced. So proportionate ITC gets reversed. So this reduction in ITC is known as reversal of ITC. Okay. Now, so this is about the discount given after supply, but terms are agreed before supply. It is allowed as deduction. But how is it allowed as deduction? A credit note will be given by the supplier. And what recipient should do? Recipient should reverse the proportionate ITC. What if discount is given after supply, but the terms are not agreed before or at the time of supply? Example, end of season sale discount. Is it allowed as a deduction? No. For example, I am giving you goods worth rupees 1 lakh. At the time of sale, I did not agree any discount. Thereafter, that goods are not getting sold. So I gave you 50% discount. Now in this case, how much you will pay me? 1 lakh or 50,000? 50,000. You will not pay me 1 lakh because I gave you a discount of 50%. So you will pay me only 50,000. Now GST is payable on 1 lakh or 50,000? 1 lakh. Because this post supply discount is not allowed as deduction. Got it? So why it is not allowed as deduction? Because the terms are not agreed before the time of supply. So tell me, what are the 3 points in discount? Discount given before or at the time of supply. Is it allowed as a deduction? Yes, it is allowed as a deduction, no doubt. Discount given after supply, but the terms are agreed before or at the time of supply. Is it allowed as a deduction? Yes, it is allowed as a deduction. and there is no problem. But for allowing it as a reduction, supplier should give a credit note and recipient should reverse the ITC. What if the discount is given after supply and terms are not agreed before at the time of supply? It is not allowed as deduction. GST will be payable on full value. And there is one circular related to molds and dies. This we will see later, but we will do some questions related to this computation whatever we have seen, so that immediately you will be able to understand. So there are some MCQs, only 3 MCQs are there in value of supply. Please see practice manual portion. Discount given after the supply has been effected. So it's a pre-supply discount or a post-supply discount? Post-supply discount is deducted from the value of taxable supply if such discount is given as per the agreement entered into at or before the supply. Correct. The discount is as per agreement. So terms should be agreed before the time of supply, and such discount is linked to the relevant invoices. Correct. Because for every invoice we need to give a credit note. So it should be linked to the relevant invoices, and proportionate ITC is reversed by the recipient. So all these 3 conditions should be satisfied. Terms are agreed before at the time of supply, supplier issues a credit note, and recipient reverses the ITC. So all 3 conditions should be satisfied, then only post supply discount is allowed as deduction. Then second question, you see, Pradeep Traders registered in Haryana sold goods interstate for 2,05,000 to Balram Private Limited registered in Uttar Pradesh. GST is leviable at 5% on the said goods. As per the terms of sales contract, Pradeep Traders has to deliver the goods at the factory of Balram Private Limited. For this purpose, Pradeep Traders has charged freight of 2,400 from Balram Private Limited. GST is leviable at 12% on freight. What would be the net GST liability to be paid in cash? In this case, assuming that the amounts given herein are exclusive of GST. Now, first, what is the number that you can see in the question? 2,05,000. What is this 2,05,000? Transaction value. So, transaction value will be 2,05,000. And what is the next number? 5%. But this 5% will come at the end. As per the terms of the contract, they need to deliver, for which they charged a freight of 2,400. Is this freight 2,400 expenditure incurred by the supplier or expenditure incurred by the recipient? Supplier, and it is charged to the recipient. Is it incidental or others? Others. Is it before or at the time of delivery or after delivery? Before or at the time of delivery, because as per the terms of contract, they have to deliver the goods at the factory of Balram. So therefore, it is before at the time of delivery. Will it be included in the value? Yes. As per 15(2)(c), that freight will be included in the value. Then, so from Balram Private Limited, GST is leviable at 12% on freight. What would be the net GST liability to be paid in cash? Is there any other amount? No. Now, what is the total amount? 2,05,000 plus 2,400. How much? 2,07,400. And what is the gross GST? What is the gross GST? Please calculate and tell me. 2,07,400 into what is the rate of GST? 5%. 2,07,400 into 5%. 10,370. But this 10,370 is what liability? Gross liability. Correct. But they are asking what would be the net GST liability to be paid in cash in this case, assuming that the amounts given herein are exclusive of GST. Then this 12% can't we take as ITC? You understood my question? Sir, 2,05,000 they are recovering it from the customer, sir. So that is transaction value. Plus freight 2400 they paid, and that 2400 also they are recovering it from the customer. So 2,07,400 is value of supply. And what will be the gross GST? 10,370 is the gross GST. Now my question is, what would be the net GST liability is the question. Now can't this 12% be taken as credit, because they have incurred a freight of 2,400, GST leviable at 12% on the freight. So then why can't the 12% be taken as credit? Huh? That's okay, we are charging at 5% to the customer. But is this 12% given as GST paid on freight? No, no. That is not the answer, not the discussion here. This 12% is not GST paid on freight. If it is given as GST paid on freight 12%, that can be taken as ITC. Then why they gave this 12%? They are asking us to apply composite supply and mixed supply here. That is, sir, the sale of goods will be 5%, and we are providing the transportation services, correct? So in that case it will be 12%. So it so happens that we may take for 2,05,000 5%, on 2,400 12%. Should we take it as individual supplies like that? No, you don't have to do that. First, expenditure. Here we are not making two supplies. Here we are making only one supply. Please concentrate. I am incurring the transportation cost and I am recovering the transportation cost from the customer, which means I am not providing transportation services. Sir, when I incur a expenditure and recover the expenditure, the character of this expenditure is nothing but the character of my supply. So what is the supply I am making? Sale of goods. So now I incur the transportation cost. When I recover the transportation cost, I am not supplying transportation service. So therefore, we will just add it to the value. And rate related confusion will not come. When rate related confusion will come, I am supplying the goods, I am also providing the transportation service. Listen, please concentrate. So I am providing sale of goods, I am also providing transportation service. Then only we will apply composite supply and mixed supply, because we have seen one flow chart. In that the first point I gave you, 2 or more supplies in a single transaction, then only section 8 should be applied. Now read this question again and tell me whether there are 2 or more supplies or there is only one supply. There is only one supply. The supplier Pradeep Traders is just selling the goods. But sir, they are providing transportation service. No, they are not providing transportation service. They incurred the transportation cost which they are recovering, means they are not providing transportation service. So therefore, how many supplies are there? Only one supply. Then what we need to do with respect to this transportation cost? Just include it in the value. Then this transportation cost also now taxable at what rate? 5%. You understood? So we may take on 2,05,000 5% and 2,400 12%. That's why they just gave the 12%, but that is irrelevant here. Just 10,370 will be taken as the answer. Then next, third question you see. During the month of May, Z Limited sold goods to Y Limited for 2,55,000 and charged GST at the rate of 18%. However, owing to some defect in the goods, Y Limited returned the goods by issuing debit note of 40,000 in the same month. Z Limited records the return of goods by issuing a credit note of 40,000 plus GST in the same month. In this situation, GST liability of Z Limited for the month of May will be, see here, they sold goods for how much? 2,55,000. And owing to some defect, Y Limited returned the goods by issuing a debit note of 40 in the same month. That is irrelevant. But is Z Limited giving a credit note? Yes. Z Limited records the return of goods by issuing a credit note 40,000 plus GST in the same month. Now, by issuing credit note, what will happen to the liability of the supplier? It will be reduced. So what is the regular liability of the supplier? 2,55,000 into 18%. What is 2,55,000 into 18%? 45,000. But 45,900 is not the liability. So there is a credit note which is given by the supplier to the recipient. So what is that credit note? 40,000 plus GST. So therefore 40,000 into 18%. How much? 7,200. Just now I told you, because of issuing credit note, what will happen to the liability of the supplier? Liability of the supplier gets reduced. So therefore, what was the original liability? 45,900 minus 7,200. So what will be the revised liability? 38,000. So that is the answer. Understood here? Next, look into this descriptive question. Question number 1. Are post-supply discounts eligible for deduction from the value of supplies in all situations? No. Post-supply discount is allowed as deduction when? Only if supplier is agreeing to give the discount before or at the time of supply and issues a credit note and recipient reverses the ITC. Then question number 2. Consideration under GST law includes both monetary and non-monetary consideration. Discuss the correctness or otherwise of this statement. The statement is correct. Consideration definition already we have seen as per section 2 clause 31. Consideration can be monetary or non-monetary, and if there is a non-monetary consideration, we need to ascertain the money value of that, and on that we need to pay GST. Then next question 3. So don't look into the clock, time is there, okay. So please concentrate. Everyone is looking at the clock only there. Book you are not reading here, you are looking the clock, still how much time is there, still how much time is there. So if you don't want to sit, it's okay, you can leave, I will not tell anything, okay. But wait na, still time is not 6 o'clock. So who said class is up to 6 o'clock? Did I tell up to 6 o'clock? No, I did not tell. I said 6:15 or 6:30. But okay, fine, I can understand. From morning you are sitting, etc. and all. At least we will see 2-3 questions and leave, okay. See this. Question number 3. Sharp Minds Institute provides coaching for engineering entrance examination. Monthly fee charged by the institute from a student is 10,000. So the 10,000 will be taken as the transaction value. The institute is known for its commitment to provide education to underprivileged children. It trains 10 students every year for entrance examination free of cost. The institute has received 3 lakhs as coaching fees during a month. Navjeevan, an NGO working in the area of education for underprivileged children, has given a subsidy of 10,000 rupees in lump sum during the month, as it is serving the cause of underprivileged children. Now, 3 lakhs is transaction value, no doubt. Whether this 10,000 rupees is directly linked to the price or not directly linked to the price. Not directly into the price. How you know that it is not directly into the price? In lump sum, that is the key. So therefore, as it is not directly into the price, should it be considered for valuation or not considered for valuation? Not considered for valuation. So for this question, what will be taken as the answer? Transaction value itself is the value of supply. Then look into question number 4. Furniture Wala is a chain of retail showroom selling both modern and classic furniture. In order to build strong customer association, the showroom provides free delivery of the furniture at the premise of the customer if the distance between the showroom and the customer's premise is up to 20 kilometers. Where the distance is more than 20 kilometers, the showroom charges a concessional freight of 10 rupees for every additional kilometer. This is the terms of the contract. Miss Leena Kapoor purchased a double bedded dressing table and a center table for 2 lakhs from Furniture Wala, and Miss Leena gets free delivery of the furniture as her residence is located at a distance of 18 kilometers from the showroom. Even though it is free delivery, but the showroom has to incur the cost na. So the showroom has incurred an expenditure of 1000 rupees for delivering the furniture at Leena's residence. What should be taken as the value? 2 lakhs or 2 lakh 1000? 2 lakhs. But 1000 they incurred the expenditure na? Yes, but is it charged to recipient? As it is not charged to recipient, it should not be included in the value. Is it clear? Yes, it's true that supplier incurred the expenditure, but not all expenditures incurred by the supplier will be included in the value. Only it should be charged to the recipient, then only it should be included in value. Now see the continuing part. Determine the value of taxable supply made by Furniture Wala. Will your answer change if the residence of Miss Leena is 50 kilometers away from the showroom? What is the extra kilometers? 30 kilometers. For 30 kilometers, how much they will be charging to Miss Leena? 30 into 100, 300. But they incur 1000 rupees. Correct. First 20 kilometers free. For every additional kilometer, 10 rupees. Total 50. First 20 kilometers free. Remaining kilometers, 30 kilometers. 30 kilometers into 10, 300 rupees. Now what should be taken as the value? 2 lakhs, 2 lakh 300 or 2 lakh 1000? 2 lakh 300. Again, not every expenditure incurred will be included. What is charged to recipient? What is charged to recipient in this case? Only 300. So 2 lakh 300 should be taken as the value. Then question number 5. AKJ Foods Private Limited gets an order for supply of processed food from a customer. The customer wants the consignment tested for gluten and specified chemical residues. AKJ Foods Private Limited does the testing before the supply and charges a testing fee for the same from the customer. So there is a chemical residue. So the customer is asking the supplier to check whether there is a chemical residue or not. AKJ Foods Private Limited argues that such testing fee should not form part of the consideration as it is a separate activity. Is the company's argument correct in light of section 15? First of all, here who incurred the expenditure? Supplier incurred the expenditure or recipient incurred the expenditure? Supplier incurred the expenditure. And is it incidental expenses or other expenses? Other expenses. But the testing is done before or at the time of delivery or after delivery? Before or at the time of delivery. Therefore, it should be included in the value, and this will be taken. The fee should be added to the price to arrive at the value of the consignment. Clear? Then look into question number 6. A philanthropic association makes a substantial donation each year to a reputed private management institution to subsidize the education of low income group students who have gained admission there. The fee for these individuals is reduced, thereby coming to 3 lakh a year compared to 5 lakh a year for other students. So what is the subsidy? 2 lakhs. 5 lakhs regular fees, 3 lakhs is the reduced fees. So subsidy 2 lakhs. Now, is this subsidy directly linked to the price or not directly linked to the price? Directly linked to the price. And this subsidy is from whom? CGRSG or others? It is from others. Therefore, it should be included in the value. So 3 lakhs plus 2 lakhs, 5 lakhs will be taken as the value in this case. Okay. So then question number 7. Mazda Banners. So 2 more questions only, I'll leave. Okay. Mazda Banners, an advertising firm, gives its customer an interest-free credit period of 30 days for payment. Its customer ABC paid for the supply 32 days after the supply of service. What is the credit period? 30 days. But how many extra days recipient has taken? 2 days. Mazda Banners waived the interest payable for delay of 2 days. The department wants to add interest for 2 days to the value of supply. should the notional interest be added to the value? No, interest is taxable only on receipt basis. If you are not at all charging interest to the recipient, why it should be included in the value? It is not required to be included in the value. Is it clear? Then question 8, Crunch Bakery Products Limited sells biscuits and cakes through its dealers, to whom it charges the list price minus standard discount and pays GST accordingly. When the goods remain unsold with the dealers, it offered an additional discount on the stock as an incentive to push the sales. Can this additional discount be reduced from the price? There are two discounts here, standard discount and additional discount. Read the question. When the standard discount is given before or at the time of supply, so it is allowed as deduction. But the additional discount is given when? After supply, but the terms are agreed before at the time of supply? No. Consequently, it is not allowed as deduction. These are some ICAI study material questions. We have some more questions from past exam related to computation based. So with this we will stop for today, and in tomorrow's session we will complete that circular and these questions, and I will be starting with time of supply, invoice and time of supply, and because that is like little dry chapter, we will complete in the morning session. Tomorrow afternoon I am starting with input tax credit, okay. So kindly don't miss, because that input tax credit is a very important area. Thank you, we will meet tomorrow.